new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it feels like you're coming back after summer vacations.
Chutti khatam.
Chutti khatam, because it's been a long weekend with a lot of action going through. For a part there, for a point there, it seemed like what is happening between US and Iran again. But it seems like they have settled.
Yeah, some sanity. By the way, guys, I read an astounding piece of news, and the piece of news is that a firm which has legal processes done by AI. So if you are filing a case, your case is being learned and presented, etc. The arguments are presented by AI research. Of course, there is a barrister to present the case in England, and that AI-led firm won the case.
Oh, wow.
For like nearly 1/20th of the cost that it will cost to have a normal lawyer.
But do they have a real lawyer representing the client?
In a court you have to eventually, but that's a Namka barrister. The actual arguments, preparation, etc. was this firm called Garfield is essentially an AI legal firm, and it's won its first case.
Oh wow,
that's something.
That's quite something. My. Okay, so no AI, all reality over here, where we're going to start talking to you about what's been happening through the globe. So let me start with US markets. US markets closed in the red in Friday's trade as investors continue to sell tech stocks. Investors turned wary after a New York Times report said that OpenAI will postpone its IPO, and of course the trigger for it is the astonishing tumble in the stock price of SpaceX. I think down nearly 80% since its highs since the IPO. So the Nasdaq about 0.25% down. Futures, if you just pull up futures for US markets, that's actually in the green. 0.29% up for the S&P 500, but nothing major happening there. Bond yields dipped in Friday's trade as oil prices continue to retreat. The 10-year was at 4.37%. Now, oil prices moved slightly up as skirmishes were reported in the Strait of Hormuz, and there seems to be a disagreement over the use of frozen Iranian funds. Watch out for this space, folks, because the US says that the Iranian funds that they will unfreeze should be used to purchase US agricultural products for the people of Iran, and Iran is not quite agreeable to that. They're saying we'll decide what we'll do with our funds. Nearly 72.5 on the Brent, so nothing panicky there. Let's pull up Asian markets for you this morning, and a bit of a mixed bag. The Nikkei down about 1%. If you look at the Indian implied, the Nifty implied, you're seeing a pretty flat open, which is not that bad. 8 points down right now is what is showing us on the screen. But let me go across to Santosh Rao, Head of Research Partner, Manhattan Venture Partners, joining in now on the show. Santosh, very good morning to you from where we are. Thank you so much for joining us this morning. What do you think are going to be the major talking points as far as US markets concerned? Is it this uncertainty about the AI and tech trade after seeing what's happened to the SpaceX stock price?
Yeah, good morning. Not really. It's not that straightforward. What we are seeing is really a healthy rotation, I would say. If you look at the equal weighted S&P, that was up actually last week when S&P was down. So that means like big guys, the Max 7 is down, and all the tech stocks may be down, but there are others that are picking up. So the 293 stocks, the 493 stocks, they're doing very well, or they're picking up. So you saw financials pick up, healthcare pick up. So the market is broadening. So I think that's healthy to some extent, and this was needed. I don't think the tech trade is done. I think it's going to be more moderated. It's going to be more It's going to be more calculated. It's not going to be just like the money chasing investors just running after them. It's going to be very calculated. It needs to digest a lot of gains. So a lot of investors are taking some money off the table there on that side of the big winners. There's still structural issues. There's memory shortages. So I think the microns and all that will continue to do well. But in the end, the market is broadening. So that's the big news. That's the good news in the market. So I don't think it's anything bad yet.
Fair point, Santosh. I'm just wondering whether that rotation will also be done from the perspective of relatively unloved geographies in the global equity markets. And specifically, I'm talking about India. What are the cues that need to be seen before you see that take place?
You mean money flowing into India? I mean, this is buying. Yeah, I think at this point, US is still a good place. Yields are going up. The market is doing well. The dollar is going up. So energy is down. So I think all that helps the US market. And if anything, rates are going to go up. There were the 62% odds of the rate going up. One raise this year as opposed to cut. So I think that'll keep the market money flowing back into US. So if you saw the funds flowing in, I think US saw the most funds, I don't know the exact last week or last month, but the money coming is pretty high. So US market is still very healthy. So it's not just, but I think after a while, if the dust settles on the Middle East situation and energy prices and everything, money will start flowing back into India and other emerging markets. But at this point, US seems to be the most stable place, despite all the noise and in up and down and the rhetoric going on. But I think at the end of the day, I think US is still the place where investors feel comfortable to park their money.
Good evening to you. The bank credit growth in India is back to above being 18%. Most global brokerages are now revising their GDP forecast slightly higher as well in light of crude prices coming off. Is it a matter of time before money returns to where the growth is?
Absolutely. I think ultimately that's where it is. I think people they haven't taken their eyes off India. It's just a risk-reward situation. There must be better opportunities outside at this point, but they will definitely come back because the fundamentals in India on a secular basis are very strong. The young population and the growing population, the growing middle class, all those things definitely feed into a very rising economy, and money will definitely flow back. So the fundamentals are still solid. It's just a question of time before things flow back into India more and more.
All right, we'll watch for that. Thanks so much, Santosh, for taking the time. All right, let's talk about what happened last week. Nifty 50 eking out gains in that curtailed trading week. Felt like a summer vacation. Friday, as Tamanna pointed out. Friday was a holiday though. Interglobe Aviation, Cipla were the top gainers during that week, gaining as much as 8.3 and 6.6% respectively. The benchmark managing to hold on to that 24,000 mark at the end of that trading week. We'll get into Friday in just a bit. The broader markets underperformed, and that's actually contrary to the recent trend that you've seen with regard to the outperformance of the benchmarks. You had the mid-cap index that lost about 1%. You had the small-cap index that ended just about flat with a negative bias. The pharma sector, the index, was the week's top performing sector, gaining over 2%, and the metal index on the other end was the big underperformer, and that continues the recent trajectory that this particular index has seen, and that's on account of the global commodity prices coming off. The Nifty IT losing ground for a fourth straight week. That's something that hasn't changed. On Friday, you had the benchmark that registered marginal gains of just about 0.1%. M&M, ICICI Bank, Maruti Suzuki and Interglobe Aviation were the top contributors to the upside. 23 stocks of the benchmark Nifty 50 gaining ground. On the other end, you had Bharti Airtel, Infosys and Hindalco that put the top drags. The mid-cap index dropping 0.5%, small-cap index also to that extent, and market breadth favor the declines at the end of the session, with more than 2 losers for every gainer. The auto index gained quite handsomely in trade, 2.2%, and it was the broader auto universe as well that did particularly well. Motherson Wiring, for example, was one of them. FMCG was the only other major sectoral gainer, and most other sectors lost ground, with the metal index losing as much as 1.4%.
Yeah, I mean, the pain point for the whole of last week, right? Nearly 4% correction for the metals, and therefore it has been a weak spot. And again, you could argue this morning that maybe, just maybe, crude prices marginally higher, disrupt the mood of the market until things settle. But you could argue that things in per se look fairly settled, and therefore maybe a flattish start. I don't even know if there could be a downward bias to the markets really. We might just do fine on the broader end of the spectrum as well. A lot of people are waiting with bated breath for the announcement around the cabinet reshuffle. Almost every second person is asking about when is it that we'll see this reshuffle and what kind of changes will happen. Maybe there will not be any large scale changes and maybe it will not disrupt the markets, but let's wait and watch. Maybe in the next 3-4 days we'll have some announcements around that, but doubt it will elicit a dramatic response from the markets. And therefore the sector that Alex pointed out, metals of all kinds are correcting, right? Precious metals are correcting, and even Indian steel prices are lower. In fact, I was looking at the reasons why, one of the reasons why this could be the case, and we know that aluminum is down, etc. is down, but steel, both long steel composite index and flat steel composite index in India are significantly off from the mid-April high. So if that has been the case, and you could argue maybe there's less construction or ahead of monsoon or because of this Iran-US conflict and all of those things, I think prices have definitely come off, and therefore it warrants that these stocks come off. The extent of the downfall, I think, well, base it on when do these steel prices recover or when do metal prices recover. Until then, maybe bets on the metal index from a trading perspective could be well off the table.
Yeah, just on the cabinet reshuffle bit, I was actually chuckling to myself when I was seeing all the WhatsApp messages and posts doing the rounds of this one will become this. The one thing that I have observed in all the years of this particular government, and now in its third term, is that pre-guessing what they're going to do is a dangerous job. Kite flyers have usually found themselves on the wrong side, so I wouldn't even hazard a guess on whether the core will be touched or not. I mean, I could say that precedent shows that they have chosen not to touch the core members of the cabinet throughout, and stability and continuation has been a theme throughout. But again, hazarding a guess on this is a dangerous job, so we'll definitely not do it. I think we'll wait and see what the actual announcements are and then assess them as they come, at least here. So in terms of factors, the technical structure remains constructive but range bound. 24,200 to 24,260 is the immediate supply zone where sellers have repeatedly emerged. Next target resistance 24,400 to 24,600 if 24,260 is taken out cleanly. Strong support continues to exist around 24,000 and 23,800, keeping the broader uptrend intact. A crucial support zone is 23,800 to 23,750. Major floor structural uptrend remains intact above this. For the Bank Nifty, resistance zones at 58,500, 58,600. Those are the immediate ones. 59,000 to 59,195 is the major target. Support zones at 58,000, that's the immediate psychological support. And 57,330 to 57,500 is the crucial structural support. This note by Mahesh Nandurkar that I wanted to pull up, the Jefferies note on India equity strategy. Brent is back to its pre-war levels, while MSCI India is down 2%. Recommends buying cement, Bajaj Finserv, OMCs and TVS. Ultratech preferred as cost headwinds ease despite near-term earning cuts. Bajaj Finserv is attractive on 27% holdco discount and minus 23% earnings growth visibility. BPCL and IOCL supported by lower crude and strong refining margins. TVS backed by strong auto demand and easing commodity costs. BSE has been flagged as expensive after 45 PPT outperformance, and pharma exporters to underperform with INR strength. Positive only on Zydus, cautious on Cipla, Dr. Reddy's and Lupin. So quite a few ideas there coming in from Jefferies. But I think the most exciting and eye-popping thing is all of the announcements around private banks and their leadership. HDFC Bank and Kotak Bank, folks. For HDFC Bank, I don't know what you think. I think a huge overhang is now out of the way.
Yeah, it certainly is, because I think there was one law firm, based on what Piyush has been reporting consistently over the course of this period, that was pending to submit its reports, and all of that coming through, and a relative clean sheet, or actually a clean sheet coming through from all of that investigation. And so I think they can move forward. The focus now shifts to what happens to the chief executive officer's position.
Yeah, I mean, and again, it means how much of a difference does it make to business? Pure business doesn't know, but does it make a difference to the multiples? One could argue definitely yes. It could be interesting to see. Maybe some bit of that evidence was seen late last week, and maybe more of that comes to the fore.
I think so. I think it's done and dusted. HDFC Bank actually first on my watch list. So here's what's happened. The legal review found no material concerns regarding issues raised in Atanu Chakrabarti, that's the outgoing chairman's resignation letter, and no unresolved dissent impacting governance. A whole load of notes on it today, but I'm just going to take you through what JP Morgan is saying. They've maintained overweight with a target price of 990 rupees. Why? Because they're saying the external counsel report concludes governance concerns likely to moderate. They believe that the conclusion should help narrow some of the governance risk premium. HDFC stock has derated by 8% on PBV, with the discount to ICICI Bank expanding to 23% since the resignation of the former part-time chairman. They also see HDFC being a key beneficiary of the recently announced FCNR initiatives. As far as what next, well, the CEO's extension will be on the cards. The RBI has to accept it, but at least this bit of a cloud over what really happened, why did the chairman exit and say what he did in his resignation letter, seems to be put to rest. The next one, of course, is Kotak Mahindra Bank. I would expect some reaction to the fact that the MD and CEO Ashok Vaswani has decided not to seek reappointment for personal reasons. The board has initiated the process to appoint a new managing director and CEO. Here's what Citi is saying on this. They've maintained a buy with a target price of 485 rupees. They're saying the CEO exit by December 26 triggers a transition and enters the wait for clarity phase. This development is a sentiment-driven uncertainty rather than a fundamental earnings or operational risk. The bank's internal management bench reflects a degree of institutional preparedness. Internal candidates are likely to be market favored, but the bank is expected to evaluate both internal and external candidates before submitting a shortlist to the regulator. They're assigning a high to moderate probability to an internal appointment, and the valuation trajectory is now outcome contingent. Fundamentals not structurally compromised. Having said that, you might see a bit of a sentimental impact on Kotak Mahindra Bank today in trade. The third one I'm looking at is Astral. Big demerger announcement that's come over the extended weekend. Citi is maintaining a buy on the stock with a target price of 1900 rupees, which is nearly 28% upside. What is happening? They're demerging plumbing and chemical businesses into two listed entities. The chemicals business will move into Astral Chemi. Each business will use its own cash flows, improving capital allocation. Strong plumbing versus relatively weaker chemicals gets separated. They expect continued double-digit volume growth in the plumbing segment. It trades at 29 times forward EV to EBITDA, premium to Supreme, which is at 20 times, and smaller pipe players between 10 to 18 times. The plumbing business is likely to sustain its premium. Adhesives and paint valuations durability remains uncertain post-demerger. Near-term volume growth to slow to 10% versus 24% earlier due to reversal of PVC-led restocking. The EBITDA per kg is expected to soften as earlier low-cost inventory benefit fades as well. But for today, it says it's going to be a 1:1 ratio of what investors will get. One suspects that you'll have a positive move on Astral.
Yeah, I saw one comment saying 1 + 1 is greater than 2. So brokerages seem to be quite positive on this Astral development.
Yeah, I mean, you would suspect that usually companies, if they are taking all the pain of undertaking the demerger, then they are seeing some value.
Yeah, absolutely. So SmartWorks co-working, top of my list. They are set to acquire Singapore-based co-working operator Work Studio Spaces. Now, this has operational footprint of 26,000 square feet, and that transaction is set to be completed by SmartWorks arm, SmartWorks Space. That transaction is set to be completed in July using funds available with the arm, so no fresh fundraise, etc. required for that acquisition. On that completion, SmartWorks Singapore portfolio is set to expand to 4 centers, and the total footprint in Singapore will expand to 76,000 square feet, and the total seating area, or capacity rather, will be set to increase to 1,500 in Singapore. All of those mean that Singapore gains a greater prominence from the perspective of SmartWorks. It already is an important geography for them. Transrail Lighting, a short update here. The company has gotten international orders worth 459 crore rupees in the transmission and distribution business. It's as simple as that. So keep an eye on it. And finally, KC International. This is a sentimental update more than anything else, because the company has been permitted to participate as a bidder in power grid tenders, and it's also allowed to participate as a subcontractor in power grid contracts. The reason why it is only sentimentally positive is because it puts to rest a bit of a conflict that had arisen when Power Grid announced that KEC would be debarred. Subsequent to that, KEC sought a relief from the High Court. It received that, and pending that completion of that review, they were allowed to participate as bidders. So more than anything else, it's the overhang of that going away. That is positive.
Most certainly, and that's great. By the way, this weekend has had a lot of overhangs going away.
Yeah.
I think for Wari also there was some clarification that they gave, which could be interesting as well. But the 3 stocks on my list, the first one, you can argue not necessarily an overhang going away, but for GMR Airports is important because its subsidiary, GMR Nagpur International Airport, has officially commenced commercial operations. And usually this is good news. Nagpur may not be the biggest airport on planet Earth, but still it's an important one. In fact, Jefferies has come out with a note there. They maintain buy on GMR Airports with a target price of 125, which is about a 16% upside. They say that GMR will take over Nagpur operations after a prolonged litigation process, and which is why it is important, which is also in the you could argue it's a bit of an overhang going away as well. The airport is small, Jefferies says, with a 3 million passenger capacity, but the city is strategically important given its central location. GMR will have 100% ownership, attractive revenue share, and a 247-acre land monetization. So keep this in mind. In fact, if I'm not wrong, there's some releases by the Adani Group as well around the quantum of land that they can develop across their airport pieces as well. So maybe Adani Enterprises also comes into focus in some fashion. But GMR Airports is the stock that I want to highlight today because of this development having happened. Then there is Persistent Systems. It's an interesting one, and well, they've signed a long-term contract with a global tech company in the US with a total deal value of over $650 million. This is one announcement. The bigger announcement, though, is this, that they are going to buy 21% stake in a company called Nagarro. This is a separate piece of news, that they're going to buy 21% stake in a company called Nagarro at about €81 per share in cash. They have also launched a voluntary public takeover offer for all the outstanding shares at €81 per share. The offer represents about yes, look at those numbers. The offer represents around 140% premium to Nagarro's undisturbed closing price on June 25th and about 94% premium to a 3-month volume-weighted average price. They've entered into a business combination agreement with Nagarro to form the Persistent Nagarro Group. Now, you could argue that the strategic benefits of this deal, the European revenue rises for Persistent rises from 9% to 22%. So if you're looking for companies which are making that shift away from being almost entirely US dominated to different geographies, Persistent is choosing the inorganic route to do so. It expands the TAM for them significantly, of course, and there's deeper AI, digital engineering capabilities and complementary vertical strengths, because Nagarro, I think, has automotive and industrial expertise and Persistent has AI and cloud strengths, of course. But the problem also is, viewers, that it's a large all cash outflow, which is about $1.3 billion, which could raise near-term concerns around balance sheet deployment and integration risk. We'll try and, of course, talk to the management about all of this today or tomorrow. And lastly, Alex, what caught my eye was this note from Goldman Sachs. We've been talking about how eternal and Swiggy, Eternal, etc., all been on a back foot for the last so many months, right, if you will. Now Goldman has come out with a note, and it's their what do you call it? It's their Q1 preview note, wherein they are maintaining a buy, but they have hiked the target price to 350 from 340. And it's not a very large hike, but from the current market price, it provides decent returns if you believe in Goldman's argument. Now Goldman's saying that they see a very strong Q1 FY27 with growth in quick commerce as well as food delivery. The margins are expected to be stable to improving, if you will. So the worst case is stable according to Goldman. They believe that the FY29 EBITDA target of $1 billion is seen achievable, and valuations therefore could re-rate from, with a 35 to 40 times EBITDA multiples, which explains the target of about 350 rupees per share. After a while, I'm seeing an optimistic view on Eternal. Let's see if it has a bit of a reaction today.
Very interesting. So I think it's important to double click hearing that a lot, aren't we, on HDFC Bank, because this is a pretty significant headwind going away. So why don't we bring in Piyush, who's been tracking this throughout. Piyush, there is a development that you've picked up with regard to the reappointment of Shashidhar Jagdishan as the Managing Director and Chief Executive Officer. Now that this concern goes out, what is the development on this front?
That is right. We had reported earlier how the board is backing Mr. Jagdishan for another 3-year tenure, and with the clean chit that the external legal firms have given to the bank, it is pretty certain that the bank's board will likely recommend to reappoint Mr. Jagdishan as the CEO for next 3 years. Now before that, in July, we will see a lot of top deck changes in HDFC with regard to the top post, whether it be on the chairman position or on the CEO position. Within the next 2 weeks, the next chairman is likely to be finalized, and subsequently in the later half of the month, the recommendation for Mr. Jagdishan is also likely to go ahead. Now, Mr. Jagdishan's current term ends in October, so that the time that they have, the bank has to apply for a reappointment is also lower. So the bank will likely speed up the process to appoint both the new chairman and reappoint Mr. Jagdishan. We are aware how the former chairman, Mr. Tanu Chakraborty, had resigned from the bank in March earlier this year, which led to all these top deck level halts and changes as well. The bank had appointed Mr. K.K. Mistry initially, and also appointed external firms Wilson Sony and Wadia Gandhi for reviewing the allegations that were laid by the former chairman. And Mr. Mistry, like we reported last week itself, got another 90 days tenure, and we had reported how the bank will not wait, within 10 to 14 days is what we hear, that they will go and appoint a new CEO. So this the legal firm review that has come in paves the way for, the reappointment of existing CEO, and this whole volatility around the stock also may now disappear gradually, given the, the latest review that has come in.
Sure. That's exactly what we need to speak about. Thanks so much for that. Vivek Iyer, partner and financial services risk leader at Grant Thornton Bharat, joining us. Vivek, very good morning to you, and thanks so much for taking the time. Specifically on HDFC Bank, there seems to have been a view on the street that you need to wait for the dust to settle. And there was uncertainty about what would emerge from these various legal reviews or studies. What's your reaction to what has emerged over the weekend?
See, the bank was always looking for continuity in leadership from a growth standpoint, and that's one of the reasons why after Mr. Puri, Shashi Jagdishan was also the choice. And in terms of what we have been hearing, see, constructive disagreements as a part of discussions between the board as well as the management is something that is a part of how effective governance functions. So in my view, the resignation itself could have been handled in a slightly different manner. But having said that, every person is entitled to their opinion and their thought process. But obviously, we're talking about a systemically important bank here. And as a result of that, some amount of jitters were kind of expected as a result of the step down. As we believe, and the legal reviews are also quite clear, that the processes were followed. It was essentially in terms of the whole constructive disagreement, I believe, that kind of got blown out of proportion.
So what does this mean then from the perspective of
potential reputational risk to HDFC Bank. Does that get put to rest completely now?
See, the reputational risk in terms of, I would say that when the whole incident actually started, there were concerns. Reputational risk is a very strong word personally in terms of, I believe, yes, there were concerns in terms of, okay, what is happening from a governance perspective within the bank, especially for people for whom, banking is not a daily business. We did understand that it was a result of certain kind of different views that the management and the board might have had as a result of the conversations that were being had between them. Naturally, in terms of when the reviews got done, we were pretty clear that the processes from an HDFC perspective, etc., have been followed. It is the most valuable bank in the country. It has been actually in terms of a bank that has shown consistent growth over a period of time. Naturally, from a regulatory perspective, it is a matter of concern that there is a governance concern at one of the leading banks in the country. And I guess it was important for an independent review to be done so that that matter is addressed, and it is not that it is important to kind of communicate that perception to the larger public that due processes were followed, which I believe is what is the outcome of the review.
Vivek, just one follow-up, and welcome in Sameer Samant into the conversation as well. But Vivek, just one follow-up here. In between all of this, and you could argue that the reasons could have been many and not necessarily just this lack of clarity around what will happen at the leadership level, is that HDFC Bank has lost a lot of senior level executives to smaller or to rival banks, as the case may be. Does this, you reckon, have the power to arrest that, stem that outflow, if you will, because that has an impact not only on operations but also on multiples from a market parlance?
See, honestly, in terms of, I think, let me actually put it, the attrition at the leadership level and some of the changes and discussions that were happening, I don't really see them as related effects. The reason is because the overall level of talent from a senior banking leadership standpoint within the banking industry is very limited. And we will see that change over the next 6 to 7 years as more talent kind of comes into the mix. But till then, we are going to be seeing this, for lack of a better word, a poaching of talent between some of the leading institutions from a people standpoint. So I don't think that these incidents are related, but I do believe that this stability will bring a great amount of stability at the mid management level. The senior management exits will continue to be a function of opportunities as well as in terms of what are the where the ecosystem is at from a growth perspective. Because for any senior talent, if there is an opportunity to add greater value to another institution and create a mark, why not? So that's at least how I see it.
Got it. Okay. Sameer, how do you view this from a market's perspective? You've seen the news, you've also heard what Vivek had to say. What does this mean for HDFC Bank, the stock?
Well, obviously there would be a overhang because obviously we have seen some contradictory statements after the post legal review by HDFC Bank. Though the external legal team also mentioned that they tried to reach out to the former chairman, but obviously they didn't get any response. And then, however, now whatever statements are coming from his side is like he's willing to cooperate and all. So a bit of a dicey situation. So obviously that will weigh in on the stock price.
Okay, Sameer, I do want to ask you about Kotak Mahindra Bank as well, and the announcement by Mr. Vaswani that he will resign. And so therefore there is just about half a year for the bank to come up with a replacement. It's plenty of time, particularly for a bank like Kotak, where you have quite a bit of ingrown talent that is available to fill those shoes. What is your perspective on Kotak?
So I don't believe this would be bring any disruption to the usual business operations for the bank. Obviously, 6 months time is a decent time frame for the board to decide upon the next CEO and CMD. for the banks. And obviously, without mentioning any other bank, the outgoing CEO has not mentioned any concerns or maybe any resentment as a reason to not to extend his tenure. So I think that would be the transition overall will be quite smooth.
Okay, so Ashok Vaswani, 64 years old. Vivek, any thoughts here? Is it simply a banker, senior banker saying, okay, I've had enough, I'm going to hang my spurs up?
See, Mr. Vaswani is a seasoned senior banker. And, unfortunately for him, when he actually in terms of led the bank, it was in the middle of an embargo, and he had to basically in terms of navigate and steer it through it. And honestly, in terms of he has done a stellar job there. And I guess he's got to do more with the personal reasons in terms of what is needed. See, in today's times, to actually navigate a bank through the kind of uncertainties that we live in requires a lot for an individual to give. And that time actually comes to a great extent from the personal life. So I think in Mr. Vaswani's decision to step down comes more from that place. He's a seasoned banker, there is no doubt about it, and he actually spearheaded the bank during some difficult times. So, I believe I personally, in terms of at least look at the decision from that standpoint.
Yeah, I'm pretty sure that a lot of people will, Vivek. On that note, thanks so much for taking the time. So to Samir, thank you so much for speaking to us this morning. On the subject of Kotak Mahindra Bank, what has it done under the leadership of Mr. Ashok Vaswani? We put those numbers together. Actually, my colleague Sharad has. Sharad, how does it stack up?
Well, interestingly, look at the date, which he started coming in as the MD and the CEO of Kotak Mahindra Bank. That was 1st January 2024. And largely, most of the banks haven't given much of returns in the private banking space if we compare ICICI Bank and HDFC Bank. But nevertheless, there is a very positive, support coming in. A strong balance sheet expansion was there post the leadership change, which we saw in 2024. Loan and deposit CAGR went up over 18% for Kotak Mahindra Bank. And if you look at the other key parameters, the profit growth was healthy, but definitely there was a margin compression also during his tenure. Almost 62 bips of impact was there. Asset quality has improved sharply, almost 1.2%, and the profitability did sustain despite CASA dilution and ROA, which is nothing but return on assets moderation. Of course, on the side of HDFC Bank, also we see there was a strong profit growth coming in and a slight pressure on return on assets. On the other hand, ICICI Bank, on the stocks price move specific, they have done a bit well, but among all these three larger banks, they had the strongest profitability improvement with the ROA expansion. So this is the entire picture of the tenure of Ashok Vaswani.
So those are numbers that you can see, and let us know what you think. In the meanwhile, we have to slip into a very quick break. On the other side, we'll discuss the other stocks that you should keep on your radar and the strategies that you should probably employ in trade today. Stay tuned.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit.
Welcome back. You're watching India Market Open. All right, Parag Thakkar and Kush Bora in the house talking to us about a lot of things, but I think I'm going to focus on the private banks and what is happening there. So two questions, I suppose. One is Shashidhar Jagdishan, does he get an extension? Who's the new chairman? And on Ashok Vaswani's announced exit, what happens next? How do you see both these developments, Parag bhai?
So I think one is that now this is a very common phenomena. This will keep happening, at least now what is happening in Kotak.
Okay.
So we'll have to respect that institutions are built with some DNA. So Kotak is a conservative institution, prudent organization. They'll focus on ROA, profitability and asset quality. In HDFC Bank's case also, it is let the CEOs change or not change. In the case of HDFC Bank, I hope it doesn't change. And in Kotak, I think they have a very good internal team. Anup Saha, who is ex-Bajaj Finance. I think these are really good guys. So I think from short-term perspective, there might be reactions. One may go up, one may go down. But I would say that from medium to long-term perspective.
I think the question is was this expected or not? With Ashok Vaswani, the thing is no one saw this coming.
Yeah. Nobody expected because I think in last 10-15 days actually he started meeting investors and analysts. So it was not expected. But you know, when you have an internal team which is good, plus you are open to hire external good candidate also, and the ethos of the bank is very good.
You had just turned positive on Kotak.
Yeah, so I am positive.
You're still positive?
Yeah. So if it opens say 3-4% down today, I am a buyer for sure. Even in HDFC Bank, it is still. And in HDFC Bank, if somebody does the numbers, FY28 numbers really look very good because of the operating leverage. And Mr. Sashi will do whatever it takes to create a big bounce back of the bank. For first step will be chairman, the new chairman will come in, and then the board will apply for Mr. Sashi's extension for 3 years in my view. Let's see what happens. But I would say that at least my personal view is there is no governance lapse at HDFC Bank, which is proven by this external law firm.
Yeah.
And valuations, 1.5 time book you are paying for 1.9% ROA bank. In Kotak, it is 2.1% ROA, 1.5 time book. Valuations are absolutely compelling.
Okay. Bank Nifty in focus, these private banks in focus, or Nifty in focus today, Kush?
Bank Nifty will be for a slightly different reason, but I'll come to that in just a bit. First up, a very good morning. And if Monday Blues had a face, this is what it would look like.
You all cricket team.
Yeah, he gets me.
Oh, I thought you also felt you're coming back from vacation, school vacation.
That I'm always excited to come here and be here rather. पहले तो हम आयरलैंड से हार गए, ठीक है. The men's cricket team lost to Ireland, who even knew that they played cricket. And secondly, that powerhouse Indian women's team had a surprising ouster from that T20 World Cup. So it's like the Indian cricket team is also following market behavior. Large cap तो वैसे ही थक गए थे. Small cap और mid cap space ने भी breather लेना कर दिया. But unlike the Indian cricket teams out there, you probably heard it somewhere that the small and mid cap space might take a breather, and it did. Right. Last Monday we spoke of precisely just this being the likely scenario. Again, I would give it a very high probability that this is a breather and not a reversal. So you would see some profit taking, you would see some cooling off in a lot of these names that were overheated, and then we could go on and achieve much higher levels in stocks and of course in the mid and small cap indices as well. Nifty, however, slightly different animal, right? The 100 DMA near 24, 200, that resistance is proving to be a stiff one, not now, for the last month and a half or so, right? But as long as the range of 23,700 and 24,300 is protected, I will play the range. So closer to 23,800, 23,900, I will go long with the stop loss at 23,700, but I will also book profits at slightly higher levels, with the recent highs being around 24,100, 24,200 levels. So positive biased consolidation, range play on Nifty. Bank Nifty, that's where we've been very constructive, right? And it's had that run, it's had that serious up move. By the way, 6 weeks of positive closings. Some breather, some pause here too is actually par for the course. Also, if you see the internals, the heavyweights, HDFC, ICICI and SBI for that matter, did the heavy lifting. Now HDFC and ICICI actually come to those stiff resistance levels. And also this is the monthly expiry, right? So you will see HDFC resist close to 810 marks, ICICI about 1400 thereabouts, right? So some cooling off in Bank Nifty is also likely and healthy. Closer to 57,400, 57,500 with that stop loss at the 200 DMA of 57,000, I beg your pardon, is warranted. So Bank Nifty is a buy on dips.
And what about stocks this morning?
Yeah, thankfully no such blues on our weekly picks, right? 3 out of the last 4 weekly picks have actually gone on and hit target 2, and that typically tends to be in the range of 8 to 10%. Those were Shilpa Medicare, Marksans Pharma and ZFCV, right? Kim's, an underperformer, so to speak. It's still in the green from the initiation price, but really hasn't gone on to hit the target one. So, like I said, no blues for the weekly picks. This week, the weekly pick is Capacity Infra with the targets of 277, 292 and a stop loss at 252. It's conquered the 200-day moving average. Good volumes, holding strong. So Capacity Infra for targets of 277, 292 and a stop loss at 252. The other one is Rolex Rings for targets of 153 and 158 and stop loss is at 144. And Bharat Forge has been popping on multiple technical indicators. So 2200 and 2275 targets, 2090 is where you keep that stop loss.
Not surprised. I mean, with all that the Bharat Forge is doing, including defense vertical doing off well, aerospace doing well, this could well have good news. Now, just before we get to Varsha and some of the other stocks in news, the other development, because you track IT so closely, is Persistent Systems, right? Now, 2 ways to look at it. One, that they are buying European capability, and good to have a company diversify out of US to Europe with a 22% odd exposure. But it is an expensive acquisition. It does have an impact on the balance sheet as well. And while they've been consistent performers, does this put a cloud on it? Or do you reckon that because their execution capability is so good, this is actually a feather in the cap?
So that needs to be seen. The margin needs to improve of the acquired entity. Nagarro. Margin needs to improve. If they can improve margins, it will be EPS accretive. Otherwise, it will take at least 2 years for them to be EPS accretive on reported basis.
But they have said that it's
cash EPS accretive. And EPS accretive, they have said if you remove all one-time expenses.
Right.
So I would say that first of all, this is I think in my view, it's a geographical diversification.
Exactly.
They had only 9% of the business coming from Europe. Now after the acquisition, it is 22%. So it is geographical diversification, and to pay 140% premium when IT is so much under pressure, that actually I cannot digest it too much. That's why I am not very positive, not very negative also. Persistent has delivered phenomenally well in after Mr. Sandeep Kalra took over, and originally when it was Mr. Anand Deshpande also, company was run very well. So full respect for the company, but current valuations versus the large caps is too high, and this acquisition is also too pricey.
Okay, in fact, let's listen into what Persistent is saying about its partnership and its new tie-up. Listen in.
Partnership with Persistent is extremely exciting because if you sat down with a pen and paper to design the complementarities, the ideal complementarities, you may not be doing as good a job as we just happen to have with Persistent, which is by a sheer stroke of luck. So across industries, there are these complementarities across geographies, across service lines, even partnerships. We're very complementary, and so we really look forward to making this all work out and actually riding this wave of growth with this whole AI transformation in the next years to come.
Okay, so that was the management of Nagarro speaking about the acquisition, and really, let's wait and see what the reaction to that acquisition is going to be. $1.3 billion, quite the large amount that will have to be stumped up. Let's talk about other stocks that you should keep on your radar, and Varsha joining to round out that list, and we'll get into some of the details then. Varsha?
Well, let me start with WPIL, wherein Madhya Pradesh government has, debarred a company from participating in future tenders, and this debarment is coming from MP Jal Nigam, which will be placed for up to 3 years. The allegations are that the company has, delayed when it comes to the completion of the projects. Next, you have Alembic Pharma, wherein they've received US FDA nod for a gel which is used to treat acne vulgaris, and this has company has a cumulative total 244 ANDA approvals as of today. Jubilant Pharmova has also got US FDA nod for a drug which is used to treat acid reflux, so that the stock will be in focus on the back of this news. Vikrant Energy, a company has received 3,518 crore order to develop solar power project, but simultaneously they've also cancelled 350 crore EPC contract for 100 megawatt solar power project in Maharashtra, and this project was called off due to prolonged delays from the client sides in project readiness, and they expect no adverse impact on this financial. Lastly, you have Dr. Reddy's, wherein US FDA has issued 7 observations for their Bachupalli unit, which is in Hyderabad, and the unit was inspected between 16th to 25th June, and this unit also has a history of observation when it comes to US FDA. So keep a watch on Dr. Reddy's as well.
Thanks so much, Varsha, for that. I do want to talk about Astral though, and we did refer to it. Tamanna had it on her list, and she talked about the demerger that will take place. It is the plumbing business that will remain with Astral, and the chemicals business that's going to be listed separately. So it's been described by one particular brokerage, Parag Bhai, as 1 + 1 is greater than 2. Do you have the same view?
So basically, see, Astral management, I know that they will not do anything which will dilute equity, minority shareholders' value. So in medium to long run, definitely they'll do something which will create value.
Surprisingly, Neeraj said the same thing.
अच्छा, okay.
मैं बोला कि अगर मैनेजमेंट इतना पेन ले रही है तो उनको फायदा नहीं होगा तो क्यों करेगा?
उनको minority shareholders को सबको, right? So basically, so the only thing is that, see, some people might have a view which is very short term. That plumbing business is a mature business, good business, good ROC business, while some of the other businesses might be loss making or in the incubating phase. So those businesses will get very low valuation now, which were actually getting plumbing valuation up till now, which was a much good business. So that might be concerns in near term.
Does it make sense to buy the stock today if you want to get into this demerger?
If it falls due to this particular kind of thought process, then it's a good buy.
You think it may? You think that might be the prevailing?
I also read some notes which are saying that, they are taking it as a slightly negative thing. Yeah.
Really?
Yeah. Oh. But of course, see, as I would completely agree with Neeraj that promoter understands shareholder value creation. They have created huge value after the listing, and so they'll do whatever is right for shareholders.
Just on the subject. Sorry, just to complete, quick answer. Once it gets demerged, you would stay in which business?
So right now, though, I'll definitely stay with the plumbing business, main business, but other businesses also, because I trust the judgment of management. I will take a plunge into a new businesses also, like paints and adhesives and I have already done some channel checks because I hold Pidilite that their adhesives have started picking up.
Astrals?
Yes.
Okay. No, so the stock I wanted to ask you about actually was Hexaware. And the fact that they have now become the official licensor for all of Anthropic's products via Amazon Bedrock. So they are the official distributor of Claude for enterprise in India, and I thought that was an interesting model to look at as well, as all your Indian IT companies are trying to level up. Some are buying into AI and buying capabilities they don't have. This distributor model I thought was quite interesting to see. I don't know if you saw the news or how you
I have not tracked it, but what I feel is that I think many other companies will do same thing in my view. I have not
there would be a first mover advantage. I'm so sure there'll be some element of exclusivity.
Yeah. Then it will be good. Yeah. But I think many people will try to do that, right?
Yeah. So, low hanging fruit.
Low hanging fruit.
Okay. Of all the stocks that we've discussed so far, we've talked about Astral, Persistent, and let's talk about Hexaware as well. Anything that you're liking on the charts?
I think Astral, if it comes close to 1455, 1460 zones, that's the medium-term rising trendline support. By the way, the trend for the stock, even prior to whatever the move today will be, hasn't really been positive. But we've seen meaningful rebounds from that rising trendline support that comes in, like I said, at 1455, 1460. So maybe close to those levels. Hexaware is shaping up very well because for the last few months there has been accumulation. A very strong one at that, but that's been sold into gradually. So if it closes above 510, that's when the trend will change for Hexaware, and that's when I'll be constructive on Hexaware. So on the upside, watch the levels of 510 for Hexaware.
Got it. All right. It's that time of the show where we go across to Sumit Sarkar to find out what the dealing room chatter is in Heard on the Street. Sumit's with us right now. Sumit, what are the individual stocks you're looking at this morning?
Well, firstly, keep an eye out for Vimta Labs. Now, there are buy flows on the large HNI and PMS shares. Dealers are expecting a potential M&A activity soon in this counter. For Sterlite Tech, the company had opened their QIP. The demand is expected to be quite strong. Multiple mutual funds have shown interest in this QIP, is what dealing rooms are indicating. Then there's a cash counter stock, Gina Seco. Large prominent HNIs have been buying this counter in trade. The stock was up nearly 4% in trade on Thursday. For Confidence Petroleum, there are buy flows on the large HNI desk. Dealers are expecting a very strong first quarter earnings. And on the flip side, Vishal Megamart is seeing sell flows on the PMS desk. Dealers expect a weak Q1, and there's also a rumor about a potential block deal that could happen very soon in this counter. So keep an eye out for Vishal Megamart as well. And Bandhan Bank was part of our segment on June 25th, where we did indicate that the sharp fall was on the back of rumors related to fundraise and a guidance cut, but nothing something like that. Nothing has come in on that front. The company has just enabled a resolution for fundraise. They're not looking to do any fundraise anytime soon, is what the clarification has come in from the management on exchanges. And then there was Tanfac Industries, which was part of our segment on June 24th, where we did indicate that a mutual fund and a large prominent HNI will be putting in money into this QIP, and Ashish Kacholia and Motilal Oswal name has appeared in the QIP allotted list.
So, Sumit, thanks for that. Very well pointed out, and a good story to actually tell people ahead of time, simply because it is not only these two. I think Malabar too has put in money here into Tanfac. So interesting, and goes in with this line that some of the chemical names are now being sought out for. Actually, I have a question on KEC as well, but before that, Kush Bora, on the charts, some of the chemical names and put in a Tanfac, let's say an Anupam Rasayan, let's say a Vinati Organics or a Deepak Nitrite or a what have you, right? A multiple name, a Naveen Fluorine, you've spoken about that in the past. What looks good on the charts, if at all? And specifically Tanfac.
So Tanfac's had a stellar run. 2500 is the resistance level to watch for. I wouldn't buy now because obviously there's been quite a bit of run up, that's already happened, and it's now coming close to those resistance levels. Once it crosses 2500 is when you can consider a fresh buy. So it's a buy, on rise. Amongst the names that you mentioned, yes, there is a lot of traction in the chemical names. I particularly like Vinati Organics here because of the risk reward ratio that is favorable, the volume accumulation that is happening, and also the kind of RSI upswing that you're starting to see on this. So not only the price, there is also the momentum indicators which are starting to suggest a positive bias. So with the stop loss at around the 1300, 1295, 1300 mark, you could actually consider long positions on Vinati Organic. Like I said, the risk reward ratio on this one, very favorable, hasn't really done much, while the rest of the pack has already zoomed ahead.
The other one is KEC International, and I just want to pull up the 1 year chart of a KEC International and then contrast it, 1 year chart if we can. Somewhere around November 2025, Power Grid banned or blacklisted KEC International. Now, I thought, will it have that big of an impact? And maybe it hasn't, maybe it has. But if you see the stock price of KEC International from November onwards, it's actually drifted lower. Now, you could argue this could be various reasons, and maybe the sector as a whole has come off. So I looked at the stock price of Kalpataru Power, and which is at 1380 rupees per share, which is that, again, the T&D arm, which is a competitor to KEC International. And if you look at the last 1 year chart of Kalpataru projects, exactly this name, look at that. It has actually gained since that period. So it's not a sector-wide thing. And maybe this Power Grid piece, as normal as it sounds, did have a bit of an impact on KEC's prospects and maybe pricing. And therefore, I wonder that now that Power Grid has revoked the exclusion order because the 9 months have passed, etc., and the company is allowed to permit it to participate, etc., does it have a positive impact on KEC?
I have a question here on KEC specifically, because I've not gone into the details of Kalpataru. How much is the export book of Kalpataru? Because KEC would have gotten impacted on account of the West Asia crisis as well.
I would presume you are right, and definitely because they've got multiple global orders, but I think Kalpataru too. Now, do I have I don't have the answer to that, so we'll have to ask Parappa
that's
about
another
it
element.
if he does, but you are 100% right. But I would presume that Power Grid would be a decent part of almost every company's ordering activity. So Parag, now that the 9 months have passed and KEC is allowed to participate, can it change the fortunes of KEC?
I think it can. You'll have to check with the company, but because I have not interacted with them recently. But I would say that Power Grid is an important customer, no doubt, and Power Grid pays you on time. so cash flow from operating activity, if you see, KEC was negative last year, and I think that is something which we should ask the management that whether cash flow from operating activity will improve. Because as you rightly pointed out, there may be some projects in Middle East, some projects in some states where the payment have been delayed. So if that gets settled, and if Power Grid also starts ordering, I think, and stock has also corrected, as you rightly said, now trades at around 21 times trailing earnings. And it has underperformed Kalpataru projects also significantly, I would say.
But the only thing that, and I pointed this out earlier, December 17th, I'm looking at a report from around that time, December 22nd, the High Court in an order, Delhi High Court, on the 17th of December, kept the PGCIL order in abeyance, pending passing of fresh or supplementary order expressly dealing with all the contentions raised by the company in its reply to show cause notice of PGCIL. So basically, it was allowed to bid despite that overhang. That's my understanding.
So here's the numbers, and before then we move on. But the unexecuted order book of KEC, Power Grid contributed to 15% of KEC's order book, and the YTD order intake in FY26, Power Grid share dropped to 4% in FY26 versus 27% in the previous year.
Okay, fine.
So it did have an impact. Maybe this changes that thing. Kush, on the charts, any luck?
There are very early reversal signs. I don't have enough volume and enough momentum going for it, but like I said, there are very early signs of reversal on this one, namely, the strongest one being the positive RSI divergence. So, if you do believe that, the things are about to turn, then yes, you can consider, but a very tight stop loss at 495.
Okay. We've been tracking the HDFC bank story, and we've been talking about the clean chit, quote unquote, from the legal term. But we've heard from the chairman, Atanu Chakravarti, the former chairman, who resigned from HDFC Bank, and where all of this started. Piyush, my colleague, has had a long conversation with Mr. Chakravarti just a short while ago. Piyush, he doesn't sound too convinced.
Absolutely. In fact, Mr. Atanu Chakraborty, in a conversation with NDTV Profit, has said that the resignation letter mentioned that the board should introspect. It is not about the compliance. The external legal firms checked on the compliance aspect of it, which he had no issues with. He has said that he was appointed under the Companies Act, approved by the Regulation Act, and resigned according to the same acts. He has said that he wanted the board to introspect. He said that despite asking the board to share the terms of reference of these legal reviews repeatedly, he was not given any of those, and hence he declined to participate in the interviews that were sought by external legal firms. Now, he said that during his tenure, the 81 bond mis-selling case in Dubai did happen, and the bank moved fast. It took actions against the employees who were associated with mis-selling of those bonds, and the bank cracked down on them. So he said during his term there were other issues as well with regard to certain business practices. He did not name specifically which are those practices, but he said that the resignation was more for the board to introspect. It is not about the compliance aspect. And he also said that the legal firms were appointed, and he wanted to engage first with the board at board level. He wanted to understand what were the terms of reference and under what legal aspect are they actually appointing this external firms to conduct the audit. All in all, Mr. Chakraborty is saying that this whole review was superfluous, and he also said, some of the minutes of the meetings have been taken out of, a lot of picking has happened in terms of the interviews, internal interviews that happened. The legal report has picked up pieces from the board meetings, which he himself had, the minutes of the meeting, he himself had presided over those. So he had no issues with those. In fact, he's saying that the board, this was more of an introspection sort of a move that he, which is why he resigned, not really in terms of compliance. He did flag some of the other issues as well.
So the pick and choose, which I assume that's what you're saying,
yes.
Piyush, that he's saying that they've picked and choose, the legal team has picked and choose the bits that they wanted. They've said the report is very caveated. But is it fair to say that the sting has been taken out of these allegations? I know Mr. Atanu Chakravarti is speaking again and, putting his point of view across. But the fact that if you make allegations that big, it's not going to stay within the board. There is going to be a whole process going forward, isn't it? What happens next in the process for HDFC Bank? You reported last week that there will be another board meeting in about a couple of weeks in which they'll make the next choice. What is the next process we'll see?
Yeah, in fact, that is what we reported earlier today as well, that, the board was backing Mr. Sashidhar Jagdishan for another term anyway, and with the clean chit that the external review firms have given to the bank is very much likely to go ahead and recommend reappointment of Mr. Jagdishan for another 3 years. Now, in terms of timeline, in the first half of the month, we can see the bank appointing a permanent chairman. Earlier this month it appointed Mr. K.K. Mistry. Another 90 days were approved by the RBI. But within the next 14 days, we are expected to see a new chairman taking over. And then after that, the new chairman will also have a say in terms of Mr. Jagdishan's reappointment. So that part will happen. Mr. Jagdishan's tenure reappointment will likely happen in the second half of the month. And we are aware on 17th, the bank is going to report its Q1 results as well. So we may see an announcement coming in either on the chairman or on the CEO front during that, July 17 basically.
Got it. Thanks so much, Piyush, for that. By the way, the pre-open rates should be on your screen. Pull those up. The benchmark just about settling at this point, 0.2% in the red. Pull up the likes of HDFC Bank and let's see whether there's a reaction at the start. This is exactly what we were speaking about, just about 0.5% in the red. Let's see where that settles. Kotak Mahindra Bank was possibility of a sentimental reaction. We're still waiting for that to come about. Let's pull up the other two that are in the news. Persistent, certainly something that you should watch out for on account of the large acquisition that it has made, 7%. There you go. So I wonder if that's going to flow through when markets actually start. And finally, Astral, pull that up because that demerger is something that a lot of people are tracking and it's down about 3%. Milan Vaishnav is joining us this morning. He's technical analyst at Gemstone Equity Research and the founder. Milan, how are you liking the setup at the start of the week? Are you cautious? Are you positive?
I am both cautious as well as positive, and there are two reasons for that. The thing is that if you look at our Indian markets in isolation, we are very badly trapped in a range. We have 100 DMA that is creating resistance placed at around 24,160. Then we have weekly, 100 week moving average, which is at around between 24,400 and 500. That also is likely to cause resistance. So speaking in isolation, yes, we will see the markets taking some time before it moves out of this 24,200, 500 zone. After that, we can expect some trending move on the upside. But now, if we take a relative look, then India is one of the relatively outperforming markets globally, and we expect this relative outperformance to go on and in fact improve over the coming days. By and large, except some few days that it might spend in a range, I ultimately feel that we'll be able to move about 24,500 levels.
Okay. What about the stocks that you're liking this morning, Milan?
Yeah, there are two stocks that I have my eyes on.
Okay.
Yes, sorry. Yeah. Yes.
Yes, Milan, please continue. What are the two stocks you have your eyes on?
Yes, there are two of them. First is Shriram Finance. I'm looking to buy above 1030, and with a protective stop at around 980, I'm expecting 1100 on that. The second one is Oberoi Realty. I look at buying above 1750, keep a protective stop at 1710, and expect around 1825 on the stock.
Okay, Oberoi Realty. All right, interesting choice. Just pull up just few of the others that are buzzing in the pre-open session before we get to the big brokerage call this morning. Look at Hexaware Tech. We talked to you about it as we're ending the pre-open session with just a minute to go. That stock about 5% up. What's happening is that they're going to distribute Claude for enterprise here in India. So that's becoming interesting. Dr. Reddy's positive notes on Dr. Reddy's and Eternal and Aptus, all of them playing out, even on CG Power. So you have a lot of brokerage calls which are moving the needle this morning, and one of them is something that Sharad is picking up. Insurance stocks in focus, Sharad, and in fact Niva Bupa is showing some action in the pre-open session as well.
Well, yes, this is a pretty interesting report from Nomura, especially on the private players. Niva Bupa, they have initiated a buy rating with a target price of 105 rupees per share. Now they expect the premium CAGR that to go up to almost 23%, and the ROE that's expected to be coming northwards of 16%. For Star Health also, they've initiated a buy rating and the target price of 675. And over there, the deep diving the numbers, the accounting method, they expect the ROE to range between 12 to 15% over the next 5 years. Also, ICICI Lombard, they have initiated a neutral rating, and they have stated that the health segment is the main growth driver. And lastly, I'd like to point out PB Fintech initiating a neutral with a target price of 1590 rupees per share, especially on the pending regulations. That could be a bigger trigger for the big changes by the management going ahead. And the insurance market, interestingly, has tripled over the last 3 years. But of course, the focus would be on Niva Bupa today and Star Health, where the initiate buy ratings have come in from Nomura.
Okay, well, thanks for that, Sharad. And interesting calls, because you know the large cap insurance names, save for maybe SBI Life, haven't really created wealth. I wonder, Parag Bhai, if some of the smaller allied names, Star Health, Niva Bupa, etc., could feature in the list of stocks to watch.
Star Health has started delivering consistently good numbers from last 2 quarters, I think. So that is one, and the stock has also responded to it.
Okay. Okay, so you
otherwise all insurance stocks are not doing that great. Yeah.
Okay. Okay. Cool. Well, 908 rates have settled, and I wonder if Persistent is starting off lower.
It is.
It is, and Astral would be interesting to see what happens there. There is Vikran Engineering has gotten orders, and also the Astral is down 4%, by the way. Vikran Engineering, the market is reacting to an order win of 3,500 crores. Also a couple of corrections that have happened there. I was very excited about the Goldman note on Eternal. After a while, you've seen a positive note on Eternal, by the way, and that stock, well, a couple of percentage points higher. And GMR Airports, because the Nagpur International Airport has officially commenced commercial operations. I wonder if that stock, not too much there. Okay, well, actually, coming on that, Parag Thakkar, GMR Airports, and I believe over the weekend, even the Adani Group laid out some airport-related development plans. But GMR Airports, as a business in focus now, that Nagpur, which is a small airport but 100% owned by GMR, has also commenced operations. Do you like this space? And therefore, the only way to play right now, you could argue, pure play is GMR Airports, right?
So I like this space, and so Adani Enterprise is something through which I am playing this space. And
not GMR.
Not GMR.
Okay.
So Adani Enterprise, Adani Ports, so that
but
we have discussed earlier. No, so nothing with that. But I just thought it to play through Adani.
Okay, because you're playing it through one way, you're not playing it through GMR Airports. The stock has been okay, Kush, lately. Is it looking good for a trade?
So, see, a lot of these stocks will have the expiry hangover. So, right now you will see GMR resisting around that 110 mark, right? Other than that, it's been making all the right noises technically. So, I kind of like the stock. It's just that, like I said, there has been this huge call option based around 109, 110 mark. That's why, and you'll actually see the stock resisting at that level, slipping, from those levels. But positionally, if you ask me, I think this is in a very good space. I would be positive on GMR. Right now, it's a hold until it takes out that 110 resistance. If you have a position, you should continue to hold 104, 105. That's the zone where you should keep your stop loss. But like I said, technically making the right noises.
I want to see what's happened to Kotak Mahindra Bank as we've closed the pre-open session. Do we have any rates up? what's happened to HDFC Bank. We should look at them both actually together in congruence as well. Kotak Mahindra Bank about 1.5% down, HDFC Bank 0.5% up. Milan, just a technical view on both of these?
So far as Kotak Bank is concerned, it has failed to cross above its 200 EMA twice now. I am taking into account the lower opening that we will get today. So ideally, we should be looking at the stock only after it goes above 407, 408 levels. HDFC Bank, on the other end, it remains as such relatively better placed. I expect it to move higher towards 815 and then at 840, 845 in the near term.
Okay, any other buys in terms of Persistent? Persistent taking a knock. Maybe there are questions of valuations of what it's buying. I'm not sure, but do you see an opportunity maybe to come in and pick up the stock right now if this continues where it's close to the pre-open session?
Not really as well, because we need to wait for a proper reversal signs to emerge, which is not there on the charts as of now. So I will not be looking at buying on declines.
See International, by the way, starting with gains of about 2.3% or thereabouts. I wonder on the charts, it's been beaten down, and we pointed that out actually near the trade over the last since November. Would you buy at this moment?
Like I said, risk-reward ratio massively favorable. So for a positional trade, it does make sense. Stop loss near 495, 500 zones. But major momentum will actually come once it crosses this 540, 550 zone. That's the falling trendline resistance. Volume's not so encouraging, but yes, there are early signs of a turnaround.
What about Eternal? There was a note again that was pointed out by Neeraj this morning. Eternal currently trading with gains of about 2% at the end of the pre-open session. Is there a possibility of further upside?
Yeah, seems to be making a comeback for sure. For sure, there is very heavy volume activity, incidentally, both on the downside and on the upside. It's just that the price action has been positive over the last 2.5 months. So take heart from that. I don't expect a big up move in a very short span of time. In other words, like a momentum-based trade. But the positional trade is starting to look good on Eternal. There's a convergence of the 20 and the 50-day moving average near the 250 mark. So if you're buying from a positional standpoint, 250 or maybe just under that, that should be your stop loss. Continue to hold if you have a position with that stock.
Okay, less than a minute left. Milan, a quick view on a stock that you haven't mentioned so far based on the pre-open rates. One stock that you like?
Yeah, one is Afcom's infra is something that I'm looking to buy on delivery basis. It is attempting a major trend reversal. It is in the process of confirming it, yes, but we can buy stock on every decline that we see in Afcoms.
One stock that you like?
I'll go with the weekly pick, Capacity Infra, 4 targets of 277, 292, stop loss at 252, not opening with a very big gap up, so that's positive.
Well, okay, viewers, keep in mind that the scare over the weekend has given way, if you will. Somehow, post-Friday or if there was a belief that markets could open with a bit of a tumble down, that is out. That is no longer the case. So therefore, we'll start off flattish to marginally higher. The question is, can the broader markets show some strength? They were kind of amiss last week. But here's how we're starting off. Absolutely flat. Market breadth is decent, even Steven, so no big gyrations, which is actually welcome today, by the way, right? Nifty Bank is 0.16% lower. IT should come up on your screen. The two heavyweight indices, if you will, and Nifty IT will come up next. Mid caps and small caps are okay. Nifty IT is down 0.75%, maybe led by Persistent. Small caps are okay, by the way. Okay, let's get the heat map up on the screen and show you what the large caps are doing. It's even Stevens actually a bit more green than red. It's actually a really good sign. Now, what is down? Kotak Bank is down because of the CEO stepping down. Indigo is down. Interesting, reason per se, maybe some bit of profit booking ahead of expiry, maybe crude prices slightly higher. Adani Enterprises is down again, 1% lower. Reliance is down, so that is putting a little bit of pressure on the indices as well. M&M, HCL Tech, Tata Motors, PV are amongst the others, but a fair degree of green, which is good to see. Dr. Reddy's up a couple of percentage points. JSW Steel, Varsha pointed out that piece of news. JSW Steel up about 1.3% after a fair degree of smattering that steel stocks have taken last week. This is good. Eternal on that Goldman note up 1.25%. Trent, ONGC, Apollo Hospitals and ICICI Bank trying to thwart the pressure that maybe the likes of Reliance Industries and Kotak might be putting per se. So not bad. I mean, Dr. Reddy's is standing out now like a star, even though one would have thought that Kotak Bank was the bigger piece of news. Really sharp move, now up 3%, the standout stock on the Nifty of the morning.
Curious to see what the Nifty contributors are looking like. Where is that strength coming in? Because you have a lot of the heavyweights who are not really pulling up right now. It's HDFC Bank and ICICI Bank, some of the private banks. I must say, no euphoria visible in the HDFC Bank counter after this clean chit, and maybe a bit of it dulled by the comments of the erstwhile chairman after it came out, and he spoke to us a short while ago. So we can see that as well. On the losing side, it's RIL really who's pulling down the index very, very clearly, and then followed by L&T and Bharti Airtel. Let's pull up the broader markets this morning and see what's happening there. The mid cap and the small cap completely flat. On the mid cap 150, the small cap also pretty much flat. The advanced declines are very evenly matched. Slight up move on the advances, so nothing great happening there. The sectoral heat map is what we should pull up at this point. A whole number of notes on the IT sector, not all of them positive. 0.5% down on the Nifty IT, but remember that's the biggest loser today is the IT index, and it's just about 0.5% down, so nothing major happening there. Defense stocks are a little weak. I'd go far as to say that there is a bit of a positive bias in the markets today. Nifty Pharma about 1% up, so is healthcare, and metals are showing a spot of recovery, as are realty stocks. Financial services are also doing okay, but banks and IT are muted right now in the markets. It's defensive plays like healthcare which are coming to the fore. I wonder if we can pull up the Nifty healthcare constituents and just take a look at what's happening. Is it all Dr. Reddy's all through the way, or are there other stocks also coming in? In fact, let's pull up the Nifty Pharma, DRL, Ajanta Pharma. A lot of them are doing okay today. It's just Divi's and Natco Pharma that are in the red. Let's pull up individual counters and see what's happening there, because that's where the action is, right? We're coming back on trade after 3 days of a gap. The weekend, and of course Friday was a holiday because of Muharram as well. Persistent Systems talked about a large acquisition. I think we seem to have a letter missing on our graphics, but wait, hang on. Let's go here till we fix that bug. Persistent Systems about 8.5% down this morning. And we'll get Jasmeet up in just a second to give you 6 clear reasons why Persistent System is down. We'll get you that first cut very quickly. 8.5% down. Astral has announced a demerger, but there's one part of the business which is not great, and it's for the current situation going to weigh on the part of the business which is much better, which is plumbing. So 6% down on Astral. Parag Thakkar did say it's a chance to pick up if it opens down. Let's ask him if he continues with that view after this. Hexaware has become the official distributor of Claude. That stock is about 3% up. I just want to review HDFC and Kotak Mahindra Bank because big announcements there. HDFC Bank mildly positive at best. Kotak Mahindra Bank seeing a 2% downtick. And then there were order wins from BEML and Transrail Lighting. Let's just look at what's happening there. 0.5% up on BEML. Transrail Lighting is about 3.5% up. So no fireworks, at least from what I can spot. And now the advanced decline ratio actually turning adverse, Alex.
Yeah, Tamanna, you said it, and I think you've covered quite a bit of ground. I'll just add a couple to the list. You have HEG that's doing reasonably well today. It is, of course, related to the metal plays. Graphite electrode manufacturers have to do with steel production. Electric arc furnaces doing well is what benefits HEG. You have Usha Martin that's up and about 2.3%, GlaxoSmith Pharmaceuticals, and Home First. Very interestingly, despite the CFO exit, there was an Investec note that came out just a short while back, earlier today actually, maintaining a buy with a target price of 1,450, and they say that the CFO resigned, but the transition should be smooth, no impact on short-term and long-term fundamentals. So that's being looked at positively by the street. On Astral though, since we spoke about it at the start, Parag Bhai, the stock is down over 5%. Is this an opportunity in your opinion?
Definitely. So I would do my work again, because as I told you earlier I had bought and sold at a profit, both Supreme and Nestle. But I would do my work, but I think this management knows how to create shareholder value, and I'll go by that. I always go by intent, and the intent is to create shareholder value in long run. Today it might be down because in absolute short term, it looks like a slightly negative thing.
We already spoke about the reasons why Dr. Reddy's Laboratory is doing well. Pull up that stock. The question is on the charts for the top Nifty gainer today, 3.7%, very close to the high point of the day at 1400. What would you do, Kush?
Book profits. It's had a stellar run, and from a near-term perspective, the stock's actually gone into overheated territories. Good volume, all of that going for it. But like I said, you don't want to be the last one holding. So either you could book all of it now, or book partially and hold the rest of the quantity with 1380 as your stop loss. But it's starting to overheat a little now.
And sorry, you want to come in?
No, please.
Okay. And so Transrail Lighting, KC International not doing too much. Milan, on the charts for Transrail Lighting is up 3% or thereabouts. KC just about 0.7%. Any view on the charts?
Yeah, so far as Transrail is concerned, it has formed a large base over the past 2 to 3 months, looking to move higher, and any sustained move above 530, 532 can take it higher towards 575 to 80. So one can take a fresh entry into this, continue to hold on if anyone is holding. And so far as KC is concerned, KC as compared to Transrail is not so good on chart. It continues to remain under secular decline, continued decline, I would say it. And I don't expect any move higher so long as it is trading below 560, 565.
Okay, I want to pull up the Nifty IT components if we can. I reckon Persistent Systems is that big, large red candle out there. What about the others? The likes of LTTS, HCL Tech, etc. are down. Coforge and Tech Mahindra are thwarting it. But Persistent is arguably this one large reason while Nifty IT is doing what it is doing, 7% lower. Before I get in Milan Vaishnav's views on it, can I get in my colleague Jasmeet to talk about what he has picked up from various either brokerage notes or analysts that track this, and what does he make of this particular development for Persistent? Jasmeet, good morning.
Very good morning, and thank you for that. As rightly said, now when a company does an acquisition of such large, so there will be an impact which we can see when it comes to joint business. So here are the 6 top key reasons that might be a key concern for this acquisition and what the street's not liking. While the first one is slower growth. Nagarro has grown at roughly 5% over last 3 years, but Persistent has been growing in double digit. So the integration can lead to the overall growth of Persistent come lower. While the second one is a valuation. Persistent trades at a premium valuation on the back of that high growth. Now, if the growth reduces, that can again impact the overall valuations and the overall PE ratio might come down. While the third one, if you look at the EBIT margin of Nagarro, it's roughly at 11 to 13%, but Persistent enjoys a high teen EBIT margin of roughly at 16 to 17%. So this integration might again lead to margin dilution risk as well. Well, look at the fourth key concern is the overall deal momentum. While they expect this deal to add more value in the European market, but European as a market has been lagging for IT companies historically. So any increase in European market might still be a concern for Persistent altogether. If we look at the fifth reason, this overall new business has heavy ERP mix, which is a more competitive business altogether. And Persistent being a key player, it enjoys itself in digitalization and the core business, not in competitive space. So the overall business can be at risk from here on. While the last reason, the sixth one, why the overall deal is creating the overhang for Persistent is the share of Nagarro and Nagarro as a company's performance. Nagarro is down roughly 80% from its all-time highs because Nagarro has a lot of concerns. The first one is cash conversion concern. Given Nagarro is currently at a negative operating cash flow, while the second one is a working capital concern. So all of these concerns might continue in Persistent as well on the back of the integration is something that street is worried about.
Okay, well, so that is Jasmeet pointing out 6 key reasons why Persistent Systems may be lower in trade today. I believe any kind of trade is out of the window. Parag Thakkar had mentioned that it is very expensive relative to the large caps, and therefore he would not go on and buy it if it were to start off higher today. It hasn't. It started off lower today. Parag Thakkar, a 7% downtake. Does it bring the valuation?
Not in a hurry to buy.
Not in a hurry to buy. Is it true for IT at large, or are you paying for Persistent?
Something which is trading at 13 times and something which is trading at 25 times, it has to be a different treatment. Yeah?
Okay. So you're not in a hurry to buy
Not
Persistent.
in a hurry.
Okay. The good part is, Parag bhai, okay, so moving beyond IT because Persistent is discussed. One thing that worked out well from amongst all the banking names which have been slow, Slumber, HDFC, Kotak, IDFC First Bank, is ICICI Bank.
Yes.
It's actually done really well. So in some sense, the market is rewarding the performer.
So on record, I am saying this for the, I think how many times I have said this, it is my top holding. It continues to be my top holding. There is no...
What percentage of your holding is ICICI Bank?
Around 11%.
11%?
11% of your portfolio
yes.
is one stock, ICICI Bank.
Yes. But it's been the case for
and
2-3 months, I think.
Yeah, so from 1,230 where we discussed, by God's grace, that has been my top holding, and I would continue to hold. There is no problem. It is a sector-leading growth, sector-leading ROA, and very reasonable valuation.
So you wouldn't want to take some money off the table to bring it down in percentage terms?
No, and ICICI Bank, I'm not...
You're staying invested?
Yes.
So how much is banking totally? And you have, so I'm just asking, right? You have Kotak as well, right?
Yeah.
ICICI, Kotak, HDFC?
Yes.
Okay.
So ICICI 11%, HDFC, so we all put together around 25% should be in banks.
Okay, and IT you are equal weight, right?
Yeah, so now IT weight in Nifty has fallen so much that actually I'm by default overweight. So now I'm at 10%, but the IT, so that's okay. But IT weight has fallen to around below 8% in Nifty.
I just want to talk very quickly about Dr. Reddy's today. So here's what's happened with what Nomura is saying on it, in case you've missed it and you're seeing what the chart is doing. They're saying it's a strategic pivot in favor of brand businesses on Dr. Reddy's, right? So they're saying street expectations are muted, making it risk-reward favorable. Constructive on Dr. Reddy's, they see an upside risk to consensus earnings and valuations. They expect growth of the branded business to lift profit margins. Revenue mix change should support sustainable earnings growth, and this in turn drives a re-rating of the stock's valuation multiples. Biosimilar Aptacept, if launched, can present a 30% upside to FY 28-29 estimates, which is why you're seeing Dr. Reddy's on that high right now. Are you seeing an upside of that sort in Dr. Reddy's, Parag bhai?
So not to my knowledge, because my concern was that what will replace Revlimid. Revlimid was such a high contributor, and now what will replace it? So I think Street has got some name which can replace Revlimid, but I would say that, see, company is good, cash flows are superb, the net cash balance sheet, everything is good. I'm just finding it difficult to find out a replacement for which can replace Revlimid's huge amount of sales and cash flows.
So I think what they're focusing on as that Revlimid point goes away is biosimilars, weight loss drugs. So they do have some mix in there.
Yeah,
but we'll
I think it will take some time to replace earnings. I'm saying earnings.
From the earnings
profits
perspective. Milan, on Dr. Reddy's, are you liking the stock today?
Yes, in both ways. First of all, it is entering a major resistance area around 1440, 45 odd levels. That's where I expect the stock to take some breather. But in the same breath, if we zoom out a bit and move to higher time frame charts, any move above those levels would lead to a structural breakout in the stock. So yes, one can continue to stay invested. For short-term investors, one may continue to book, say, around 50% profit and stay invested with the 50%, remaining 50%. But by and large, it's a hold from the portfolio perspective.
Got it. All right. On that note, gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. Let's talk about UPL. And the company is repositioning itself for higher quality growth with a clear shift towards profitability as well as mix improvement and stronger balance sheet discipline. We're going to be speaking to the management about the path ahead. But before we do, let's bring in Varsha to give a little context on exactly what I've just mentioned. Varsha, on all of these metrics, what's underway right now?
Well, for UPL, now the focus is shifting towards accelerating profitable growth and not just the top line expansion. FY26 was positioned as a year of better earnings quality and debt reduction, but volatility in agriculture is now a permanent reality and not temporary according to management, and Advanta and specialty chemicals will remain high growth engines for the company. While they are targeting shift towards higher specialty share of around 40%, AgChem will be around 60% of business business versus current higher share, and the mix is expected to shift margins toward that 20% mark. Onto the FY27 outlook, no guidance overall for FY27 has been given due to global uncertainty, but Q1 FY27 is expected to be revenue at around 10 to 14%, EBITDA at 14 to 18%. Management says that Q1 is seasonally weak. Improvement will be seen later this year.
I think that's really the key question, isn't it? Thank you for that, Varsha. Bikash Prasad, Group CFO, UPL, with us. Mr. Prasad, thank you for joining in this morning and your time to NDTV Profit. Q1 is seasonally weak, but we're seeing a current quarter with El Nino effects, delayed monsoon and maybe patchy monsoon. What is the kind of impact that you're already seeing on ground?
Yeah, first of all, good morning to you and your viewers, and happy to be here with you today. Monsoon is delayed this time, and you would have seen all the reports from IMD, and they are expecting monsoon to be 10 to 15% lower than LPA. I think it's too early. We are waiting and watching. And if the monsoon arrives, say by first week of July, we will not see any major impact on the agricultural production, and there will be no major impact for the country as well. So as of now, we see that our Q1 forecast that we have shared will be broadly in line with what we are expecting now. But we have to wait and watch. If the situation, the weather really goes bad, then we'll have to reassess it. But as of now, we are comfortable with the guidance that we have given, not just for the whole group, but also for the crop protection India business. And more importantly, we feel that the crop protection India business will do better in Q2 as well.
The crop protection India business expected to do better, Mr. Prasad, because of a poor monsoon. You think that becomes, in that sense, a tailwind?
Yeah, we do see that last year also Q2 monsoon was not that favorable. And more importantly, with our product mix, the new product launches, the margin expansion, we expect our Q2 to be much, much better.
Mr. Prasad, good morning. This is Alex here. You mentioned a guidance. Can you reiterate that? Take us through it for FY27.
Well, you know that there is an evolving situation in the West Asia, and we have been cautious, and we have also taken guidance from the market. And we decided to share the guidance only for the first quarter while watching the evolving situation. And Q1, because of the seasonality impact, we are in agriculture, and hence seasonality plays a very, very critical role. Usually our Q1, if you look at it, is approximately 18 to 20% of our annual revenue, while Q4 will be anywhere between, say, 31 to 34% of the revenue. So from the seasonality perspective, Q1 is considered as a small quarter for us. However, considering all the new product launches, margin expansions, broad-based performance by all the platforms, we gave a very confident outlook of 10 to 14% for revenue and 14 to 18% for EBITDA. And once we come back to the market for Q1 results, that time we will reassess about the further outlook.
Understood. Okay, so 14 to 18% EBITDA growth. This is on the back of a move towards improving profitability through various measures that you are undertaking. But purely on the back of the supply shocks that various industries has faced, and I'm guessing your company as well in the first quarter on account of the West Asia crisis, what is the input cost pressure that you witnessed? How much of that have you been able to pass on?
Yeah, so as you know that UPL is present in over 140 countries with 4 different platforms. So we have built resilience in our portfolio. So even during the last one quarter, first of all, we have not seen any supply availability related issues because of our diversified sourcing as well. We source from over 80 countries for various our manufacturing sites all over the world. So we have not seen any supply availability related issues. Yes, the prices of the inputs have gone up, and that we have been trying to pass it on to the market. Once we come back to the Q1 results, probably we'll give more colors on that. But as of now, we are in a good position.
Bikash, good morning, Neeraj here. Just on that question of guidance, right? I understand these are slightly unprecedented times, but what particular level of clarity or what threshold of clarity will enable you to give the FY27 guidance?
Yeah, so we have to wait and watch the evolving West Asia situation.
Okay.
I think the situation is normalized. We are happy to come back and give a guidance. But without guidance also, if you look at it, our businesses have been extremely robust and growing very fast. If you look at our Advanta Seeds business in the last 3-4 years, or even more than that, if you look at our CAGR revenue growth has been over 15%. Our margin expansion has been over 15%. Our specialty chemical business, if you look at it last for several quarters, has been growing at a CAGR of 20%. And this year also, we expect the growth to continue even more. And our crop production business, India business, I talked about it because of the new product launches, product mix, and margin expansion. We again, the India business, we expect it to be strong. And our crop production global business, which has been growing at a high single digit compared to industry growth rate of 2 to 3%. So we feel that our businesses are very strong, resilient through the diversification that we have built over the years.
Okay. Because the other thing is this, what you just mentioned in this answer, how Spec Chem is doing. And I believe you've gone on record saying that you will move from a 70 to 28 mix to a 55-45 mix. So Spec Chem moves from what 28% overall to 45%. That's about a 20% CAGR, which you've done in the past. But as the higher base happens, how confident are you that it will be easy to manage? And what gives you that, what percentage of those long-term 15-year contracts that you speak about are signed in versus them being in a discussion phase?
I think it's a great question. And if you look at the manufacturing capabilities that UPIL Group has built over the last 50 years, it's really unique. If you look at our size of the group, it's over 50,000 crores business as a group. We are a select group of companies in India in a private sector which has a EBITDA of over $1 billion. So the capabilities on the manufacturing side that we have built now, we are seeing, especially in the last 1 year, when there is a focus on China plus one strategy, those industry players and our specialty chemicals are used in over 15 industries. So all the top 5, most of the top 5 in the different industries are in discussions with us for sourcing our capacity. So we have multiple opportunities. First is to do our backward integration, continue doing backward integration so that we continue to build our cost competitiveness against China. Second, some of the advanced chemistries that we have built, whether it's cyanation, phosphorus-based chemistry, sulfur-based chemistry, caffeine, acrolein, first generation, we have seen that the capacities are getting utilized very, very soon. So 3 years ago, we had built a cyanation capacity that is 100% utilized. Now we are looking at doubling the capacity. And even after doubling the capacity, we are a very small portion of the global capacity that we have. So we do see opportunities in terms of capacity expansion, in terms of backward integration, and in terms of also using synergy coming from the different platforms. That is giving us a lot of opportunity to get into, say, biofuel area as well, where we can really leverage our presence of Advanta Seeds, presence of our manufacturing base, and the learning that we have in agrochemicals and agri sector. So we are not concerned about the continued growth trajectory coming in our specialty chemicals business. So I think in the next couple of years, you will see the continued growth, and that will tilt the mix between current 78 to 22, between agro to specialty, to probably 55-45 in the next 3 to 4 years.
Thank you, Mr. Prasad, for speaking with us this morning. Great to have you on and hope to catch up with you again.
Thank you so much.
All right, let's turn the spotlight on the hotels space. Indian hotels is in focus as the sector continues to benefit from strong domestic travel demand, with industry revenue per available room rising 23% in May, driven by higher room rates and occupancy. Before we speak to Mr. Puneet Chatwal at IHCL, Mahima joining in with more details.
Right, so Tamanna, as you rightly mentioned, for IHCL also we saw that despite of the global headwinds, global tailwinds, Q4 was a very resilient quarter for IHCL. In terms of, going forward FY27, the guidance, management expects a double-digit revenue growth that could be anywhere between 12 to 14%. They expect stable margins and strong cash generation as well. In terms of the global pipeline also, that's also becoming strong because recently, they have opened 126 key hotel in Frankfurt, and overall in terms of pipeline, there's a robust pipeline that lies ahead of IHCL, 250 plus hotels and 31,000 plus keys going forward. Plus new business verticals have also been doing very well for the company. Ginger, Cumin, Ama Stays, Trail Tree of Life, etc. have all grown very well. A 4-year CAGR for the new business has been around 31%, which is going very strong. If you take a look at the overall industry in the past couple of months, we've seen, of course, headwinds because of the geopolitical situation, but now there's improvement that's been seen in May in terms of both growth in terms of occupancies and ADR. This is as per Jeffrey's report. And overall outlook for the entire sector, domestic leisure demand is expected to stay healthy. Low base from last year's disruption to support growth, and easing Middle East tensions could revive corporate travel as well. So this is the overall view of sector and what it means for the growth of the company as well.
Okay, Mahima, thank you for that. Puneet Chatwal joining us this morning, MD and CEO at IHCL. Mr. Chatwal, very good morning to you. Great to have you on NDTV Profit. We always enjoy our conversations. What has worked in May when, on the face of it, theoretically, the situation should be bleaker than it is, right? You have this West Asia crisis, you have oil prices going up, stock markets not. You should see spends actually coming down, but that's not really what happened, isn't it?
It's very simple. Good morning. Last year, between second half of April till almost, I would say, end of June, we had Pahalgam, we had Operation Sindoor, and then we had an airline accident. So the base was much lower. And the demand continues to stay robust. So if the base is lower, demand is robust, then you see exponential growth. But it's not that that this is going to be like 20% plus every month going forward. What we have guided for, we believe in the 12 to 14% for sure. And if none of the crises come our way in the rest of the financial year, then it could go even north of 14%.
I like that line. If there's no more crisis in the rest of the financial year, I think everyone is praying for that right now. If I take the base effect out of consideration and then you look at what has been happening in the last couple of months, what has been the extent of impact of the geopolitical crisis?
It's very difficult to judge what exactly is because of geopolitical. Of course, the number of foreign tourist arrivals, whether business delegations or tourism-driven demand, that is declining. At the same time, the domestic demand continues to increase both on leisure as well as business front. So I would say traveling abroad has become more expensive. Airline fares have gone through the roof. Number of airline options have declined, especially those connecting via Middle East airlines like Emirates or Qatar or Gulf. So I think a lot of that has shifted the demand temporarily, but we also know the sector, the way it works, the moment the crisis is over, this will all come back very fast.
Well, very good morning. This is Alex here. I'm just wondering what the implications were for the MICE segment, because midway through the conflict, ultimately everyone was talking about what the Prime Minister said and the call to action to say, hey, you need to cool off a little bit while crude is above 100. What were the implications for that business? And do you see now bookings coming through? Because as we speak, crude is back to 72.
Yeah, there is a disruption, but in our world for the last 5, 6 years, we have got used to these disruptions, starting from COVID, the aftermath of COVID, to, if, as I said just now, beginning of April of last year, to when you entered July, August, September, there was, unstoppable rains, there was landslides. Then came another airline disruption because of various cancellations in the month of December, followed by the war in the Middle East. So I think building resilience in our own sector, building resilience within the companies operating in the sector is something almost all companies are focused on. And I think we remain relatively confident that we have diversified enough by brand, by geography, by various kinds of contracts that we'll be able to mitigate the challenges that come, whether through crude prices or through increase in costs or lesser number of foreign travel, more domestic, more homestays, more a lot of that is happening, but I think at some point it will also settle down. But we are very well prepared and geared for any of these crises.
Yeah, but specifically on MICE, Mr. Chatwal, I just wanted to understand if things are looking better now as things stand, maybe heading into the second quarter. Do you have clarity on that?
We definitely have clarity. If you enter into the later half of the year, we have the BRICS summit happening. We have Prime Minister delegations coming in more and more towards second half because the weather conditions are more conducive to welcoming guests in India. So that's why the second half has always been traditionally stronger. The first quarter was, as you can hear from your own commentary, it's been strong. And I think the Q2 MICE bookings, we have not seen any cancellation. The only cancellation we saw was in the month of May of Indo-Africa Summit, but that was more on the grounds of health reasons, not because of any kind of crisis.
Puneet, good morning. Neeraj here. One thing that while all the large hotel additions are happening, I saw in Bandra there is a small boutique hotel open and there are a clutch of others that are happening. So it's refreshing and interesting to see the ability to experience the Taj brand across formats. How do you see the next 2 years, the split between just the large hotel properties getting commissioned, whether in partnership or otherwise, versus some of these differentiated offerings now becoming center stage for you, if at all?
Yeah, that's a very good question. I think, as I just now mentioned, we've been able to diversify by brand. And the hotel you are mentioning in Bandra is on the Turner Road called the Bandra House. It's a part of the series that we have on our selections platform. I would refrain from calling it a Taj because it's not a Taj. But it's a part of the group, it's a part of the same core values, it's a part of the system. And each of these new offerings under Selections, Vivanta and Gateway have scaled up to more than 50 hotels. Ginger itself is scaled up to almost 250 plus portfolio. So I think what we were not able to achieve in the past as well, maybe 20 years ago, maybe 15 years ago, was scaling up of newer brands. So we've been able to scale up new businesses, be it Cumin, be it Ama in our homestays, almost about to hit 400 villas. Be it small boutique properties like Bandra House, including our newer acquisitions of Tree of Life and Bridge in experiential luxury and mid-scale experiential offering with Tree of Life. I think all in all, we are a well-diversified, well-hedged portfolio moving in the right direction.
And that's something that you mentioned that you wanted it to happen as an institution, a well-hedged portfolio. The question is, again, the second part of my question is FY26, you ended fairly well in terms of how the operational metrics fared up, etc. And then come March and especially during April and May, we've had this West Asia crisis. You have a presence, a decent presence, if you will, in UAE and some of the other Middle Eastern places maybe too. What impact on Q1, if at all, because of that West Asia crisis on revenues, on operational metrics, and does it have a meaningful dent for the rest of the year if indeed supply chains are still disrupted?
Well, Neeraj, we are in a silent period. I can't say much. for the fact that there have been challenges in Dubai. That is true. Not just Dubai, the connectivity from Dubai to Cape Town or to London was also impacted, including our latest opening in Frankfurt. Having said that, and also to Maldives to a great extent, a lot of people connected to Maldives from Dubai using Emirates. So I think there is this kind of disruption happening all around throughout the year. We remain in our guidance that we have provided to the market, 12 to 14% growth of top line, and there is no change on that. I can even expect an improvement. But that depends when the crisis is over. Our not like-for-like growth remains very strong. We are well poised to open 50 hotels this year. This is also what we have already conveyed to the market, and 50 hotels means opening a hotel a week, not signing a hotel a week. And our new businesses are doing fairly well in terms of a CAGR of 25% on top line and a 35% plus EBITDA margin. They are very small percentage of the portfolio, but our pie is becoming larger. So if I say 12 to 14% growth of our top line, we are talking about at an enterprise level of almost like 1,700, 1,800 crores, and on a consolidated basis of 1,200 to 1,400 crores. That is a very significant number in absolute amount.
Puneet, are you seeing any signs of a drag on luxury travel or corporate retreats or that kind of activity right now?
Not as yet. I think it remains robust and actually is showing a good increase. Luxury and upper upscale remain very strong on the domestic front.
I'm just wondering if there is sort of an effect where, because of geopolitical situations, etc., maybe some extent of global travel has been restricted, and then that is seeing a positive impact for you. Are you seeing that trend?
On the contrary, I think that's our hidden upside potential, which we've been sitting on for years, and I keep lobbying for that through various other forums that I lead. Foreign tourist arrivals in India is at an absolute low amount compared to any other country, whether in the region or of the size of our country or of a country which has so much to offer. So I think that is the hidden upside for the sector. Our number of foreign tourist arrivals is sub 10 million when a city of Paris alone gets 25. So there is a huge upside potential that is there for the sector, and I am quite confident that as time goes by, this number is going to rise at some point exponentially for us in India too.
So Chetwal, you briefly alluded to the new businesses, and my colleague spoke about it as well: ginger, cumin, ama, tree of life, right? And what she mentioned is that this portfolio is growing at over 30%. Understandable, as you pointed out, because of the kind of base and the way that you're scaling up. I'm just wondering when that evens out, in your opinion, because you're building a portfolio, these are growing very quickly, and what are the implications for the mix with regard to profitability as well?
More importantly, let's take a step back. I think when Jamshedji Tata formed the company, he called it Indian Hotels Company, and the ethos behind it was to have a hotel for every Indian, because Indians were not allowed in hotels at that point of time. This is way back in 1890s when he had the thought, and the Taj in Mumbai opened in 1903. We have carried the same ethos forward, and today we have an offering for all Indians, for all customers at all price points. So there was a challenge 2 years ago. Very few believed that this would be possible, and if we were getting distracted, but we've been able to build scale and on a capital light model so that we don't have huge value at risk. Now, to come to your question is, what is the possibility of growing exponentially? Yes, we can continue to grow exponentially in these businesses because the investment level, if we were to invest our own money to secure, flagship destinations trophy assets for a Ginger, like we have done with Ginger Mumbai Airport. If we were to do 4 or 5 of those, it's not a huge capital investment, but it gives exponential growth to the brand. So these brands in this segment are very well positioned to benefit with little capital infusion, little talent infusion to keep growing exponentially.
Puneet, at the revenue run rate and the market caps that now you enjoy now for the last 12 to 15 months, they're not new to you anymore because of the last 5-year surge. You kind of define what the sector might do, right? Do you think that overall, all offerings combined, F&B plus room rates plus pricing, etc., all combined, the growth of the last 5 years can be replicated over the next 5? Is that possible at such higher base?
It depends, from whose point of view. I think nothing is easy. Everything is doable. And Neeraj, you have interviewed me a few times. I would always say the best is yet to come.
Okay. I mean, I meant it from a perspective of what you would do, because what you would do would eventually reflect on what the gains for the shareholders would be, right? So simple. How would you see revenues per se? You think it is possible?
I definitely think it's possible. We are doing something new which has not been done before. That is having a brand like Taj, which is getting close to 150 hotels portfolio, being the pride of the nation and a very strong brand. Now, at the same time, we have built Ginger as a brand which should get to 250 plus hotels by not 5 years, but in the next 12 months. I think that is a very solid representation of what is possible with the other brands that are following in our brandscape and are very well poised to make a difference in terms of contribution to the sector, to the nation, and to our P&L.
Well, we wish you all the best for that and more, and we look forward to talking to you during your results, Puneet. Thank you so much for taking the time out and being with us.
Likewise. Thank you. Always a pleasure.
Thank you. Well, that's Puneet Chatwal of Indian Hotels. And interesting, the bunch of offerings. I haven't, but I saw it 3 days ago that there is this Bandra house that has opened up. I really want to go there.
A lot of people are excited about it as well. Okay, some excitement hopefully for Totemment FinTech. It lists on the bourses. In fact, we'll see that listing in a couple of minutes. Ridhima is at the stock exchange talking about the company. Ridhima, what is the Totemment IPO all about and what is expected?
So we are here at NSE and Totemment digital-led insurance platform will be getting listed today on NSE and BSE. The grey market suggests that the company could list below the issue price of 152 per share. Now it is an 883 crore IPO and the fresh issue is over 600 crore is the fresh issue and offer for sale for 222 crore. Now it has been subscribed 1.24 times and the most amount of interest is seen from the institutional investors and the retail participation was around 1.11 times. Now the company has been loss-making despite having a positive revenue, and about the company has collaborated with around 45 insurance companies and it connects the insurance companies, insurers and the customers as well. Now we are here at NSE waiting that what the listing will be for the company, and we can hear the management talking about the fact that they will be using these IPO proceeds for the digital expansion, creating cloud infrastructure and also increasing their presence. And they are they are also in around a lot of B30 cities, and they would be continuing to expand and make sure that the insurance now the listing is just about to start, and the company aims that they will expand to the B30 cities.
Yeah, Ridhima, I think there's a competition between how loud you can speak and the person who's leading into the listing. So then let's just cut in to that listing shot.
It's got listed.
Less than 15 seconds away. All right, everyone. Less than 12 seconds. Okay, here we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
went down as the grey market had talked about. So Turtle Mint has had a tough start. But let's see how it goes. We'll take a very short break. We have a lot of exciting stuff lined up on the other side, including a conversation with Sanjay Mukim. You shouldn't miss it. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn?
Welcome back. You're watching India Market Open, and the equity market's just about lackluster this morning. That's a word to describe it. It's flat for the benchmark Nifty 50, and the broader markets are losing a tad bit of ground. That underperformance from last week continues with 0.2% of a cut for the mid-cap index. The small-cap index also looking just a tad bit weak, 0.33%. Just pull up the advanced decline ratio, because at the start itself, within the first few minutes, you had a bit of a gap between the advances and declines. If anything, that is closed a little bit. So let's see if that continues over the course of the session. However, advances continue to outpace declines continue to outpace the advances. But a sector that has been losing ground now for 4 weeks in a row, and more than that actually, is the IT space, and for good reason. Brokerages have actually, despite the drop in value, turned cautious and largely negative on the IT sector. Jasmeet joining in to talk about why. Jasmeet?
Well, Alex, thank you for that and very good morning. As rightly said, brokerage have been bearish on IT as a sector, but this is for the first time when we have seen top 3 brokerages coming out and cutting the target price of most of the IT pack. Well, starting off with Morgan Stanley on IT. Morgan Stanley roughly cut about 23 to 25% of its target price on top 5 IT firms, starting off with TCS, where they also downgraded this particular counter to Equivay and cut nearly 23% on this counter. And the new target price is roughly 2,200 rupees. While they've also cut mid caps, something like like LTM, Cyient and Tata Elxsi. But the interesting one is the Coforge. They have maintained the same rating on the Coforge, but they have also increased the target price of roughly 6%. So they have been bullish on Coforge for a while, and now again they have increased the target price. Now if you look at the commentary, they see further room to downgrade from here on. If they see the growth doesn't cycle well for the companies, they might further do the rate cutting for them. While they also make a note that the TCS is at a premium when you compare to Accenture, because Accenture has various major downtick because of the result. So that's the reason why they see the entire IT pack being high on the valuation. That's why they're cutting the valuations of all the IT pack. While they also prefer something like Infosys and TCS over Wipro, while they prefer TechMahindra and HCL Tech in the large caps. While if you look at the overall mid cap size, they also prefer emphasis and Coforge in the ER&D space. Now if you look at the City on IT, even that has cut the brokerage note as high as 80% of the target price for HCL Tech and maintained the stance in neutral. Now if you look at the other key counters, they have also hiked to target prices for mid caps, where they are being bullish on the mid cap, but on large cap they are still cautious. Now we also have Goldman Sachs. Now this particular entity has also cut the target price of top 3 IT firms by almost 11%. They say HCL Tech down by 11%, Infosys target price cut by 11%, so has TCS. Now what they say is the overall stance of the IT remains neutral to negative at this point in time. They mark this year to be the 4th year of no growth, and they also expect the Q1 to be muted while the Q2 to be weak for the most of the IT companies. So far it's a wait and watch how does the Q1 pans out going ahead, given 9 July is when TCS will come out with the Q1 of FY27 results.
Okay. Thanks for that, Jasmeet. Now let's move on to the next piece of news. RPSG, a group, is restructuring healthcare via acquisitions, mergers and a 400 crore business transfer to create a focused vertical. Varsha has details. Varsha.
Well, they're doing 3 things. One is, of course, they are doing acquisition, then they're going to merge the company, and so overall it's an internal restructuring that they're doing to create a special or specialized healthcare business which will be into the listed company. So first is, of course, acquisition, wherein they've acquired 100% stake in Clarionics Healthcare, which is a newly incorporated company which becomes a wholly owned subsidiary for the company. Currently, if you see, the total cost of acquisition stand at around 1 lakh, because currently the company is doing no revenue. Well, what this company will do in future? Well, Clarionics will run healthcare operations, which includes hospitals, nursing homes, and will become RPSG's main vehicle for healthcare expansion. Then on to the merger, Woodlands Multi-Speciality Hospital will be merged into RPSG Ventures. The revenue for FY26 stand at around 250 odd crores with net worth of around 326 odd crore, and RPSG will issue 500 preference shares for every 1 Woodlands share, which brings an operating hospital business into listed company. And then after merger, hospital and nursing business will be moved into Clarionics, and the entire hospital business has been transferred to Clarionics at around 400 odd crore. So overall, they are actually doing an internal restructuring to create a healthcare company. Now this will allow focus management and better capital allocation, and this will also lead to a different healthcare company which will be a part of RPSG, which is a listed one.
Okay, thank you for that, Varsha. And time for our special in-depth analysis. Mid and small cap indices have outperformed the Nifty, and analysts see up to a 48% upside in select names with strong earnings growth visibility. Mahima is joining in with what some of those opportunities could be. Mahima.
Right, Tavana. So if you take a look at how different indexes have recovered from their lows that we saw around March and April, Nifty has recovered around 8% odd. The mid cap 150 has recovered over 18% odd, and the small cap 250 has recovered over 25% from its lows that we saw in March and April. Now, if you take a look at specific names, what I've done here is we've tried to take stocks that at least 10 analysts cover and stocks with highest return potential as per the Bloomberg estimates, and Swiggy tops that chart in the mid-cap space with a return potential of 48%, followed by ICICI Prudential Life at 37%, UPL with a return potential of 29%, Dalmia Bharat with a return potential of 29% as well, and then Info Edge with a return potential of 28%. Now, if you take a look at the outlook that each of these companies have given, Swiggy has said that they will grow at a CAGR of 18 to 20% Q1 FY27 is when they're expecting a contribution break even. For UPL, for ICICI Prudential, The expectations are that FY27 could be, the management has said that we will take a cautious approach, seeing, everything that's happened, but we'll see as to how FY27 will pan out. They've not given any specific guidance, but for UPL, revenue growth anywhere between 10 to 14% and EBITDA growth of 14 to 18% for UPL. Dalmia Bharat to reach around 75 MTPA by FY28 in capacity. This is, tall targets given by the company. For Info Edge, the company, will turn cash generative in FY27 is something that the management has guided for. Now, similarly, in the small cap names, if you take a look at the top 5, highest return potential names, you have Aditya Birla Lifestyle with 46% of return potential in the next 12 months, followed by Sagility with 43%, Aditya Birla Real Estate with 41%, Brigade Enterprises with 37%, and Affle 3i. This was something that a lot of brokerages had in their 2026 list as well. For Aditya Birla Lifestyle brands, 13% revenue CAGR till FY30 is what the management has guided for. For Sagility, if you take a look at the outlook, double-digit growth plus they're looking at M&A opportunities to boost growth going forward. For Aditya Birla Real Estate, the management is already has a land bank worth GDP of around 72,000 crores. So that's the growth that they pencil in going forward. Brigade Enterprises, at least 20% growth expected in FY27 pre-sales, at least is the word that they've used. And lastly, for Affle, overall 20% organic growth is what they're expecting for FY27, and 23 to 25% EBITDA growth is what the company is expecting. So these are some of the names that you could keep your eye out for in the mid cap and the small cap name that still have a lot of return potential going forward.
Got it, Mahima. That's an interesting list. All right. Keep an eye on that. In the meanwhile, let's stick with the big story today, and that has to do with HDFC Bank. A key leadership decision looms at the bank, and Piyush joining in with what he's heard on the latest. Piyush, what are you hearing with regard to the CEO appointment?
So we had earlier also reported that the bank's board is backing Mr. Jagdishan for another 3-year term, and with the fresh finding, the positive review that the external legal firms have given with regard to the resignation statement by former chairman Mr. Atanu Chakraborty, the prospects of Mr. Jagdishan getting another 3-year tenure brightens quite a lot. Now the bank has to act fast in terms of recommending his reappointment because his current term ends in October. RBI prefers that bank send the whoever is the successor or incumbent, their candidature has to be represented to the RBI before 4 or 6 months of the completion of the tenure. So timing aspect is very critical in HDFC Bank's case. The bank, like we earlier reported, will first appoint a permanent chairman, following which the CEO's reappointment recommendation will go. The chairman is understood that they will have a say in terms of reappointment of Mr. Jagdishan. And talking to NDTV Profit, Mr. Jagdishan himself had earlier mentioned that he is keen on continuing as the bank CEO, and with external firms not specifically finding any negative findings against Mr. Jagdishan, the chances are that his reappointment will likely happen very soon, very quickly within this month itself.
Well, thanks so much for that, Piyush. And this brings so many large cap names firmly in focus for the second half of the year, right? You have HDFC Bank in focus. We know Kotak has had a CEO step down, but beyond banking, the Reliance Group with some of the one IPO prospectus filing as well, which could be in focus. NSC comes out with listing and lots more. Sanjay Mukim, head of India Equity Research at JP Morgan, joins in right now with his thoughts on the markets and more. Sanjay, great having you. Thanks so much for joining in. I want to ask you about what banks are doing too, but per se, firstly, you would have had a chance over the course of the last 2-3 months to reflect upon, talk to clients, etc., and what is it that could happen to flows and to Indian markets prospects. How do you pencil them for the second half of the year?
Good to be on, Neeraj. Thank you for having me. There are 2 or 3 things I think that were top of conversation as far as the Indian equity market was concerned. One, of course, was the oil shock. And thankfully, a lot of that has been handled. Oil is actually fallen faster than any of us had modeled, which is a big relief. And this has direct implications for the volatility in the currency. In combination with what the RBI has done, I think the outlook for the currency has become far more stable than it was just a few weeks ago. The second challenge, of course, for Indian equities is the fact that there is a lot more excitement in North Asia, especially the global tech cycle still remains at least visibly strong. And there's a lot more that fund managers can invest their time in overseas if they have to, allocate time between one market versus the other. So that strength in the tech cycle obviously drives attention away. But there's actually a third problem, Neeraj, and I do want to highlight, not a problem really, but the opportunity cost of capital is too high. 10-year bond yields in the US are 4.5%, overnight rates are reasonably high. And when you do look at sending money to EM, sending money to India, you have to worry about the opportunity cost of capital. So while one issue has been addressed, the second will probably peak out at some point, which is tech investments. The third, which is the opportunity cost of capital, likely to stay for some time. And I don't expect that in that sort of backdrop, you will get a whole bunch of money coming into India in any rush.
Okay. So therefore, what does all of that mean for prospects? I mean, per se, we've had, 7 quarters of near flatline performance for the benchmarks or the Nifty, but while the broader markets have done well, sectors have done well, could that continue to be the template for the second half, Sanjay? Could we still have rank winners even if the Nifty flatlines?
Well, first, the first answer I gave you, Neeraj, was a very flow-based answer, right? What we expect, will relative investors look at India or not? But what I worry about more is whether the asset looks attractively priced or not. And this is one of the few instances where we can actually say that Indian equities valuations is reasonable, especially if you look at them compared to global equity and global asset classes, etc. So one must dampen, I guess, any caution or any bearishness one has with the price element as well. And given the fact that India is a duration asset, that you can happily buy a bunch of large caps and patiently wait for the earnings to compound. I mean, one of the things we will not debate is that India has, or Indian market has, multi-years worth of earnings growth at least. So then that now available at a reasonable valuation, whether it is on headline Nifty or whether it is on a select bottom-up large cap stock basket, that makes you a little bit more positive. I don't see any specific risks for second half, other than the fact that we might get a little bit more earnings downgrades like we do every year.
Sanjay, very good morning. Alex here. Very difficult to predict. Obviously, it's the weather, but a lot of people talking about not weather but climate, and you're talking about the implications of lower dispersion of rain more than the long period average decline, right? 90% or thereabouts. What will that do to consumption? Because as things stand right now, based on the indicators, it still seems relatively robust.
Alex, there are multiple sort of suggestions here. One, it is a material issue, right? For the economy not to have enough water for agriculture can accumulate into an impact over a period of time, right? Now, of course, if you look at we are all hoping that it normalizes, dispersion gets a little bit better from where it is today. But we are starting off this season with relatively high food inventory, with relatively high water levels in our reservoirs. So hopefully it doesn't cascade into anything material now. What we see that typically when you get back-to-back El Ninos and when you have 2 years worth of stressed rainfall, then it starts to show up in numbers more materially. I don't expect either a major CPI swing or a GDP downgrade in the next few months on the back of what is happening with the El Nino at the moment, right? Of course, we all hope it gets a little bit better. But the other problem, Alex, is that the representation of consumption of the bottom half of the economy in listed equities is not very high, right? So you can't find too many companies which have, or too many large cap companies which have material exposure to the cohort that will be directly impacted by weaker rainfall. And therefore, what you're saying is correct, that if I talk to the listed set and you go ask them, are you seeing any impact to volumes? You will not get any.
Yeah, it's a very interesting look at that. So therefore, let me ask you about one of those sectors. And in the banking space, we're looking at credit growth at 18%. Now, I'm wondering whether you're looking at it based on what segments are doing incredibly well. And I've not looked at the internals to say how much of it is gold loans, but one would assume that looking at the trajectory that has had, it would be a significant contributor to that growth. So are you seeing that at face value? Are you positive on that? Are you taking it with a pinch of salt?
Well, to flip it around, Alex, if you're thinking of policy stimulus to the Indian economy, that's probably the only stimulus we have at the moment, right? We can't expect any lower rates environment. We don't expect any major fiscal stimulus because, frankly, the government's done its bit post-COVID, and there isn't much headroom in the budget to try and stimulate. And it is probably not advisable for government to expand deficit in this environment to begin with, right? So from a stimulus point of view, the only thing that you could possibly drive an uptake is the acceleration in credit. Is 18% sustainable? Not with 10% deposit growth, right? So at some point in time, we'll have to start to see those catch up. And there is a big economic debate on which is the cart and which is the horse. Will accelerated credit itself drive deposits going up? We will see. But there is the gap between credit and deposit growth at the moment on printed numbers is fairly high. I do expect that with reduced pressure on the currency, that monetary policy could remain neutral to possibly a little bit accommodative, especially on the liquidity front for banks, and that should facilitate stronger credit growth at some point in time. Prior to the Middle Eastern conflict, we were arguing that the Indian economy was on a bit of an uptick, a cyclical uptick. You remember we were talking of the whole consumer stimulus that the government was focused on, and that was catalyzing a little bit of capex-driven demand. We'll have to see if that restarts post-conflict again. But my personal opinion, I think credit is more of a supply side issue in India. And if banks are willing to lend, they should always find takers.
Sanjay, good morning. Tamanna here. All of this uncertainty over two of the largest private banks, one on whether the current CEO will remain, the other one on who comes in place of the CEO. Does that concern you as an investor, especially when it comes to banks? Banks in particular react very, very closely and sensitively to what's happening in the corner room, in the corner office. How are you looking at some of these developments?
Well, I tend to agree with that assessment, that especially for the financial sector, the market focuses on leadership and management stability more than it does for any other sector. But one would like to believe, Tamanna, that these banks are institutionalized, that they have a lot of capacity to execute beyond just, let's say, a single seat. And if I would argue that you get adverse stock reactions because of whatever happens to any of these large cap financials, then it may become an opportunity for you to look at them for the medium term. Right? But again, I think your assessment is correct. People do tend to focus on leadership at banks more than they do elsewhere.
Just because, you said earlier that you would happily buy a bunch of large caps. Would IT companies make the cut in that bunch of large caps?
I don't think it'll be a surprise if I say that we are more careful on the IT outlook. Of course, the stocks have come off. Multiples look, on headline basis, they look attractive. But the challenges on growth are difficult to answer at the moment. So if there are multiple scenarios you can paint, not just on the fact that AI can have a big overhaul in how services industry is catered across the world, but also that we're going through a bit of a cyclical downturn in IT anyway to begin with. So there are all kinds of scenarios you can paint for Indian IT stocks for the next 2 to 3 years. And given the fact that one cannot answer these questions with any degree of certainty, it becomes difficult to advise being overweight IT or just on the multiple at the moment.
Therefore, Sanjay, just to bring all of this to conclusion and to wrap things up, you've described various aspects as to what you're looking at, right, with regard to Indian corporate. What sector do you anticipate will see a higher degree of growth? And on a blended basis, there is a thesis that the broader markets or companies in the broader markets will see a significantly higher rate of earnings growth. Have you pegged it at that?
Well, look, I think from a growth point of view, amongst the large caps, the banks should continue to compound, and they should benefit from the fact that nominal GDP is likely to hold up even if the real GDP is coming off. Plus, of course, credit growth, as we said, is stronger than we had expected earlier. So the banks, the combination of growth and multiples continue to look attractive, as it were. Historically, if you go back pre-COVID and you look at the basket of mid caps versus large caps, the broader basket of mid caps doesn't tend to outperform large cap, or has not tended to outperform large caps on growth, right? And the way I think about it is that mid caps or smaller companies are a beta to overall economic growth. When you have acceleration in the economy, then of course mid caps have greater headroom to grow and they tend to grow faster. So to just simply extrapolate that is a little bit early, I would say. And until we see acceleration in the economy, I wouldn't be confident that mid caps as a basket will necessarily deliver higher growth than large caps.
That's well put. Sanjay, as always, an absolute pleasure speaking with you. Thank you so much for taking the time.
Thank you.
All right, so it's not necessarily a very exciting morning for the equity markets, but we've had some great conversations.
Yeah, it's not a bad one, at least, all things considered.
For the markets, you mean?
Yeah, not an exciting morning, but not a bad one
not bad.
In that sense, with all the turbulence which has been coming in. But we'll wait and watch. There's a nifty rebalancing which will take place in the second half, so watch out for that as well. But for now, that's all the time we have from everyone here and everyone who helps put the show together as well. So stay tuned for all the action on the other side. Ask Profit up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
Hello and welcome to NDTV Profit. You're tuned into the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin nears $59,000 due to liquidations. Clarity Act now eligible for Senate floor. India's finance panel to meet RBI on crypto on July 2nd. Hong Kong sets stablecoin timeline. Well, Bitcoin has slipped close to that $59,000 mark amidst fresh liquidation. Now the near-term outlook now depends on whether Bitcoin can hold that crucial $58,000 to $60,000 support zone. A reversal in weekly ETFs flows could help improve the sentiment and support a recovery. Well, the US Digital Asset Market Clarity Act has been placed on the Senate's legislative calendar, marking another step toward a clearer regulatory framework for the crypto assets. However, lawmakers still need to resolve key issues including anti-money laundering rules and safe harbor protections for the developers before the congressional recess. India's Parliamentary Standing Committee on Finance will meet the RBI on July 2nd to discuss the future regulatory framework for crypto. The panel is also scheduled to engage with the Institute of Chartered Accountants of India on the same subject, with the discussions likely to include crypto taxation. And Hong Kong has confirmed that its first regulated stablecoins are expected to enter circulation between the middle and second half of 2026. Now the rollout follows the approval of issuer licenses for 2 bank-backed institutions earlier this year. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely the names, if you look at it, Bitcoin, Ethereum, XRP on the negative side, Solana slightly positive, up 1%. But the most important level to track would be for Bitcoin, where the support comes in between $58,000 and the resistance comes in at $62,000. Well, now is the time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The crypto strategy, the market outlook remains under bearish pressure. This is for the second straight day. You should be looking at the support level for Bitcoin that ranges between $58,000 to $60,000. On these levels, the leveraged long positions have been squared off and the recovery focus will definitely be there on the ETF inflows. Now remember, the important number is $64,000. That is the 50-day EMA for Bitcoin. If that reclaim, then it can signal a potential trend reversal. Now as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me as always is Puneet Zaveri, and this is a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. But while you do that, let's take a quick look as to how the markets are doing at the moment. The Nifty 50, well, it's above the 24,100 levels for now, an uptick of around 0.2%. A significant recovery from the day's low point is what we've seen for the Nifty 50. If we can try to pull up the heat map and see as to what are the counters that are fairly doing well. You have Dr. Reddy's topping that chart up 4%, followed by something like a Trent, which is back in action, up by about 2.5 odd percent. Cipla is something that's also doing fairly well. So pharma names back in action, up 2.5%. Max Health also up by about 2.4 odd percent. Eternal is also seeing gains of about a percent. But on the flip side, of course, you have Kotak Mahindra Bank, which is down by about 2 odd percent. M&M, which is down 1.4% as well. Interglobe Aviation is where we're seeing profit booking, down by about 1.4%. And Eicher Motors is also seeing a downtick of around 1.3 odd percent. So a lot of auto names are seeing profit booking today. You have Eicher, Bajaj Auto, as well as Tata Motors that are also in the red. But let's try to pull up the Bank Nifty. The Bank Nifty is flat all as we speak, hovering around the 58,100 levels. And if you take a look at the advanced decline ratio as well, let's try to pull that up, because that explains as to how the broader end of spectrum is looking like. In terms of the overall advances, you have around 1,200 odd advances versus that of almost 1,400 odd decline. So more skewed towards the sellers, and that's reflected in the mid cap and the small cap index, because both of them are underperforming the benchmarks. The mid cap 150 is down by about 0.1 odd percent, and the small cap 250 is down by about 0.2 odd percent. Let's quickly pull up the BSE 500 before we go on to all your stock related questions, and also welcome in our guest for the day. There you go. There's Zydus Wellness, which is topping that chart, up 5.4%. A Nifty 50 name DRL on that list as well. Finolex, TTK Prestige are some of the other names that are doing fairly well. But of course, Persistent Systems on the back of the acquisition down 8.6%. Astral, Rajesh Exports continues to be under pressure. Latent View, HFCL are some of the names that are also seeing pressure today. HFCL for a change in the red. So that's with regards to where some of these names go. But let me welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Gaurav Sharma, Associate VP and Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. The first question that we have is from James, who's asking about IRB Infra. He says that he wants to take a look at this from a long-term perspective, whether it makes sense to make an entry right now. Saurabh, what would you recommend? A very good morning to you.
Hi, good morning. Good morning, Gaurav. See, in my opinion, infrastructure stocks are not doing well, and this is not the best of the lot. In fact, if you look at the other names like KNR Infra or HG Infra, these companies are not doing good, because there is a concern with respect to the order book, and the cost escalation is also happening with these companies, leading to lower profitability and lower margins. So in my opinion, I think it is best to avoid.
That view, Saurabh, and welcome to the show. But the next question, and a very topical one, that is in Waaree Energies. Our viewer is asking if it's a good time to buy into Waaree Energies at the current price juncture. He's not mentioned his name. Okay, Royston from Maharashtra is asking us this question. Now, Saurabh, actually, let me just stick with you, because yet again that some kind of regulatory impact and a clarification coming in from the company. Now, from the last one that happened, I think it's just about a couple of months ago, stock recovered through that as well. Do you feel that this is another one of those moments that investors should look at now? How are you viewing, firstly, the clarification from the company, as well as just a view on the stock also?
See, from the long-term perspective, yes, these corrections do give opportunity to jump into these stocks and buy in a staggered manner. With respect to the business and the future outlook, looks quite interesting. And if you look at on the valuation side, they have come down very much with respect to their highs in before some quarters. So, in my opinion, looking at the operational matrices, the growth that company is witnessing, I think he can buy.
All right. The next one that we have is coming in, and this is a very small counter, Gaurav. Advani Hotels is what one of our viewers is wanting to know about. Lalita from Chennai has purchased around 600 shares of this one a year back, and she says she's not seen any upward moment on this one. It's a 480 odd crore market cap company, so a micro cap company. But any view that you can give on the charts?
Hi, Mahima. Very good morning to you. Morning to Puneet and Saurabh as well. A very small company, sub 500 crores of market cap. We do not track it, but as far as charts are concerned, they are looking weak. It is a clear-cut underperformer, hitting lower lows for quite some time. No signs of any recovery coming in, and it also trades on very thin volumes as well. So better to avoid these kind of stocks. Sometimes get stuck, and they are stuck in a range for many years.
You, Gaurav, and good morning to you as well. The next question on Supreme Industries, G. Srikanth is actually holding these shares bought at 3,300 rupees per share. He's willing to wait for a year. Stock's down 4.3% today. But actually, Saurabh, let me also club this question with Astral as well. Let's because you've seen that chemical demerger announced by the company, but the move, although unexpected, the share price movement is also very unexpected, right? I mean, an 8% downtick on a counter like Astral. I mean, they're demerging the lower margin business. You would expect that the company, at least the share price would, if not being rewarding, be largely flattish. But how are you making sense of the move on Astral as well as your view on Supreme Industries as well?
What is happening in the current market, that wherever there is a some kind of positiveness, market is not minding giving higher valuation, but there are some areas where there are apprehensions about the earning growth prospects, and whenever these kind of news usually comes, people take opportunities and make offload their positions. So this is happening in general. If you look at from the broader market perspective. Now, talking about today's movement, it is very hard to predict. But with respect to the Supreme industry, I feel that the crude coming down may offer some kind of a cushion with respect to the raw material cost. And the stock has substantially come down from its previous highs. In my opinion, I think the downside is quite limited. I think he should wait for the June quarter earnings, at least.
Okay, all right. The next question that we have is on Avenue Supermarts. Vijay from Chennai wants to know the short-term target and stop loss for this particular counter. Gaurav, what is it that you're seeing on the charts?
Stock is looking good. A rise towards 4650 in the immediate near term. Thereafter, 4650 to 4800 are the targets that one should look at. Take a stop loss at 4125 on closing basis.
Got the view. Sandeep Patil from Mumbai is asking us the next question, and this one's coming on Tata Motors, the passenger vehicle business. He's bought shares at 360, but holding almost 4,500 shares. So I hope it's not the only big position you hold, Sandeep. But Gaurav, he's asking a short-term view on the stock. We've seen, of course, on the fundamental factors, the investor day go through both for the India business, the JLR business as well. Anything on the charts that you're seeing, and what are some of the levels that you're watching out for?
Pune stock is not at all looking good as far as charts are concerned. In the immediate near term, I see it sliding towards 330 and thereafter towards 315 odd levels. So from a short term perspective, I'll advise him to reduce the position or at least take a stop loss at 340, because beneath that 330 is coming and 315 is also pretty much likely.
All right, I think we've got our first caller for the day. Venkat is calling us from Chambal. Venkat, a very good morning to you. Sorry, he's asking about Champa Fertilizers, I believe. Venkat, a very good morning to you. Go ahead, ask your question.
Hi, good morning.
Good morning.
So I have 68 Chambal Fertilizer shares at the average price of 616 rupees, around 24% less. Should I book loss or can I hold the stock? I think it's been one and a half year I'm holding this.
Okay, Venkat, got your question. I believe you saw the fundamentals while buying the counter.
It's one of financial advisor given this recommendation.
Okay, all right, okay, got it. I'll take this up with Saurabh then. Saurabh, what would you recommend on Chambal Fertilizer, and any comment that you have to make with regards to, not getting into a counter, just basis somebody's advice?
In my opinion, the company is quite good. If you look at the last quarterly earnings in the March quarter, the company posted 18% kind of a growth year on year. This year, we are going to witness deficient rainfalls, and generally what happens in the deficiency, farmers' use of fertilizer do increase substantially. So in my opinion, I think in the best case scenario, the stock price will not go down. And in my view, if the usage of fertilizer will increase, Chambal Fertilizer will surely make the maximum advantage out of it. So in my opinion, he should hold.
Got that view, Saurabh, but let's go across to another call from West Bengal, and Avi is dialing in for a stock query. Avi, good morning, welcome to the show. What's your query?
Hi, good morning, everybody. So I've got 1,000 shares of HDFC Bank bought at 777.
Okay.
So I'd like to know what could be, the target for the next 1 year, and if it's a good stock to hold for, currently.
Got that view, Avi. But Saurabh, on HDFC Bank, I don't know if 1 year is a long enough time frame, right? Because a structural story, most certainly. But how are you viewing it currently? Because you, of course, had a lot of news flow coming through over the weekend as well. Any view on the stock now?
See, what is happening in the last 1.5 or 2 years in institutions, FI have sold Indian equities quite a lot, and BFSI having higher share in the Nifty 50 has felt the brunt. And among the most sold stock is the HDFC Bank. So it is the institutional selling. The reduction in the MSCI weight has resulted of such a performance. With respect to the balance sheet is quite pristine, and the company is certainly on the growth path now after the merger consolidation has happened now. And yesterday the news has already come that the bank has been given a clean chit on some allegation of the ongoing member of the board. So in my opinion, yes, it is a good hold. I would suggest him to hold for a long time.
Okay, all right. The next one that we have is coming in on defense names. Our viewer wants to go ahead and invest around 2 lakh rupees into defense names. And do we have the name of this viewer? Okay. No, we don't. But basically, he or she wants to go ahead and invest 2 lakhs in defense name, either BEL or Bharat Forge or any particular name that you have in mind. Sort of from a long-term perspective, what would you recommend?
I think Bharat Electronics does make sense, the one you have talked about. Many of the companies actually have not been able to convert their order book into the bill. I mean, the revenues missed and the margins missed in the of late earnings. That happened with the HAL, that happened with the Bharat Dynamics. But I feel that slowly and gradually accumulating stocks will make sense. So my preferred picks will be Bharat Electronics and Hindustan Aeronautics.
Got that view, Saurabh. But the next question coming in now, and this one's from Ravi from Mumbai. He's holding on to Zaggle Prepaid, bought at 330 do. So continues to be in a loss, asking if he should average down at this point of time or should he just continue to hold his current holdings. What would you recommend here, Gaurav? It's been a stock that's scratching a lot of heads essentially at this point of time. What's your view?
I don't find comfort in holding this stock. It is a clear-cut underperformer, a clear destructor of investor wealth. It is better to get rid of it as soon as possible.
Okay, all right. The next one that we have is from Nagababu, who's writing us from Andhra Pradesh. Wants to know if this is a good time to enter into one of these names, either Tenneco Clean Air or Bellrise. From a slightly long-term perspective, Saurabh, what would you recommend?
I think both stocks have run a lot and the valuations have risen. I think better to add both the stocks, but wait for the corrections and buy in a staggered manner.
Got that view. So Tenneco continues to trade around that 580 odd mark yet again. Bellrise, of course, risen sharply from its IPO price of 90 just about 12 to 18 months ago. Next question on GRSC. Our viewer Siddharth from Noida wants to know that if it's a good buy at the current price and continue to hold for the short term next couple of months, what would you recommend here, Gaurav? Is it a good time to buy into GRSC right now?
From this space, I'll suggest him to go with Mazagon Dock. We are having a bullish view with a buy report on that stock, so I'll consider Mazagon Dock at the moment.
Okay, all right. The next one that we have is coming in on the recently demerged names from Vedanta. Our viewer Balaji from Chennai says that he has investment of around 20 lakh rupees in Vedanta Iron and Steel. And he wants to hold it for another 1 year. Should he continue to hold, Saurabh? What's the view?
We are positive on the metal space, both ferrous and non-ferrous. I think if he is holding this stock only, that doesn't make sense. I think he should diversify his investment within metal space. So I would recommend him to add companies like JSW Steel or maybe Jindal Steel.
Got that view, Saurabh. But the next question coming in from Dr. Raju. He's holding on to NSDL for the last 1 year, but he's bought these shares at 991 rupees per share. So currently sitting on a loss on that bet, asking if he should still continue to hold this one. Gaurav, what would you recommend? Because this one yet again post that listing bump up has been a rank underperformer. Is there any chance of his buying price coming back?
Firstly, he should maintain a stop loss at 800 rupees. Any sustainable rise would be possible only when the stock is able to surpass and sustain above 950 mark. Because this is the broad range in which the stock is consolidating from some time. Although yes, it has been a clear-cut underperformer, hitting lower lows since its couple of days. After the couple of days rise post its listing, it is just the flare has faded out completely. So take a stop at 800, and if it manages to go past 950, then only some hopes of recovery. Otherwise, it is a clear-cut exit.
Right, so that's the view coming on in STL, but it's time for our first rapid fire round. Gaurav and Saurabh, you both know the drill. The first question that we have is from Akash, who's writing us from Bengaluru, asking about Sirma SGS. From a medium-term perspective, should he go ahead and buy it at the current levels? Gaurav, what's the view?
Yes, it is looking good. EMS space has started performing. Yes, he can consider buying.
Indus Towers bought at 404. Gaurav by a viewer, Vaibhav from Bangalore. He wants a 6 to 9 month view on the stock.
Not looking good. Better to avoid.
Okay, the next one is on Azad Engineering. This is from Mr. Chadda, who's holding 15 shares, bought at the levels of 2114. Continue to hold, exit, Gaurav?
Hold as of now and utilize dips towards 800 to add more.
Okay.
On Tata Power as well, Gaurav, Rakesh Gupta has bought shares at 383. He's holding 600 of them. What should he do with these stocks now?
I don't expect a steep immediate recovery. Further decline towards 370, 360 is pretty much possible. Hold only if you have a longer term view.
Okay, the next one is on HAL. Our viewer is bought it at the price of 1856. 40 shares is what Arita Ghosh has been holding. Continue to hold, Saurabh, or book profits?
Hold.
Next one coming in from Prashant. He's holding on to Pine Labs at 156. Saurabh wants to know if he can continue to hold and accumulate more at the current price.
It's a void.
The next one is on ITC. Prashant from Lucknow is holding 500 shares, bought at the levels of 299. Wants to know as to what should be the next course of action for him. Saurabh, what would you recommend from a long-term perspective?
Better shift to ITC hotels.
Restaurant Brands Asia bought at 76 rupees from Ram. Saurabh asking what he should do with his 3,500 shares.
You can hold and wait for June quarter earnings.
Okay, Sansera Engineering, from an investment perspective, is this a good stock to buy at the current price? Our valuation is justified, is what Ishwar from Kolkata wants to know. Saurabh?
It's a good stock to buy.
All right, okay, so that brings us to the end of this rapid fire round. Saurabh as well as Gaurav, of course, thank you so much for helping us answer all those queries. Saurabh, of course, will stay on, but Gaurav, thank you so much for taking out the time in the last half an hour and answering all those queries for us. Let's take a quick look as to how the markets are, of course, doing. Let's try to pull up the Nifty 50 since the last time we saw. In terms of where the markets go, the Nifty 50 right now is has turned negative and now trading just below the 24,100 levels, just 50 odd points of an uptick is what we're seeing from the 24,000 levels. Let's also try to pull up the Bank Nifty and see as to where that chart has gone. It's down by about 0.2 odd percent. A downtick of around 100 odd points is what we're seeing on the Bank Nifty. Let's also try to pull up the mid cap and the small cap index. The mid cap 150, they were already trading in the red, but now at the day's low point for the mid cap 150, down by about 0.4 odd percent. So is the small cap 250, which is down by about 0.4 odd percent. Off from the day's high point, but at least slightly away from the day's low point as well for the Nifty small cap 250. Let's pull up the sectoral heat map, wondering as to what that heat map is looking like and see as to what sectors are doing in trade right now. You have pharma, of course, leading that pack up by about 1.8% and healthcare also doing fairly well. Metal is also in the green today, but on the flip side, auto taking the most hit, down by about 1.4% and Nifty IT also down by about 1%, as well as Nifty Defense down by about 1%. So that's with regards to where the markets go. With that, of course, time to slip into a very, very short break, but don't go anywhere. We'll be right back answering more queries on the other side, so do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already done so, do start sending in your queries on WhatsApp. You can also call us on the number that is flashing on the top of the screen. That's the landline number to call us and speak to our guest as well on the stock related queries. But before we start taking those, just want to highlight a couple of key mentions as well, because Persistent Systems now down the lowest it has been for the day. Now 9.7%. So you're seeing sustained pressure being built in on this particular counter, and that is not relenting at this point of time. Also pull up Astral as well. That stock also was down 7.4% as we started the show, now down 8.7% and continuing to see further pressure built on in this particular counter. Look at Vari Energies also. So in the broader markets, we are seeing sustained pressure on these names consistently, seeing some recovery in Vari Energies, but on the other two names, you're seeing pressure being built further at this point of time. So monitor all of these important moves today, because both those counters, of course, buzzing on the back of a big acquisition on a demerger of the chemical business for Astral, but seeing sustained pressure at this point of time. But go across and take your next stock related query. The next one that's coming in now, and it's from Dr. Lavanya from Eluru, and her question being on Kirloskar Bros. It's been essentially the stock of the last couple of weeks and has been on our investors' radar as well. She's bought these shares at 2180, asking what she should do with this counter now. Saurabh, continues to be a counter that's attracting a lot of interest, but do you think these levels are elevated as of now?
These levels are elevated. The stock, both Kirloskar stocks have run a lot on the AI theme, and corrections are inevitable. But yes, the underlying theme is quite great, and the earnings are likely to improve in the next subsequent years. So my sense is, don't panic, but stay invested.
Okay, all right. The next one that we have is on Anant Raj Pratap from Pune, is holding 172 odd shares that he bought it at the levels of 582. Wants to know as to what should be the next course of action for him. Saurabh, we've talked about this counter a lot of times with regards to data center and the way this stock has seen the rally as well. But do you think it's overdone? What should our viewer do?
I think you can put this stock in the category of a hold, because AI theme is still continuing and the company is heavily investing on that thing. So my sense, it is a hold.
Andhra Pradesh is asking a question on Federal Bank, and he's holding these shares at 128 rupees, so almost up 3x from his buying price. Asking if he should still continue to hold this counter or exit. Saurabh, of course, he is in gains of almost 1.6 lakh rupees, and good on him, of course. But what's your view on the stock now? Should he just continue to hold at this point of time?
I think when the banking stocks were selling, the stock stand tall, and on the balance sheet front, it is quite comforting. After the investment coming into the Federal Bank, it is expected that this stock will see surely re-rating, but in due time. So my sense, with good balance sheet and oscillating in a range from last 2-3 quarters, I think it is good to hold.
Okay, all right. The next one that we have is coming in, and this is on Geo Finance. Our viewer wants to know if he or she can make an entry into this counter. Saurabh, what would you recommend?
I think Geo Finance has a business which has a lot of potential, but it will take the business will come into the shape maybe in the next span of next 3 to 5 years. So the stock will continue to rotate in a range the way we have seen from 220 to 280 or 300, and now is it in the lower range. So you can do some kind of a trading activity.
Trading activity could be something that you can look out for, is what Saurabh recommends on Geo Finance. The next question coming in now, and this one's on on HCL Tech. Again, a day where IT continues to be broadly in focus on the back of multiple reports, and HCL Tech is one of them, has slipped now below the 1100 mark. Our viewer Raja from Delhi has bought these shares at 1308. Now, Ajit, let me go across to you. Of course, welcome to the show. He's SVP Research at Railgate Broking. We've seen, of course, this particular counter being one of the casualties of the last few months in the large cap IT space, along with the others. But do you feel that there's sustained pressure now still expected on this counter, or is it good to continue holding? What's your view?
Good morning, Puneet. So Puneet, IT at large, we are seeing that on the rotational basis, the pressure is there. Means we have some of these mid-cap IT names which are holding strong, but today, Persistent is also witnessing severe pressure, and then we have the IT majors which are anyways really under pressure. HCL Tech relatively looks better, means in terms of the price performance, we have not seen any major damage in the last 2-3 months. It's broadly this range, close around 1090, 1250 is what the stock is trading in, and currently we are at the lower band of the same. So possibility of this gradual decline may continue until we decisively reclaim 1250 mark. So if the view is short term, I would definitely recommend to avoid IT for long side position, including HCL. And if the view is long term, then HCL relatively is what we believe can witness a rebound once we see the stability in the IT back. So short term, it's an exit.
Okay, all right. Ajit, just wondering, because just before this query, Saurabh did mention that, Jio Finance could be looked at from a trading point of view. Any views on the charts for Jio Finance?
So Mahima, this band close around 255, 225 is what the stock has been hovering in, while trading below its all the major averages. So it's kind of like a base formation which is going on. For any meaningful recovery, we need to surpass this upper band, close around 250, 55 decisively. Then probably it might make an attempt to retest its long-term averages, close around 262, 263. And then probably a trend reversal. So as of now, it seems like a consolidation or accumulation phase. As long as we are holding 230 mark, we can continue to stay put.
Got that view, Ajit. But the next question coming in now, and let's go across. Take a caller from Hyderabad. Sai is joining in for a stock-related query. Sai, good morning. Welcome to the show. What's your query?
Yeah, good morning. I'm willing to invest 40,000 for long term for 3 years. And I've shortlisted 2 companies, that is Bombay Burma Trading Company, and the other one is IEX. Okay. Can you help me in finalizing one stock for 3 years minimum, I guess?
Got it, Sai. But, Saurabh, let me come to you then, because of course, both very different companies in different segments, but IEX, the regulatory, sword just continues to hang on its head. What would you recommend for Sai to do between Bombay Burma and IEX?
I think, in my opinion, he should avoid investing in both of these stocks. IEX, you have said lately, the monopoly position has already been challenged. Even after the valuation correction, the valuations are looking expensive with respect to the operational growth that the company is experiencing. And with respect to the Bombay Burma, I think tobacco business is seriously in pain because of the rise in cost and the high duty structure. So there has been illicit cigarette trade happening in India, which is seeing good growth. So in my opinion, I think both the stocks should be avoided.
The next one that we have is on Patel Engineering. Our viewer is bought it at the levels of 42 rupees and wants to know from a slightly long-term perspective, what is the target that you can see on this one? Ajit, any view on the charts?
So Mahima, we have seen decent rebound, means the stock has tested its major averages on the weekly chart, close around 35 zone. But now we are seeing a bit of a profit-taking consolidation with lower volume. So it looks okay as of now, and one can continue to hold their positions as long as the stock maintains 31 mark. For next leg of up move, we need to surpass this hurdle, close around 36, then probably around 40, 42 is something, that is his buying price, something the stock might test.
Got the view, Ajit. But the next one, and viewers, you can call us for stock-related queries as well. This one's on Exide Industries, and our viewer, Mr. Rao has asked us this question: if it's a good time to take for fresh entry into the stock. Both been very underperforming stocks, right? Sort of in the battery side, but Exide, with terms of its capex for lithium-ion, has been slightly ahead. Would you recommend that? And is it relatively a better pick, or what's your opinion?
I think it is relatively a better pick, and moreover, what is happening right now is some kind of a profit taking is happening into the metal prices, which is actually good for the company like Exide, because a lot of copper and other material goes into the battery, which is cooling off. So maybe alleviating some kind of a pressure on the margins front. So it is a kind of a technical buy.
All right, the next one that we have is coming in, and this is from Padma, who's writing us from Bengaluru. We have the next query on Lodha Developers. In fact, Shaunak Kulkarni from Mumbai has bought it at the levels of 962. 800 shares is what he's already holding and wants to know whether to hold or sell. Ajit, what would you recommend on this one?
So, Mahima, we have seen decent rebound across the realty space, and Ludha has also participated in the move. Currently, the stock has been hovering in this band, means we are retesting the upper band of this consolidation range close to around 970, 975 area. Then probably the long-term average is close to around 1000 is something that the stock might face resistance. Partial profit booking is definitely recommended, and at the same time, one should trail the stop loss to 920 for the remaining position. Once the stock surpasses 1000, then probably 1050, 1100 something the stock might test. So as of now, it's a hold, but book partial profit since you bought it at lower levels.
Got the view, Ajit. But अगला कॉलर लेते हैं अहमदाबाद से नितिन जी ज्वाइन करें स्टॉक रिलेटेड क्वेरी के लिए. नितिन जी वेरी गुड मॉर्निंग. आज प्रॉफिट में आपका स्वागत है. कैसे मदद कर सकता हूँ आपकी?
गुड मॉर्निंग पुनीत सर मेरे पास 500 शेयर है फैट फीना 150 पे. हाँ, मैं 1.5-2 साल रुकना चाहता हूँ. तो कंपनी सही है, मतलब फंडामेंटली तो मुझे प्लीज हो रहा है.
और नितिन जी आपने ये अभी रिसेंटली खरीदा है या?
हाँ, रिसेंटली मैंने फ्राइडे को ही लिया था.
अच्छा, फ्राइडे को लिया था.
थर्सडे को फ्राइडे को तो
मार्केट बंद था. हाँ जी. और कोई आपने बेसिकली फंडामेंटल्स देख के लिया था, करेक्ट? बिकॉज बहुत सारे ऑप्शंस है एनबीएफसीज और बैंक्स में, तो कोई पर्टिकुलर रीजन है जो आपने फेड फीना ही लिया था?
वैल्यूएशन मुझे सही लग रही थी और रिजल्ट भी इसके ठीक ठाक आ रहे हैं, तो मैं वो बोला, और मार्केट कैप भी छोटा है तो मैं ठीक है चल सकता.
गॉट. वेल नितिन जी, आपकी ओपिनियन, आपका रिसर्च तो सही है, बट सौरभ क्या आप सहमत है नितिन जी से? बिकॉज ये स्टॉक थोड़ा कंफ्यूजिंग है, राइट? क्योंकि नंबर आते रहते हैं, स्टॉक चल नहीं रहा है, बट तो वैल्यू प्ले हमेशा रहता है. क्या ओपिनियन है आपका?
देखिए, बिल्कुल आप सही कह रहे हैं पुरी जी. वैल्यू प्ले तो बिल्कुल लगता है, 2 के नीचे बुक वैल्यू है. और अगर आप ग्रोथ देखें तो ईयर ऑन ईयर 70 करोड़ से जो मुनाफा है वो 100 करोड़ का आया मार्च में. इनका स्टॉक का चयन तो मुझे लगता है ठीक है. ये स्पेस भी मुझे अच्छा लगता है, एनबीएफसी का स्पेस, क्योंकि जिस तरह से खूब नीचे आ रहा है तो आगे आने वाले समय में ऐसा लगता है कि इंडिया में इंटरेस्ट रेट टॉप आउट हो जाएंगे, जिसकी वजह से खासा फायदा एनबीएफसी को ज्यादा मिलता है. और एनबीएफसी में छोटी एनबीएफसी इनकी पसंद थी और उसमें मुझे लगता है फिर भी इनका कहीं ना कहीं चयन ठीक है. लंबे समय के लिए मेरे हिसाब से ये जरूर बने रह सकते हैं.
Right. Just shifting focus a tad bit. As Turtlemint Fintech lists on the bourses today, the company, let's try to pull up the counter as well, is down by about 9%, almost listed with a discount of 11%. Our colleague Ridhima is talking with the management. Listen to what they have to say.
We've also reduced our losses by about 100 CR roughly over the last 2-3 year period. So we are in a very strong position. The thing to understand about our business, it's a platform business, and the platform we were building it out over the last few years. Now it's built out, and as we have added more digital partners or POSPs, distributors of insurance, we've been able to provide them with better products, and as they spend more time with us, their productivity goes up, and all of this plays out into an operating leverage for our business. So we are making good progress towards that goal as well.
What sort of growth do you expect in terms of the customer base, the insurers, the collaborations in the coming time? Do you have any set targets for the next 12 months in mind? And you'll be also using your IPO proceeds, so a little bit on that.
Yeah, so we have strong tailwinds. Our business is in the smaller towns and cities, the B30 segment, where more than 75% of our business comes from those areas. And these are underpenetrated for insurance products, so there is a lot of demand, and as we create the awareness through our digital partner network, we will see strong growth going forward, which we've demonstrated over the last few years. So we are quite confident about our model and what that brings in the future.
What sort of competitive edge do you think the company has? Because now the insurance space is also getting, a lot of players are entering the space.
Yeah, so great question. So there are, the way to think about a business is that we have 2 key modes. One is the last mile granular network. In insurance, it's very difficult to build this kind of a network. We have built it at a particular time, which is when it could have been built using tech platform, and hence we have reached every last tier 3, tier 4 markets of the country, from Ladakh to Lakshadweep Islands to Northeast, all the markets are covered by Turtle Mint. So that has become one key moat. The second moat is the tech platform that has been built. Like you mentioned, insurance is a complex product. Even in technology, the integrations are fairly complex because it's an underwriting integration, and insurers are very granular in their underwriting. So we have several insurers, and all of those products need to be brought in using these integrations, which is what we have done. Both the moats have become the strength of the company, and that is what will keep driving the business for the company going forward.
What will be the top priorities for the next 12 months, and how much of your percentage of expenditure will go on your expansion versus your digital?
Yeah, so the top priorities are, of course, one, growing the network and adding more products that our partners can offer to their customers. So that's one of the key focus areas. The other focus area for us is technology, in particular AI. We are a tech-driven company, and over the last year, we are becoming an AI-first company as well. A lot of our tech efforts have now shifted to AI. So these are the two main areas where we will invest, one on the marketing and growth and the other on the tech, and it's roughly about equal in terms of the use of proceeds.
We'll of course keep getting you some more updates from the chat as well, but Saurabh, I don't know if you track IPOs very closely, but in that space of insurance, you've also seen PB Fintech largely a little bit underperform over the last couple of years. Any view that you can offer our viewers either directly on Turtle Mint or the space?
I think investors will take time to see how the companies will progress. So I think the initial reaction is front of us, and I think for now it is avoid.
And hopefully, Yogesh, that answers your question as well, who had asked us about Turtle Mint. But the next question, and we spoke to Saurabh about Astral as well as on Persistent. But Ajit, anything that you're looking at on the charts now? Padma from Bengaluru, actually, we started asking that question. He wants to know about either of those, if it's a good time to buy, actually. So always very opportunistic is our viewer, but because we've not seen a move such magnitude. Persistent now locked in 10% downtake on either of those names, right? How are you viewing this, Ajit?
So Puneet, you're right. Means at the beginning of the show also we discussed about HCL, and then we've discussed about some of these stocks from the mid-cap IT name, including Persistent, which was holding strong relatively. But now after this sharp cut, with volume, the stock is logging the down circuit. Break below 4,300 might result in fresh leg of decline. So definitely it's not a candidate to look at for fresh buying. Astro also, after a very tight range consolidation, has witnessed a dip. But the downside, I believe, close to around 1270, 1250 area, where last time also the stock has formed a base. Around that area, one can start nibbling selectively, from the medium to long term perspective, but not the current levels.
Okay, all right. So that's the view on both of these names, Astral as well as Persistent Systems, both down in that range of 9 to 10% each. But the next one that we have is from Raga, who's writing us from Hyderabad. He says, from a long-term perspective, where can he go ahead and invest in, either Jyoti CMC or ZF Commercial? And he says that he's planning to hold both of these or either one of these for the next 2 odd years. Saurabh, would you divide your money into 2, or would you pick one of those?
Both companies are good. He can divide his money.
Got it. The next question coming in now, and this one's on CG Power. Ajit, actually, Prashant from Bengaluru wants a slightly more longer term view on CG Power. Wants to enter this stock now. We actually, on the fundamental side of things, had a Nomura also write a very positive note on the company. But how are you looking at the charts? Because again, very uncharted territory for investors for CG Power, looking at 945, 950 odd. Is this move expected to continue?
So Puneet, like you have rightly mentioned, that the stock is in uncharted territory, and especially when the markets are still not very decisive, especially when it comes to the index, and the stock is outperforming, maintaining its positive tone. So definitely it's a good hold. For fresh buying, since we have seen a sharp move from roughly around 640 to 960, so maybe we might see some consolidation, but broadly the tone looks positive. One can definitely stay put. Now this 890 zone is where we have the immediate support. So with that as a stop loss, one can hold it for short to medium term. Upside basis the past, consolidation range, close to around 1050, 1100 is something that one can maintain as a target area.
Okay, all right. The next one that we have is, I think we've got Samir, who's calling us from Srinagar. Samir, very good morning to you. Go ahead, ask your question.
Morning, ma'am. I've got G Power share at the rate of 990.
Okay.
I have got 500 shares. But presently I am in loss. So I need to know support level. What is the support level?
Take it. Got your question.
And the future of this stock.
Got your question, Samir. I'll take this up with Ajit. Then Ajit, if I'm not wrong, yeah, it's down 5% as we speak. It's a 6,000 crore market cap company. What would you recommend on the charts? So what is the stop loss that you would see, and targets, if any?
So G Power, we are seeing that the stock has been witnessing a bit of kind of a profit-taking phase, and it's almost like a vertical surge from 350 to 1,050. So at least book partial profit in case if you bought at lower levels. Now, once it slips below this long-term, short-term averages close to around 935, probably we may see the next leg of profit-taking or down move towards 840. So short-term, it looks like an exit if you have an existing position. And for fresh buying, one should wait for a dip towards 840.
Got the view, Ajit. But time now for the rapid fire round in this edition of the show. Ajit as well as Saurabh, you know the drill. First question from Venkat Ramani from Bengaluru. Wants to know a good time to buy into REC or PFC since now that the companies have decided to merge. But would you recommend a longer time frame, Saurabh, just because the process will only take around 3 to 4 quarters?
Of course, I think better to go with PFC now.
Okay, the next one is on Hitachi Energy. Jeet from Kolkata is tracking this counter since the 20,000 levels is what he's saying. He is currently holding 3 shares bought at the levels of 34,200. What is the support levels and targets that you're seeing on the chart, Ajit?
The support comes close to around 30,000, 30,200 zone. So he can hold with that.
Next one's coming on Canara Bank. Divya from Abu Dhabi is holding shares at 146. I think Saurabh, everyone's wondering if these are good levels to average down. Would you recommend that?
I think better to wait another PSU, maybe like Indian Bank.
Okay, the next one is on Cupid. I don't think that it goes by a show without this query coming in. But your view on the charts on this one as well, Ajit?
So Mahima, as you rightly mentioned that it's infancy and trading at the record highs. Keep on trading your stop loss. 183 is now the support area.
On Lloyd's Engineering, Ajit, another stock that's run up quite a bit. Raj wants to know if if fresh buy is recommended or is it an avoid?
One should wait for some consolidation.
Okay, the next one is on Tata Power. Ashok Pai from Bangalore has purchased 3,000 shares bought at the levels of 378. Good time to accumulate more. What's the long-term view, Saurabh?
I think it's a good stock, but you can also look at NLC India.
Sandeep from Hyderabad wants to buy into Dalmia Bharat at the current market price. Saurabh, is that a pick in the cement space?
I think better to go with the later Ultratech.
Okay, the next one is on Samman Capital. Khushit from Delhi is holding 200 shares bought at the levels of 139. Continue to hold. Ajit, what's the view on the charts?
Book profits.
Piyush from MP has a query on Cummins. He's bought these shares at 4,000 rupees. Asking if he can still continue to hold this counter. What's your view? With the current Kirloskar brother move, Saurabh, should he still continue to hold or book out?
It's a hold for long term.
Okay, the next one is on Taril. Our viewers bought at the levels of 345. 150 shares is what he or she is holding. Continue to hold for the next 3 years, Saurabh.
It's a hold.
Abdul Rashad from Kerala is holding L&T Finance from 117 odd, so currently in profits of over 160 odd % is what he's mentioning. Should he still continue to hold, Saurabh, or book out?
It's a hold.
Okay, the next one that we have is coming in on NBCC. Zenith from Ranchi is holding around 1,600 odd shares bought at the levels of 106. From medium term perspective, what's the view, Ajit?
Profit taking, likely wait for a dip to enter or book profit in case you have existing positions.
A few queries on Yes Bank. So I'm going to pick John from Chennai. He's holding on to these shares at 12 rupees, bought on 28th July 2020. So he's doubled his money in the last 5 to 6 years. Is this a good time to book out now, Saurabh?
He has underperformed in this period, if you say so. if I can say so. But better to get out, and maybe if you want to banking stock, chip into Bank of Maharashtra.
Okay, the next one is on Canes. Hanish from Sydney has bought 50 shares at the levels of 3894. Continue to hold, book losses. Saurabh?
I think better to exit.
And Saurabh, I'm glad you said it on Yes Bank rather than me saying it as well, because your expert opinion is more valued. But Manoj Mathad is holding on to LIC from the IPO price of 900. He's holding 30 shares. Should he still continue to hold, Saurabh?
You can hold.
Okay, the next one is coming in, and this one is on First Cry. Nirmala from Tamil Nadu has bought 300 shares, bought at the levels of 365. Continue to hold, Ajit, on the charts.
Underperforming, no sign of recovery, better exit.
All right, okay. That brings us to the end of this rapid fire round. Ajit as well as Saurabh, thank you so much for taking out the time and helping us. A lot of those queries, almost 56 queries is what we took in the last 1 hour or so. But quickly, before we wrap up the show, a quick look as to how the markets have been doing and what has changed since the last half an hour. Let's try to pull up the Nifty 50 and see as to where it's trading at right now. Still above the 24,000 levels, but below the 24,100 levels is what we're tracking on the Nifty 50. Back in the green at least, but absolutely flat, as we speak. The Bank Nifty as well. Let's try to pull that up. The Bank Nifty still, trading down by about 0.2%. 100 points of a downtick is what we're seeing. But there has been recovery from the day's low point, at least for the Bank Nifty. Let's try to pull up the mid cap 150 and the small cap 250 as well. The pressure on both of these have built up quite a bit. At the day's low point, the mid cap 150 is down by about 0.4%, and so is the small cap 250, which is down by about 0.5%. Quickly, the BSE 500, before we wrap up the show, you have some names. There you go. Persistent and Astral, which is putting the pressure on the broad end of spectrum, down 10% almost each, followed by something like an M&M Finance and Supreme Industries, which is also down, seeing a downtick. But on the flip side, you have Zydus Wellness, which is fairly doing well, and you have counters like Avenues AI also doing fairly well. So that's with regards to where the markets go, but completely out of time in this edition of Ask Profit. But do stay tuned because KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey, where I decode important companies, their stories, and also is there any alpha to be made or not. But before that, try to guess the company, and I guess it's quite easy for you to guess the company. The first hint is it's a Hyderabad-based coffee manufacturing company. Now I'm sure there are two names to it, and you'll try to guess it very fast. The second hint is Bandhan Mutual Fund has 6.62% stake in the company. Very interesting, right? It's a small cap, but nevertheless, mutual fund participation is quite strong. Also, I'll give you one more hint. Stock is up 20% from March lows. And one final hint, and I'm sure you'll guess it by now. The company is trading at a discount to its peers CCL products. It's a coffee company, and remember, it's the monsoon season. I'm sure you want to watch this entire show with a coffee in your hand as well. And the company in focus is also Vintage Coffee. This is the company which we are talking about. Everybody talks about it in social media, but if you want to understand what's the real story about this stock, is this a run-up to CCL products or is there something else to it? But why are we calling this company? That's the big question to be asked. The newer markets growth. They are bullish on Southeast Asia, Africa and Central America. So what are their expansion plans? Also the focus in the high margin products and the new segments. We'll try to understand what are the timelines which Vintage Coffee is suggesting to us. Third thing we would like to know is definitely the timeline for the commissioning of the freeze-dried coffee plant. That is where the company is going a little bit of expansion. There is a turnaround at play and a lot of stories to be uncovered. Capex plans planned for the next 2 to 3 years, if any. If yes, how will they raise it? Internal accruals or will there be a debt? Global pricing and demand trends, how the overall situation changes. And remember, coffee is largely an inelastic product. The demand keeps growing up and so is the purchasing power for it. The outlook for the domestic business, the impact on the raw materials. Remember, almost 33% of the revenue comes from the domestic space. The current versus FY28 capacity utilization, a lot of changes are happening, and if that happens, maybe the fall in margins might have bottomed out. The revenue and margin growth outlook, that is also something which we definitely ask the companies. And remember, we'll get everything from this management. Balkrishna Tati, he's a CMD at Vintage Coffee. So you're ready to smell the coffee bean? Let's understand the details about the company. I know what are the key factors to watch out for when you are analyzing a company like that. I'm sure you have watched CCL products, how the analysis is, but this time it's a bit different. It's a Hyderabad-based coffee manufacturing setup. Of course, their presence is there in Secunderabad, which is like a twin city, or twin sister city to be honest. They deal with manufacturing and exporting of quality instant coffee, but there are other products and other arms as well. This includes chicory as well and private labeling. That is where most of these Hyderabad companies, the larger ones, the mid ones, are working at. The listed post restructuring. This was not a proper listing. There was a restructuring, there was a special situation, there was a reverse merger and rights issue. And after that, we of course saw mutual funds coming in. The capacity expansion almost double from 6,500 million tons per annum to 11,000 million tons per annum. So that is where they have done a good turnaround. Speaking of turnaround, mutual funds have shown interest, especially Bandhan Mutual Fund. They are having almost 7% stake in the company, and last 2 years, they have actually increased the stake. Remember, the listing which happened was to in 2024 via this reverse merger. The instant coffee market, how big this is. I'm sure you must be sipping your favorite instant coffee right now. It's valued at $11.4 billion. But how large can this market become? That's the big question. Look at that. The projected growth is roughly around 5%, but this demand stays. As and when India's growth comes in, the purchasing power comes in, more value-added products in the coffee starts coming in. Also, let's talk about the value which can reach this year. It's around $15.2 billion. And of course, the most important, the basic thing in economics, this is the one. Demand is largely remaining inelastic. That is why this coffee industry is definitely a cash cow. We have seen that in some companies as well. The Southeast Asia, Africa and the new market, Central America market, that is where the focus is coming on. So whether there will be a acquisition or whether they'll set up a plant, we need to understand that, and the street needs to understand it. They're working on commissioning a freeze-dried coffee plant very soon. We'll try to understand what is a freeze-dried coffee and what's the difference between instant coffee with it. And of course, the revenue breakup, 67% still comes from exports. Remember, this is the consolidated analysis which I'm talking about. The remaining 33% comes in from the domestic space. So this is the overall revenue breakup looking like. But the question remains is, what may work for the company? First point, market is big, so no major threat from the larger competitor. This is what I would like to talk about because I have done a lot of channel checks in these regions, and that's our analysis comes in when it comes to scuttlebutt investing. The global demand momentum remains strong. Of course, economics 101, which I had explained to you earlier. Another important reason what may work for the company from the current levels is, of course, the strong interest from FISDI. The smart money is taking positions in this counter. Stock hasn't moved much from its reverse merger and the special situation play. So that's a hint for you. Improvements in the efficiency ratios, the way they are expanding. I'll show you the ROC numbers. They have been going up. So there is definitely a turnaround at play. But what may not work? There's a lack of analyst coverage. There's just one analyst tracking the stock. It's a small cap. There isn't much reports on it, and that is where a little bit of uncertainty comes, and that's why we get these companies in KYC to understand what's the entire picture. The promoter stake dilution is definitely there, around 30 to 35%. So that you could say slightly negative, but that's how you got to look at it. Execution risk, if they start acquiring companies, global expansion, there might be delays, there might be regulatory risks. So concern might come in for vintage coffee, but pros are more than cons when it comes to vintage coffee. But let's try to understand the KYC ratings, how things pan out. Of course, I'll give you the history of the company. They have already been featured in November last year, but you need to wait for the end of the show to show you whether the company has increased their KYC ratings or not. Income statement, balance sheet, cash flow, return ratio, the basics which are there. And of course, we try to understand how the stock has moved, the shareholding pattern has changed. And of course, we'll get you the valuations also, compare that with CCL products. And lastly, the outlook, what the management commentary has come up with. Let's start with the income statement, and largely the CAGR numbers are pretty strong. Revenue, EBITDA and even PAT. Look at these numbers. All of them look like a triple digit number. So that's a great momentum and the turnaround coming in. But let's go a bit deeper into it. The margins segment, largely the numbers year-on-year basis was flattish. It's fine when it comes to the margins, but my concern is in the margins. Is it a very stable business to look at? But it's largely, it was 24%. Now it is there between 19, 17, 18. So we're trying to understand if they go into the new product and the new segments, this can even easily cross that 20% mark. But for that, we need to take a little bit of time. So I have taken, benefit of doubt in both the sides, and I've given this a neutral rating when it comes to the income statement. Let's talk about the balance sheet. And yes, balance sheet, we see slight borrowing has gone up. It's around 124 crore rupees, but the equity and the cash size is pretty decent. So definitely you can look for an acquisition or an expansion at play as well. So let's keep this a neutral rating as well. So we spoke about income statement, we spoke about balance sheet, but cash flows seems to improve for the company, especially for FY26. As I compare that with FY24 and 25, there were of course a lot of changes happening, and that's why these impacts were coming in. But now it normalizes, and that's what the street wants, and that is where the reward also started coming in for this counter, and it's done really well. So I've given this a strong thumbs up. So let's talk about the return ratio. I spoke about the turnover, I spoke about the turnaround, I spoke about over the cash flows, but definitely there is a change in the model, the way the company is expanding without hitting the return ratios, and that is something which we'll watch out for. FY24 it was around 9%, but it has been gradually going up, and that shows a good momentum and a good return for the shareholders also. It's a very important parameter to track, that is the ROC, return on capital employed. So it's a strong thumbs up as well. Let's talk about shareholding. Largely there wasn't any FIDI exposure in March 2024, and you can understand there was a special situation at play, and then the FIs and DIs, that is where the buying started. And look at that, in March 2026, 8% stake held by DIs. Of course, Bandhan Mutual Fund has roughly 7% in that, and even 5% FIs are holding in this count. It's pretty interesting. Some HNIs are also there, and smart money is definitely accumulating at every fall for this counter. So it's a strong thumbs up when it comes to the shareholding. Let's talk about street cred, how things pan out. And remember, there's a small history which the company has from 2024, that restructuring when it happened. This is the number. It's largely been flat. So if you have been holding this company from 2024 onwards till now, you haven't made that much money. But during 2025 lows, the stock has almost doubled up. Look at that number. It's almost 95%. From the highs, if you look at it from 2026 highs, it's still down 13%, but from the March lows, it's up 24%. So right now it's a neutral rating, I would say. Let's give it more time to judge this company. एक लंबा history होना चाहिए. So it's a neutral rating as well, but valuations is pretty interesting. Let's get you that. So CCL products and vintage coffee. This is the trailing 12-month P ratio. यहाँ पे देखिए vintage coffee और CCL products लगभग 25% का डिस्काउंट पे ट्रेड हो रहा है वैल्यूएशंस के हिसाब से when I talk about vintage coffee as compared to CCL products, and this is the closest business model analysis which I can get for you for this counter. So overall, I would like to give this a strong thumbs up when it comes to the valuations for vintage coffee, and of course these are the numbers to watch out for. The last one but not the least is outlook. This is where I'll share with you the important numbers which the company has given. They want to expand the capacity and the utilization, that's expected to go up. So we'll try to understand from the management what are the numbers. Also the introduction of premium and value-added product offerings through FY28, and when these start coming in, the margin profile does change. The proposed freeze-dried plant with the installed capacity of almost 5,500 million tons per annum. We'll try to understand the timelines and the progresses. So it's a net positive outlook coming in. But let's give you the entire picture of our analysis for vintage coffee, and it seems like the numbers are pretty good. Income statement and balance sheet has been neutral, but cash flows and return ratios have done really well. The history has started coming in. Shareholding, DIs are lapping up. So are the valuations cheaper than CCL products, and outlook as well. That's where the strength is coming in. So this is the overall picture, and the total number for vintage coffee comes in at 6.5 out of 8. But hold on, there's a history also. Let's get back to the history, what has happened in the KYC historical ratings. It was 5.5 out of 8 in November 2025, but in the next 6 months it has done well, so it's at 6.5 out of 8. Now next time if it comes to KYC, will it go up or down? That's what the time will suggest. But the management, that's what we'll be talking about with Balkrishna Tati. He's the chairman and MD of Vintage Coffee and Beverages. An interesting trivia about him: more than 3 decades in this industry. He started as a leadership and a sales position in Tata Coffee, which is of course right now called Tata Global Beverages, and he set up this company in 2017. A lot of arms are also there, a lot of special situation is there. So we'll try to understand the entire story of this company, but after a short break.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Welcome to KYC. Now we are joined in by Bal Krishna Tati. He's the chairman and MD at Vintage Coffee and Beverages. Good afternoon, Mr. Tati. It's always a pleasure to have you with us at NDTV Profit. An interesting company, interesting weather, and interesting product. Let's start with the new markets growth. You know, the way you're expanding, it's almost 60 to 70% of your revenue comes from exports. Southeast Asia, Africa, and Central America. How are you expanding? Are you acquiring something or you're setting up your own plants? We want to know your international plans.
Good afternoon. Nice to have on NDTV once again. Thank you. Yes, we are now more focused in Southeast Asia, African markets, and also now we are focused in US and North America and Central America, and also in Europe and other parts of the country. So we are keep expanding the business. As I mentioned in my previous statement, that we have expanded from 6,500 metric tons to 11,000 metric tons. This year we have now going for an 11,000 metric tons of instant coffee. This will cater the markets which we are emerging into, the new markets which is coming up, not only in Africa and also in Central America and some parts of Europe, and also the new markets which is coming up from China and other markets. So this also we are targeting.
All right, but in this target segment, are you looking at any acquisitions or you will set up your own plant? Just a follow up on that.
No, we are not have right now. We don't have any plans about the acquisitions or anything. So we have the plans we are doing right now in a private labels, so customers brands which we are supplying to them. And most of these regions are particularly we focused for the brand owners of the particular regional brands which is coming up growing very fast. So we are targeting those brand owners and we are supplying to them, and because their volumes are increasing, the coffee as such, the coffee consumption is growing almost, as I mentioned to you earlier also, it is growing almost in a free state coffee around 8 to 10%, and then the soluble coffee around 2 to 3%.
Fair enough.
So these are the markets.
Right,
Yeah.
sir. But what are the high margin products? How the trends are changing if you're having coffee or something around it. What are the high margin products you feel like getting into and any new segments around it?
Yes, the higher margins are we are getting from the superior premium quality, which is the free-state coffee. The company also has a plant now. Right now, we are in a process of setting up the plant, and that will be ready by next year. So this is the free-state coffee where the margins are much higher compared to the spray and agglomerated coffee. The company has plans now immediately to go and keep expanding the free-state coffee because that is one of the fast growing market, and there is a trend, there is a shift from the people moving from the roast and ground coffee and then the normal spray and aglow to the freeze-dried coffee, because typically freeze-dried coffee gives the an excellent aroma levels and is giving the strong coffee that gives a feel of roast and ground coffee. So obviously people are moving for that.
Enough, you have explained us very nicely, what does instant coffee and freeze-dried coffee mean. But just give us the timeline for the commission office. I'm sure you're expanding this segment, the freeze-dried coffee plant. So we want to understand the commissioning timelines by when it can happen, end of FY27?
Yes, end of 27, we are very certain that end of 27 we should commence the commercial production and also start exports. And FY28 we should able to add some free-state coffee turnover also.
Enough. So these are the numbers you are talking about, but how the global pricing and the demand trends looking like when it comes to the client additions? Of course, there is a hedging mechanism at play for a company of your size, but could you just explain us how the global pricing and the demand trends looking like?
Yeah, though typically we are an export-oriented unit. So what we do is that right now we are sourcing the Indian beans only. We are not importing any coffee or anything. Although the coffee is now it is in a very volatile market, but now it is settled at a levels around $3,200 to $3,500 levels and all for the Robusta, which normally we use it for the soluble coffee. I think that we since we planned only for around 70 to 80% of Indian coffee and then 20-30% only for the imported coffee, but we have a natural hedging. The reason is that because we have sourced the coffees on an outright basis. Basically the day we finalize the order, then we source the coffee beans. So the price fluctuation will not have any sort of impact on our the top lines and bottom lines.
Right. Mr. Tati, I was just looking at the ROC numbers. They have been improving. There is a turnaround story also at play. But I want to understand simply, what's the current capacity utilization and maybe in the next 1 or 2 years, how the capacity utilizations change. I just want the number right now.
I'm very glad that, last year we have done a 6,500 plus. That is the full capacity utilization. This year we are targeting to go for 11,000 metric tons. So more or less, we are very confident around 90-95% of the capacity utilization will do it this year also.
Fair enough. And Mr. Tati, just to understand the numbers front, the revenue and the margins outlook, can the margins start bottoming out and going up in the next quarter because there is a new segment also at play? Or do you think the margins will remain same, which was there earlier in your business model? How does the margin and the revenue outlook look?
Certainly, because not only the new products are adding like a freeze-dried and this additional capacity which is coming in. So obviously, going forward, we will definitely have an improvement in the margins, especially in EBITDA levels and PAT levels. As a matter of fact, this year since we have expanded to 11,000 metric tons, so obviously the EBITDA levels will also be slightly improvement because the fixed cost will remain same. So the production, the output is more. So definitely this will have a better EBITDA levels.
Fair enough. The numbers will be on the better side when it comes to the operational profit, but the domestic business is also there, which are catering to domestic consumers. Is there a more volatility at play here? How are you trying to, hedge yourself in that? Because globally you can, but domestically what happens?
Yeah, domestically, I can say that, this India is now becoming one of the emerging market for the coffee consumption. Because typically this was, if you decades, you see that typically India was only a small contribution to the entire global coffee market consumption. But today it is growing very fast. I can say around 10 to 12% growth is there. And going forward, I'm very confident the markets are going to increase, like not only in India, especially for the countries like in Japan, China. These are typically China and India is the tea countries, but slowly expanding towards the coffee, because this is because of the urbanization and the youth generation. So obviously there is a shift for this.
Of course, that's a
we,
mega
our
trend.
company as such, we are targeting to capture this also by doing some sort of e-platform. So we already have some presence in e-platform, but we don't have right now any plans to go for brand building in India at this point of time. But slowly we'll look into this option.
Because a company like your size, and I'm just looking at the cash levels also, the industry is evolving. You know, any kind of a B2C acquisition, because your distribution is strong. You can buy in a small company, a D2C company also, and maybe take that brand as well. Is there any plan like that for your domestic market, so that your consumer also sees your brand?
Yes, you are absolutely right. Company has trying to explore these options also. We are looking into these options, and we keep it open and see that if we get in a right company and the right brands, so definitely we'll look into this option to acquire the brands.
Okay, so because there is a good cash flows, you already have a distribution network. It technically makes sense for you to acquire some good D2C brands, at least in your area. But the capex plans, we have already spoken about your capacity going up. There's freeze-dried angle, which you have given the commissioning by FY27 end. But any other capex plans are there over the next 4 to 5 years, which you think would be there coming in organically? Any number on your mind?
Company has already have a 5 years business plan, and we are going in that direction. So as a matter of fact, as I mentioned to you, next 3 years to 3 to 4 years time, we have a plans that 5,500 is the freeze-dried coffee what we are making a line next year. But the thereafter we have a plan for go for another one more line for another 5,500, which makes around 11,000 metric tons of freeze-dried coffee, which is in a 11,000 metric tons of spray and aglo and 11,000 metric tons of freeze-dried coffee coming together is to around 22,000 metric tons. So this will be through by, I can say, FY 2030.
Right. So the vision FY30, that's what the management has spoken about. Thank you, Mr. Tati, for taking out your time and giving the entire picture about your company. And always it's a pleasure to have you at NDTV Profit. Best of luck for the future.
Thank you so much. Thank you.
So that's the management of Vintage Coffee, and a lot of viewers had written to me about getting this company in KYC, even though it is less tracked. But definitely company is focusing on expansion and new products as well. So for interesting stories like this, stay tuned to KYC, and yes, keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Dalal Street opens with positive bias this week as Nifty struggles to maintain above 24,000 levels. Broader markets underperformed the benchmarks today. Pharma leads with gains, auto and IT under pressure. HDFC Bank recovers after review conducted by 2 external law firms found no evidence to support the concerns raised by former independent director Atanu Chakrabarti. Sources say board likely to recommend reappointing Jagdishan as the CEO for the next 3 years. Kotak Mahindra Bank under pressure after MD and CEO Ashok Vaswani, who succeeded founder Uday Kotak in 2024, says he will step down in December. Hunt for the new CEO gains pace at Kotak. Persistent Systems trades under pressure today as investors evaluate the proposed acquisition of Germany-based digital engineering firm Nagarro Say, and meanwhile Astral 2 sulks after board approves a composite scheme of arrangement to separate its chemicals business into a standalone listed entity. REC and PFC in focus today as the board approves a merger of the 2 companies. PFC will issue 88 shares for every 100 REC shares held. There is no cash consideration in this deal. Tepid market debut for Turtle Mint Fintech Solutions. Shares listed at 134 rupees 90 paise per share on the NSE, a discount listed of more than 11%. The 883 crore rupees IPO had a price band of 144 to 152 rupees per share. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and yes, after a good gains, market is looking at least at the moment tepid at the current level. So 24,000 levels still conquered by Nifty 50. That's an important psychological level, but you can see it's closer to the lower end of the trading session today. If we really take a look at what's really happening in the overall market, well, most of the sectors are in the red, so there is no broad-based participation that is being seen. In fact, even the mid-cap, small-cap universe on the broader markets are the ones which are really underperforming the key indices today. When we take a look at the sectors, well, it's the pharma and as well as metal sector, which is really gaining in trade. Apart from those 2 sectors, rest of the market looks like in the pressure of some selling. When we talk about the contribution chart for Nifty 50, well, taking a look at that, HDFC Bank with that clarity coming in of the legal review after Atanu Chakrabarti had really resigned with some grievance against the board, well, that really clarity coming in is giving some comfort to this particular counter, while remember, Bank Nifty still remains underperforming to the key indices today and is also leading the charge when it comes to the drag on the markets. Apart from that, some of the pharma companies like the big ones like Dr. Reddy's, Cipla, Sun Pharma are all on the gaining side, and they are the only ones which are adding some bit of positivity to Nifty 50, while the big drag is really coming in from the big boy Reliance Industries, from the banking pack, the largest bank SBI, Mahindra and Mahindra. And remember, auto is one of the biggest draggers in trade today, and that is something that is reflective on even the key indices. So that's the overall picture of the market today. But when we really look at the overall picture after the war-related, issues are getting sorted for the market, there is tentativeness when it comes to the market momentum. Let's get chatting about what the direction of the market is likely to be for the trading day today and the near term. Vikas Gupta, who's the CEO of Omniscience Capital, joins in now. Vikas, pleasure welcoming you on NDTV Profit. Looking like a slight bit of pressure but listless trading session, Vikas. What are the points and the factors really impacting our market apart from the war worries that are now really abating? Looks like monsoon El Nino is also having an impact.
Yeah, I think, right, despite today's tentativeness, if you see the trend, it's very clear that post the treaty, etc., that the war worries are going. It's a very clear positive sentiment. Probably Monday is there and we still have to see the US markets open, etc., and maybe some profit booking. And that's why I think this near-term today's tentativeness. But otherwise, I think the sentiment-wise, it's very clear that for next several weeks, etc., it should be quite positive.
Right. Let's also take a look at crude at the current moment, and Brent crude that even though is gaining in trade by about 0.5% in trade. But remember, the trajectory of the crude oil prices have been on the lower side. And there you go, 72.69 odd levels. Remember, when the war started on 28th of February this year, by that time, the crude levels were around $65 per barrel. And that is the level that it's really inching at pretty quickly, and that should really give comfort to the market. So Vikas, you mentioned about this, but looking purely now at the economy as well as the macro trends and the earnings momentum, both combined together in the short term for this particular year, what are the sectors and trends that you're really penciling in?
Yeah, so see, overall, of course, the first quarter was impacted by the war. So second quarter also, maybe there is some impact. So H2 onwards, we should be back to the original thesis of 12 to 15% earnings growth, etc. Right? Of course, things will be different from sector to sector, but H2 is this is how we see it. And sectors wise, I mean, we think the most undervalued sector today, with one of the good, excellent growth expectations. I mean, the bank credit growth came in at 17%. So we are expecting, 15-16% kind of growth over next 3 to 5 years for banks' earnings and overall loan growth. And given that they are available so cheap, whether you're talking of private sector or public sector, both are significantly cheap compared to their long run valuation, especially the private sector. We have to compare the long run. PSU banks, there is an issue because the last 10 years they were struggling through the NPAs, and so they were significantly at low PEs or low price to book, etc. But all that is behind now, and we have clean balance sheets. So we like the banks, frankly.
Since you mentioned banks, the bank and financial services space has the maximum amount of news flow really coming in, and the big boy from the banking space, HDFC Bank, is the one which is also the top gainer, and there is news on that. So if you can just hold on to your thoughts, and I'll come back with more on the banking sector with you. But let's first address this particular news development of today. HDFC Bank gets a clean chit from external legal firms with no substance found in the allegations allegations flagged by the former chairman Atanu Chakraborty. Also, a key leadership decision looms at HDFC Bank. And Piyush, my colleague, is right here to give us more details on that. Piyush, of course, this news developed over the weekend, and now the stock is reacting positively. Is the worst behind for HDFC, and what are we looking at now?
Right, we spoke to the former chairman, Mr. Chakraborty, earlier in the day, and he said that he had requested the bank to actually share the terms of reference for the external legal firms with him, but the bank did not do so despite being repeatedly asked by him. So that is why he did not engage in the interviews that external firms, legal firms wanted to do with him. Now, he also said that the legal firms report were sort of, very caveated based on certain meetings that they did with some internal employees, and apart from that, taking out the minutes of the meeting with Mr. Chakraborty himself presided over. He said that this resignation decision was based on his conscience and because his personal values and certain business practices at the bank were not were not in sync. He said that during his tenure itself, the Dubai 81 mis-selling bond case happened, and he made sure that the bank acts against the people who were involved in it. Now, from here on, this is because the legal firms have given a clean chit to the bank. This is a very big positive for the incumbent CEO who's up for a reappointment. Sources tell NDTV Profit that the bank will first appoint a chairman very soon, within a few days, and following that, the new chairman is expected to have a say in terms of the bank recommending Mr. Sashidhar Jagdishan's name to the RBI for another 3-year tenure. All these developments, we believe, our sources indicate that in the next month itself, the new chairman and the CEO reappointment will be done. This is what we are picking up from our sources as of now.
Right, Piyush, on top of our watch list will be HDFC Bank. With the developments, it's a top gainer on Nifty 50 today. With that uncertainty really lifting when it came to the governance issue, which was raised by the earlier chairman, and the new reappointment of the present CEO will be watched out for. KK Mistry is the interim chairperson right now, and who's going to be the permanent new chairman also to be watched out for. So lots of positive developments, and as top brass changes really take place in some of the key banks, Kotak Mahindra Bank is also on our radar, where a new CEO hunt has begun for the company as Ashok Vaswani also steps down at the end of his term. So Vikas, coming back to you, while you spoke about bank space as one of the key areas which can give benefit in the near term, in the short period of time, but when we look at the private banks space in particular and the top brass changes that are really taking place, what's your view in the near term while the top brass changes are keeping these stakeholders on the edge?
No, actually, I think they will be treating it as a catalyst on a positive side, that new management, and then it's not really required. Okay, what is already, the balance sheets are clean, growth opportunities are there, they're already changing whatever needs to be changed. But the belief in the market or the investor base comes when there is a new management. So everything, the management themselves start looking at things from a fresh perspective, as well as the investors get that confidence that somebody is going to come with a clean slate, with an open mind, and then restructure the whole thing to be to create the foundation for the next leg of growth. So all those things will be treated as catalysts on the positive side, in my opinion.
So those will be the catalysts, and looking forward to the big changes coming in. But Vikas, looking at the overall space right now, you spoke about some of the themes that you are really looking out for, and banks is one of the top in terms of investments. What are the no-go areas which have really gone way past their potential return in terms of the valuation in the uncertain period of the war that we saw, and could be no-go areas in terms of IT also? What do you think? Defense and the green energy space, or any other sector that you're bearish on?
Yeah, so see, IT, we want to be very careful. IT, and we would want everyone to be very careful that there is fundamental uncertainty. We don't think that even the managements of the IT service companies or managements of their partners, which means the cloud platform companies like Alphabet, etc., the main people there, or the semiconductor chip companies, nobody knows what is the impact of AI going to be going forward over next 3 to 5 years. Nobody's clear. There will be a lot of demand post 3 to 5 years or 10 years. Again, you will need a lot of AI services. There is what is called Jevons paradox, that supply creates its own demand. So you have a lot of IT, AI services experts, let's say from Indian IT service companies, and they will be in great demand. But over the next few years, let's say next 2 years, 1.5 to 2 years, it's totally unclear what used to be done by 10 people might be, it's possible that it can be done by one person.
That's right.
Like, hundreds of thousands of people in our Indian IT service companies, in the near term, they might have to go down to, very large amount of restructuring in terms of number of people. And then whether you will be able to maintain your revenues, whether you will be able to maintain your margins, forget the growth.
That's
you
right.
don't even know what is the margins or cash flows.
So Vikas, at the end of it, you're wait and watch and not very bullish on the IT sector, as we see that the entire script is changing for the sector. The syllabus will have to be revamped for the sector, and how many will be able to do. Vikas, always a pleasure to chat with you and get your expert take on the markets. Moving on, one of the stocks which are really impacted by news today, we are talking about Astral. The stock is down 8.5% with no let up inside. Remember, Astral's board has approved a composite scheme of arrangement to demerge its chemicals business, and the stock is under pressure post this particular announcement. Puneet is here to break down this particular transaction, what it brings to the table, and what is it, Puneet, that the shareholders are not liking about this announcement?
Well, thank you for that. As you rightly mentioned, it's slightly more puzzling also in that sense, this move, because you've seen, of course, the three key aspects to watch. One is that the chemical business will be demerged and separately listed on the bourses. The amalgamation of Al Aziz, which was the plastic business that the company acquired a few months ago, will be merged with Astral Limited, which will be the piping business, and that will continue to house the plumbing business as well. But when you look at the merger ratio 1:1 that the company has announced, you've also seen that the existing Astral shareholder holding one share of the company will get another one of Astral Chemi, which is now the chemical business, which will also house the paints business of the company. And all of this has been done on a going concern basis. When you look at the rationale, also what the company has mentioned, they have diversified across key products for the chemical side over the last 12 years of the company since 2014. And more importantly, the reorganization will look at the chemical business more focused in that sense. They've also mentioned that this will become a dedicated one corporate structure for the chemical business, as well as for the related businesses like construction chemicals, as well as for the paint side of the things. But also very importantly, that this reorganization will help both companies determine their capital allocation independently and achieve operational efficiency is what the near to medium term plan is. But when you look at the numbers, that is very important as well, because the current Astral business, which has pipes and buildings, is almost at 4,600 crores in terms of revenue. The chemical business is half of that, to almost 1,900 crores. But the margins are the very important factor. Here is where the difference lies, and hence you might be seeing a sharper reaction also because the low margin business is getting out, but the higher growth business is also getting out of the listed entity. Also, in terms of valuations, when you compare this business for Astral specifically to Supreme as well as Finolex, Astral does trade at a significant premium, and this might be reason number 2 for the pressure on the stock, because now that the chemical business is out, this is a pure play comparison to Supreme as well as Finolex on the piping side of things, and hence maybe some re-rating being visible here. On Pidilite also, which is one of its nearest competitors, but not a direct one for the chemical business, that trades actually at a premium to almost 52 times price to earnings versus 44 for Astral. So very important what happens in the next 3 to 4 quarters, because most brokerages actually continue to be positive. So Investec had actually made a very interesting note: if 1 plus 1, which is of course the two different entities, is greater than the current listed entity, they feel that this will become the second largest pure play business in the chemical side, and call this restructuring significantly positive and attractive. They've also mentioned that Astral has clocked in a very stronger revenue CAGR of almost 18 to 19% versus Pidilite at 13%. But the disclosure as well as the growth will be something to watch for both these verticals. So that's the picture coming in for Astral. It's a good one, but the street's having a valuation argument with itself for today.
All right, Street trying to digest this big information really coming in. Thanks, Puneet, for breaking it down. But remember, IT sector has been in the spotlight, and especially after Accenture's valuation drop and the concerns coming in on the guidance, the brokerages have turned cautious and largely negative on the IT sector. In fact, Jasmeet is right here to give us all the details of what brokerages are saying and what are the matrices on which the Indian IT sector is being now assessed. Jasmeet.
As rightly said, brokerage have been bearish on IT as a sector, but this is for the first time when we have seen top 3 brokerages coming out and cutting the target price of most of the IT pack. While starting off with Morgan Stanley on IT. Morgan Stanley roughly cut about 23 to 25% of its target price on top 5 IT firms, starting off with TCS, where they also downgraded this particular counter to Equivay and cut nearly 23% on this counter. And the new target price is roughly 2,200 odd rupees. While they've also cut mid caps, something like LTM, Cyient and Tata Elxsi, but the interesting one is the Coforge. They have maintained the same rating on the Coforge, but they have also increased the target price of roughly 6%. So they have been bullish on Coforge for a while, and now again they have increased the target price. Now if you look at the commentary, they see further room to downgrade from here on. If they see the growth doesn't cycle well for the companies, they might further do the rate cutting for them. While they also make a note that the TCS is at a premium when you compare to Accenture, because Accenture has seen a various major downtick because of the result. So that's the reason why they see the entire IT pack being high on the valuation. That's why they're cutting the valuations of all the IT pack. While they also prefer something like Infosys and TCS over Wipro, while they prefer TechMahindra and HCL Tech in the large caps. While if you look at the overall mid cap size, they also prefer Emphasis and Coforge in the ER&D space. Now if you look at the City on IT, even that has cut the brokerage note as high as 80% of the target price for HCL Tech and maintained the stance in neutral. Now if you look at the other key counters, they have also hiked to target prices for mid caps, where they are being bullish on the mid cap, but on large cap they are still cautious. Now we also have Goldman Sachs. Now this particular entity has also cut the target price of top 3 IT firms by almost 11%. They say HCL Tech down by 11%, Infosys target price cut by 11%, so has TCS. Now what they say is the overall stance of the IT remains neutral to negative at this point in time. They mark this year to be the 4th year of no growth, and they also expect the Q1 to be muted while the Q2 to be weak for the most of the IT companies. So far it's a wait and watch how does the Q1 pans out going ahead, given 9 July is when TCS will come out with the Q1 of FY27 results.
Right, waiting and watching out for 9 July for TCS results, and of course more negative on the large cap IT companies. Thanks, Jasmeet, for that. Now mid and small caps are really outperformed Nifty. Analysts see up to 48% upside in the select names with strong earnings growth visibility. In fact, Mahima is here with the lowdown on the names, the stocks in focus, which the analysts feel are going to have the momentum and the return. Mahima.
If you take a look at how different indexes have recovered from their lows that we saw around March and April, Nifty has recovered around 8% odd. The mid cap 150 has recovered over 18% odd, and the small cap 250 has recovered over 25% from its lows that we saw in March and April. Now, if you take a look at specific names, what I've done here is we've tried to take stocks that at least 10 analysts cover and stocks with highest return potential as per the Bloomberg estimates, and Swiggy tops that chart in the mid-cap space with a return potential of 48%, followed by ICICI Prudential Life at 37%, UPL with a return potential of 29%, Dalmia Bharat with a return potential of 29% as well, and then Info Edge with a return potential of 28%. Now, if you take a look at the outlook that each of these companies have given, Swiggy has said that they will grow at a CAGR of 18 to 20% odd. Q1 FY27 is when they're expecting a contribution break even. For UPL, for ICICI Prudential, the expectations are that FY27 could be, the management has said that we will take a cautious approach, seeing, everything that's happened, but we'll see as to how FY27 will pan out. They've not given any specific guidance, but for UPL, revenue growth anywhere between 10 to 14% and EBITDA growth of 14 to 18% for UPL. Dalmia Bharat to reach around 75 MTPA by FY28 in capacity. This is, tall targets given by the company. For Info Edge, the company, will turn cash generative in FY27 is something that the management has guided for. Now, similarly, in the small cap names, if you take a look at the top 5, highest return potential names, you have Aditya Birla Lifestyle with 46% of return potential in the next 12 months, followed by Sagility with 43%, Aditya Birla Real Estate with 41%, Brigade Enterprises with 37%, and Affle 3i. This was something that a lot of brokerages had in their 2026 list as well. For Aditya Birla Lifestyle brands, 13% revenue CAGR till FY30 is what the management has guided for. For Sagility, if you take a look at the outlook, double-digit growth plus they're looking at M&A opportunities to boost growth going forward. For Aditya Birla Real Estate, the management is already has a land bank worth GDP of around 72,000 crores. So that's the growth that they pencil in going forward. Brigade Enterprises, at least 20% growth expected in FY27 pre-sales, at least is the word that they've used. And lastly, for Affle, overall 20% organic growth is what they're expecting for FY27, and 23 to 25% EBITDA growth is what the company is expecting. So these are some of the names that you could keep your eye out for in the mid cap and the small cap name that still have a lot of return potential going forward.
All right, there is stock picking opportunity in any given market. Thanks, Mahima, for listing it out for us. Now, in news development, Zerodha has applied to SEBI for a Category 1 merchant banking license, marking a potential entry into investment banking. The application filed in April is under review, and the license would allow IPO management, fundraising advisory, as well as M&A services. Nimit is here to give us all the details. Nimit, does it look like a natural extension for Zerodha in a very competitive space, though?
Yeah, absolutely. It is a very competitive space, and Zerodha is one of 13 companies that has applied for this license. They include Society Generale, Incred, Neo Wealth, Stepone, and Haitong. So it also comes from a space where the IPO market is now looking positive in the eyes of these companies, where they look like it's a lucrative business and they can make some money out of it. So a lot of companies are entering into this space. Now, what Zerodha tells us is that they have applied for this license, and they will announce their business plans and let us know of that also in due course, and once they receive that license from SEBI. Important to understand, like you already explained also, that what this license really means. It means that they can manage IPOs. The book running lead managers in these IPOs include larger investment funds, and Zerodha is now a brokerage firm that's entering into this space or looking to enter into this space. It also means tens of crores, in some large cases hundreds of crores of fee from management and advisory fee for corporate deals, fundraisings, private placements, and all of that comes along with the public listing in IPO space. It's a lucrative space to step into. Of course, it all depends on how the market picks up in terms of listings. There is some promise that's being shown so far, but so far it's been a poor market.
All right, Nimit, thank you so much for getting us all those details. Meanwhile, Nifty 50 is showing more weakness and has broken below the 24,000 level. But next show is going to take it forward. So stay tuned to NDTV Profit. It's goodbye from the entire team of Markets at 12. Thank you.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
And welcome to NDTV Profit. You're watching Trending Stocks with me, Mahima Vachhrajani, and Sharad Dubey, who's standing by at the NDTV Profit Market Pit with all the action that's happening in the markets today. And Sharad, I think it's a bad day for sure for the broad end of spectrum, and so as well for the benchmark indices. What are you picking up?
Well, that's right. Good afternoon, Mahima. And we are near the day's low when it comes to our analysis for both Nifty and Nifty Bank. But just look at it. We are having a range-bound moves, up till say 12 o'clock. But after that, in the last 30 to 45 minutes, a sell-off has started coming in, and we are at the day's low level. This is the number to talk about. But the 24,000 levels, that is where the Nifty has gone down, and a little bit of concern definitely comes in. We'll try to see whether these are important support levels or not. Nifty Bank also, the story remains the same, but it's a weaker technical setup as compared to Nifty. We are at the day's low as well. Remember, there is Nifty rebalancing at play as well. But of course, looking at the key factors to watch, largely we see the small cap and the mid caps, they have fallen more. Let's pull out the Nifty small cap and the mid cap to show you what's happening here. If you could just show the small cap and mid cap, yes, look at that. That's the sell-off which is happening here, and a concern is there. Let's pull up rupee, what's happening here, to show it's actually going against the tide. Let's just pull up the Indian rupee chart as well. For the second straight day, it's gaining, and that's a good point. But remember, today is Nifty rebalancing also, and interestingly, tomorrow is the monthly expiry for Nifty as well. So expect, a little bit of volatility today in the day's trade as well. But as of now, there's a weak sentiment in the markets.
Weak sentiment in the markets is what we are seeing definitely, and a lot of it is coming in from specific names, specific news flows. Especially, let's take a look at what our watch list consists of. In terms of the first one, Persistent Systems is the one in focus, which is down almost 10% in trade on the back of that acquisition. There are concerns with regards to the integration of this acquisition. That's why we're seeing the pressure coming in on these this particular name. Nifty IT as a pack has also seen cuts from lot of brokerages in terms of target prices, and the entire pack continues to be under pressure. But DRL is the other one where Nomura sees a 29% upside on this particular counter. It's buzzing in the trade on the back of that. Astral, yet another name stock down after announcing demerger of the chemical business, approval of the demerger of chemical business. Not seeing a very positive one on this one. The next one is Hexaware, where becomes this company becomes Anthropic's authorized reseller for Amazon Bedrock, and that on the back of that we're seeing positive momentum coming in this counter. The next one is particularly a small company, Magellanic Cloud, where board has approved the merger of Ivis International, and we've seen a buzz in the counter on the back of this news flow. The other one is Bansal Wire, where we've seen mutual fund buying action coming in, and that's why the stock is up in trade today. You have GMR Airports, where GMR Nagpur International Airport has commenced its commercial operation, and we've seen a positive volume coming in for this one as well. Lupin is the other one where it's gotten a tentative US FDA nod for a particular drug, and that's why it's buzzing in trade today. Ather is the other one which has begun commercial operations at the GIDC Panoli unit, and that's why it's been buzzing in trade. The Kotak Mahindra Bank, of course, remains in focus on the back of the MD Ashok Vaswani stepping down in terms of ending. Of course, his term ends in December, and that's why we're seeing that counter in the red. Zydus Wellness is the other one which has hit the post-IPO record high. It's buzzing in trade today, up almost 5% in trade, despite of markets being under pressure. This is the one counter that's standing out. Premier Explosives is seeing a volume uptick around 46% above the 20-day moving average. Acme Solar Holdings, Anand Rathi, Wellspun Corp, Cupid, Apollo Hospitals are some other names that have been buzzing in trade today and have touched their 52-week high. So that's with regards to some of the names that are buzzing in trade today, and that's there on our watch list. But Sharad, over to you for the rapid fire round.
Thanks a lot, Mahima, for that. Now joining us, we're having Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you with us at NDTV Profit, and we start a rapid fire round. The first stock in focus is Persistent Systems. Of course, a very large acquisition announced, but the street is concerned here. Is there any value here to pick up here, or do you think there'll be more fall going ahead as well?
Very good afternoon, Sharath. Well, absolutely. It looks like a breakdown today where the counter has opened with a gap down note and sustaining below at the lower levels itself. So kind of a breakdown. So we expect a follow-up on the lower side towards 4,200 to 4,100 in the near term. So avoid taking any quota bet.
Right. Next stock, Dr. Reddy's. Brokerages are turning bullish and little bit of buying coming back in the defensive space. That's the pharma. Your views on Dr. Reddy's, important levels to track, Nilesh?
A very good setup. In fact, across all pharma counters, we are witnessing a very good momentum. Dr. Reddy looks positive for 1440, 1480 level in the near term. Buy and decline should be the strategy, keeping a stop loss below 1330.
Right, another stock, Hexaware. That's of course very different from how the IT pack is performing today. AI related news flow coming in. Do you think this up move will sustain going ahead? Stock seems like it's a locked in near that circuit, that 5% level.
Well, it's a pullback trade, and we believe that this pullback may extend further slightly towards 530, 540 in a short run. So keeping a stop loss below 502, one can stay put in the long position, avoid taking any fresh long.
Right, another interesting stock, especially from the small cap cash counter, is Bansal Wires. Invesco Mutual Fund, Bandhan have taken positions, and a lot of interest has come in. Do you think on a monthly chart basis there's going to be a more buying coming up? The volume suggests that.
Counter has surpassed its all key short-term, long-term moving averages, fresh breakout on the chart. It's a multi-month breakout on the chart. So we can expect a follow-up move towards 360, 380 in the near term. So the setup looks positive, can be added on declines, keeping a stop loss below 320.
Right, next stocks, GMR Airports, brokerages are turning bullish on this. Good time to trade in this counter, or you'll avoid this?
Very good setup, I would say. The counter has given another consolidation breakout, and in this kind of a weak setup in the market, this particular counter is outperforming. So we can expect a follow-up move to continue towards 115 to 120 in the near term. So keep a stop loss at 105. That's a very strong support, and buy and decline again should be the strategy GMI Airport.
Right, another interesting positive corporate development coming in for Aether Industries. Do you think there is a consolidation at play for this counter, or any signs of a breakout is coming in from these levels?
Aether has given a good breakout. In fact, it is right now trading at 1350 rupees, and we can expect further upside move to continue towards 1375 to 1385 in the short run. So yes, fresh entry can be taken on declines, keeping a stop loss below 1300. The setup looks positive for a pullback perspective.
Well, that's pretty interesting. That's the end of the rapid fire round. Over to you, Mahima.
All right, okay. Sharad, thank you so much, for getting us that perspective with regards to all of these buzzing counters. But Mahindra Life Spaces is something that we're putting spotlight on. Let's try to pull up the stock. It's up almost 1% in the markets that, are or still continue to be under pressure. And to understand as to what's happening in the real estate space and what is the outlook going forward for Mahindra Life Spaces, we're now joined by Amit Kumar Sinha, who's the MD and CEO of Mahindra Life Spaces Developers, joining us now. Mr. Sinha, thank you so much for taking out the time. Mahima, this side. I think my first question to you is with regards to, the way things have panned out, right? Just want to get a sense in terms of how, demand versus supply looked like in FY26. We've seen a lot of cost pressure coming in because of geopolitical situation. How do you think that now that things are settling, FY27 will fare in terms of the entire space?
Yeah, so thank you, Mahima, for having me. I think you're right. We have to break this situation both on the demand side and the cost side. I think demand is affected by a lot of the sentiments from the war, especially in the early part of this quarter, which started from March month, last month of previous financial year. And then El Nino, financial markets have been very turbulent. It also has a very good rub-off effect on the real estate market. When the financial market do well, it also helps on the real estate side. But if you go back a few years, post-COVID, we've had amazing 4-5 years, right? Amazing set of growth numbers that all the firms have delivered, including ourselves. So some part of slowdown, not correction, but kind of moderation of the growth rate was expected. The long-term fundamentals are solid, like, as you know, per capita income, per household income. We sell 400 to 500,000 apartments annually, which is a minuscule proportion compared to some of the other markets. The desire to own home, the desire to own a dream home, which is all the all the features that one wants, I think continues to be there. So I think there is short-term potential slowdown aggravated by some of these geopolitical and external events. But the market fundamentals stay very strong, and we are very bullish on this market. In fact, for this year, I've never given a guidance on the pre-sales for any of the past years. But this year we said, while last year for us was 3,400 crores, this year we are given a guidance of 4,500 to 5,000 crore pre-sales residential only. And the industrial, business would be higher on top of that. So we feel that, the short-term issues will not affect the long-term fundamentals of the sector, and we are very strong about it. I think the second part of your question was the cost part. I think we are very cautious about that. I think in our planning, one of the things we want is, you want to grow, but you want to grow profitability. So all our projects our underwriting is keeping in mind the cost equation really, really carefully. So a few commodities have gone up, driven by the same set of fundamental issue that you talked about. I think aluminum has gone up. Some of the other energy-related commodities, which have a huge logistic component, have gone up. Tiles have gone up. Cement has gone up a little bit. So I think we are tackling that smartly. Some part is part of our contingency and escalation. Some part gets to be passed on to the consumers. It's a natural hedge to us. Some part is careful contracting. You don't have to contract
Right.
all your contracts in year one. You do it over the years. So
Right.
we'll be able to manage that.
Fair enough. Amit, hi, this is Sharad here. I just wanted to understand the launches portion, over the next 3 to 6 months. Any launches are earmarked? And if yes, what kind of, GDVs or the gross development values we can expect from these key launches coming in from your company?
Yeah, that's the most exciting part for us. This year is one of those years where we have all the launches coming together in the early part of the year. So this year we have roughly 12,000 crore of GDV that is going to be launched. So as on the screen you see, Rainforest is one of the biggest launch. We have launched phase one, which is roughly 3,000 crore. That's just been launched, and we are doing the netting. It was relatively slow in the month of April and May. So most of the activity picked up only in the month of June. But we'll report the numbers as part of our quarterly results. But 8 specific launches are planned for this financial year in the residential side. They together will be 12,000 crore. Of those 8, 3 RERA we already have. So in Q1 we already have received Rainforest RERA. We received RERA for Mahindra Beacon Hill Mahalakshmi. We have received RERA for Mahindra Citadel Phase 3 in Pune. And then the remaining 5 should come in the next few months. And when you get RERA in the early part of the year, then you have the full year to actually get the sales delivered to your bottom line in this case. So very exciting launches are planned. Please stay tuned. But these are some of the good launches that are already achieved RERA. And we have few in Bangalore as well as Pune coming up.
Sina, I know that for a real estate company, it's important to track something like a pre-sales or, the GDV growth. But just taking a look at your financials, in plain sight, we've seen a growth CAGR of 25% in terms of your top line. Even your PAT has grown at what, 100% 3-year CAGR. Just want to get a sense as to what growth targets look like from here on. FY27, FY28, 2 years down the line, what is it that you're going to aim at in terms of top line especially? Do you think that 25% growth CAGR is going to be maintained?
Yeah, so on the pre-sales top line, I think we are obviously from 3,400 to, let's take the midpoint of my guidance, 4,500 to 4,750 would be a 30-35% growth. So it's a very healthy growth we are planning, despite some of the fundamental issues. And the reason we feel very confident because over the last 3 years, we've built a very solid GDV land inventory for us. And most of them were acquired a couple of years back or 12 months back. The whole approval process is getting completed. And as you saw with Mahindra Rainforest, we got 3,000 crore of inventory unlocked, in one lump sum. So it gives us the confidence that we'll have enough inventory. We also very solid, brand value, solid value proposition in terms of what we're able to provide to the customer. We are not pursuing affordable segment. We are not pursuing luxury. We are focused on mid-premium and premium, which is roughly 70% of the market. And that market will be healthy organically, despite some of the fundamental issues that you talked about. It will be healthy for the long term. So that's our guidance on the top line. Let's make sure that the momentum continues. Even on the industrial side, which has done really well for us, I've given a guidance of roughly 500 crore every year. So on top of that 4,500 to 5,000, we hope to get additional 500 crore plus from the industrial sector. So that'll be a very healthy year for us. And the bottom line, I think we all share, so this is driven by the OC. But we want to maintain the momentum that we've built in the last few years.
Fair enough. Fair enough, Amit. Thanks a lot for joining us with us at NDTV Profit and sharing the growth plans and the outlook ahead for the company. It's always a pleasure to have you with us. We're just discussing Mahindra Lifespace Developers, and let's pull out the intraday chart to see what action is happening, and a little bit of positive momentum is also coming in. Nilesh, a quick chart check on Mahindra Lifespace Developers.
Well, Sharad, it is on the verge of a major breakout from its long-term 200-day moving average that is exactly placed at 365, and it is hovering near about those levels. So just in case, if we see counter closing above 366, that will be considered as a positive close, and we are expecting a gradual uptick towards 400 plus levels in the near term. So the setup looks positive. One can keep a stop loss below 350 and remain long.
Okay, all right. So that's the view coming in on Mahindra Life spaces. And, the other one that we're putting spotlight on, of course, today is Standard Engineering. Now, the company is involved in manufacturing of glass-lined process equipment, serves pharma, chemical, biotech, food industries, etc. They recently announced they're entering into the data center. Now, we've been talking about this as to how, data centers have, a lot of growth opportunity going forward, considering that, AI is something that's growing at a faster pace. And to understand as to what this foray means exactly, we're now joined by Nageshwara Rao, who's the managing director at Standard, Engineering Technology, and Kasu Brahma Reddy, who's the founder and director of G-Scale Group, joining us now. Welcome to both of you, gentlemen. First of all, I'll start with you, Mr. Rao, first. With regards to this foray into the data center space that you've talked about. How is it, with regards to the synergy, like how does it match with the synergies of the company, firstly, and how big of this is an opportunity for you?
Thank you for the opportunity. And this, first of all, I want to correct it. One is our company is not glass lining reactor manufacturing company.
Okay.
That is one of the line of manufacturing.
Okay.
Recently, 6 months back, we changed name also.
Okay.
Standard Glass Lining to Standard Engineering Technology Limited, because of year, this year, but glass lining business we never neglected. Many calls I mentioned. This year we are going to become the largest glass lining equipment manufacturer in India, and GLHACO Japan collaboration. And coming to, we are become a complete integrated engineering company for pharma and chemicals. We do concept, we do design and equipment manufacturing and supply and erection and turnkey projects. We are complete solution, concept to completion, solution providing company. Complete integrated engineering company for pharma and chemical, one point. And also, whatever we are manufacturing, cooling and electrical, many equipment, cooling sheets and many equipment related to data center, whatever data centers are using, heat exchangers and clean room equipments, lot of things, similarities are there. And we met G-Scale MD, they have almost tier 4 data center capabilities. They know every equipment, they have design, they have prototype, they have the very world-class plant, almost 2 lakh square feet plant arranged. They are going to start manufacturing, and November onwards. This year already we guided 250. The G-Scale going to create revenue 250 crores. This is very big time. And why we attracted that company? Because of similar engineering company and a similar product line is there. So based on that.
So I have a question for Mr. Reddy. Hi, this is Sharad here. Just the question is, your current business model and now your data center announcements are coming in. By when we can see this coming in your numbers, and how does your margin profile or your top line changes from where you are currently and maybe in the next 2 to 3 years where you will be? If you could just give us some quantified numbers on that.
Hey, thank you, Sharad, having me here. So yeah, the numbers wise, this year itself we are targeting 250 crores of revenue, and as far as the EBITDA and the numbers, we are expecting around 25%. And this all because you see there is a huge momentum in the data center business as an industry. So currently, country is holding around 1.6 gigawatt operational capacity, and country wanted to grow 10 gigawatt plus in next 5 years. And there is almost 8 times in the next 5 years, where what we built to last 20-30 years is 1.6 gigawatt. So having said that, the all ancillaries, including power products and cooling products and modular systems and turnkey vendor and OEM ecosystem India is not geared up to that extent. That's where we come in. And we wanted to, solve this problem by means of establishing gigawatt scale. When we are going for gigawatt scale data center establishment, we want to build gigawatt scale product manufacturing. That's where we have initiated, and we are getting ready, start delivering products from the November this year onwards.
All right. Mr. Rao, just one last question from my end. What is the target looking like in terms of top line when you, pencil in the growth that you've been talking about, plus the order book that you have by the end of FY27, and if you can also help us with the target that you have for FY28 in terms of both top line and bottom line.
27 already we guided existing business with 40 to 50% growth this year. And G-Scale is going to generate revenue third quarter and fourth quarter going to 250 crores. That is already we guided. Next to 28 also, same pitch going to continue. Yeah, same growth.
Okay, and what about margins, sir? What is the guided range of margins that you're going to maintain for FY27?
FY27, slightly margins are going to increase our existing business. And also data center business we are expecting good margins.
Right, okay, so that's the view coming in with regards to where the outlook goes. Thank you so much, gentlemen, for taking out the time and giving us that perspective on what lies ahead for the company. But Nilesh, you heard the management. Any quick view on the charts for this one?
Well, absolutely. A very strong chart structure, I would say. The counter scaled to a fresh record high in the previous session. Today as well, it has witnessed a very good uptake. In this month, it's up close to 73%. So a very strong momentum. I believe this momentum should continue towards 250, 270 in the near term. So buy and decline should be the strategy, can be accumulated on declines, keeping a stop loss below 200, and the broader structure looks strong.
All right, so that's the view coming in on Standard Glass Engineering. A stock is up 8.6%. But you know what? We've been talking about this throughout the day. HDFC Bank gets a clean chit from external legal firms with no substance found in the allegations flagged by former chairman Atanu Chakrabarti. Also, a key leadership decision looms at HDFC Bank. Piyush joins us with the latest. Piyush, tell us, what are you gathering from your sources?
That's right. NDTV Profit spoke to former HDFC Bank chairman Mr. Atanu Chakrabarti, and speaking to us, he dwelled on the fact that his resignation was meant for the board to introspect. It was not related to some compliance gap at the bank. He said that he had repeatedly sought the terms of reference for this engagement with the external law firms, and despite the repeated request, he was not given those terms, and hence he refused to participate in the interviews that were being sought by external legal firms. What Mr. Chakraborty also said that the report has sort of picked up only a few aspects with regard to the internal interviews that with some of the team members that the external firms did, and with regard to picking up some material from the minutes of the meeting of board that happened during his chairmanship, and he coined these legal firm report as very caveated. He said that his resignation was essentially a matter of conscience. He did not he was not on board with certain business practices at the bank, and it differed with his personal values. He said that we did during his tenure the Dubai regulator had taken action against HDFC Bank for alleged mis-selling of 81 bond case, and the bank on its part also acted swiftly and terminated some of the employees. Moving on, the other major aspect to the HDFC case is now that the external legal firms have given a clean chit to the bank. The incumbent CEO, Mr. Sashidhar Jagdishan's reappointment bid, it has brightened now. The legal firms did not question any, the behavior of the CEO, and the legal firms, said that the ex-chairman's allegations were unsubstantiated. So this is a positive for HDFC Bank's current CEO. How we understand things are going to pan out according to sources is that within the next month, both the CEO and the chairman appointments will happen. The bank will likely appoint a CEO within a permanent chairman within days, and Mr. Jagdishan is likely to be recommended for another term by the bank to the RBI in the later half of the next month, which is July.
All right, Piyush, thank you so much for getting us those details. Of course, viewers will keep you updated as and when the story progresses. But with that, we are completely out of time on this edition of the show. But do stay tuned, because there's more news and updates coming on your way on the other side of the break.
Super
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
सरसों से सरसों. अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real.
Hello and welcome to this special show on the DOJ's settlement with the Adani Group over allegations of bribery and fraud. The big update coming in is that a New York federal judge has sought additional details from the United States Department of Justice on its request to drop the case against the Adani Group. Now, this comes on the back of the DOJ in May formally moving to drop the criminal fraud and bribery charges against Gautam Adani and Sagar Adani, concluding that they could not sustain these allegations. Now, legal experts in the US explain that this is not a comment on the merits of the case, but likely a procedural clarification sought by the New York federal judge, seeking clarity to ensure the request meets legal standards and is made in good faith. Legal experts also say that such queries are routine. They say that the DOJ, as the prosecuting authority, is usually given primacy and courts rarely intervenes once a decision to withdraw such a case is taken. So what does this mean for the timeline of the proposed settlement between the Adani Group and the DOJ, and how much room does the court really have to push back? Let's first hear what legal experts in the US are thinking.
It is a fairly routine process. The government, the prosecution, the Department of Justice has great discretion in deciding whether to bring a case and whether to dismiss it. Once a case is filed, the judge has to approve a dismissal, but I'm not aware of any instance where any judge has ever refused that happening.
It is fairly routine. So what's happening here is as you know, the government has filed a motion to dismiss the indictment against Adani and others, and it's doing that under a rule of Federal Criminal Procedure 48A. And the rule doesn't say a whole lot, but what it does say is that the government may, with leave of court, dismiss an indictment. So that language with leave of court is really important here, because what it contemplates is that the court here, Judge Garofis in the Eastern District of New York, has at least some limited role in assessing the government's rationale for dismissing the case. What's important to note is that that role is truly a limited one. So this is not an opportunity for the judge to second guess the prosecutor's decision to not pursue this case. It's not about the court substituting its own wisdom for the wisdom of the Department of Justice. It's really just making sure that this dismissal is happening for a proper purpose. And the judge, I think it's important to note, is totally within his rights to ask for this additional information, particularly when the Department of Justice has provided almost no information about why it's dismissing the case.
And as you can see, US legal experts say a few things. They say that this is routine. Firstly, this is not out of the ordinary for a judge to ask further questions and ask for more clarifications in a case like this where the DOJ is asking for the charges to be dropped. Again, another important thing we got from that this is not a determination on merits or on the actual allegations underlying the settlement. It is simply a procedural request asking for more information behind the intent of settlement and asking for why the DOJ is looking to settle this case. Now, to understand this more, we have a very special guest with us, Mr. Rayan Karanjawala. He's a very senior legal expert in India. He is the managing partner of Karanjawala and Company. Welcome, Mr. Karanjawala, to the show. Firstly, I'd like to ask you, on the top of all of this, what do you make of this latest development of the courts asking for more detailed information? Is this request out of the ordinary? And what impact does it have on the settlement, given that the DOJ has already decided to drop the case against the Adani Group?
I just, first of all, just say straight away, it's not an unusual request. And before I get into the details, there's two caveats I want to put out there, which I always do when I'm speaking on the Adanis. One is to point out that they are clients of mine and that Gautam Bhai is a friend of mine. And of course, the second caveat that I have to put out is that I'm not an expert on the American jurisdiction at all, but on the basis of what I've seen and studied and what I've been told, I'll be happy to answer any questions. Now, the first thing I wanted to tell you is, to your question, is this an unusual request? No. It's the normal part of process. What you have to understand here is this, that in America, as also in India, the Department of Justice has a very large say in which are the cases in which they would prosecute or not prosecute. But they cannot unilaterally withdraw a case and put it aside. They have to take the consent of the court. They have to take what is known as the leave of the court. What is happening at the moment is the process in which they went to the court to take the leave of the court. And in that, the judge has reacted by saying that before I get into a deeper understanding and hearing of the matter, I want a detailed reply to be filed by the Department of Justice. The important thing to note is, for the layman, that the judge has not said that you should re-prosecute the case or that the Adanis are guilty at all. All that the judge has asked for is more and further additional information. And this is broadly, from what I have been told and what I can understand, a standard procedure.
So, perfect. So you say that the DOJ's authority is generally final in this case, and the judges do have the power to ask these sort of questions, but it's mostly procedural. Now let's turn that on its head a little bit. What sort of powers do judges actually have in this sort of case where the DOJ has decided to end the case and settle it with the Adani Group?
So the answer is simple. Ultimately, of course, the case can't be withdrawn unless the judge gives leave to withdraw. But by and large, the jurisdiction that they exercise is a very truncated one. It's a very limited one. And by and large, from what we can see and what we've read up and what we've been told, because after all, this is not exactly the jurisdiction with which I'm familiar, but from what I can make out, by and large, a majority, or I won't like to use the word an overwhelming majority, but it may be the more apt word, of these cases where the DOJ asks for a withdrawal of prosecution are allowed.
Thank you, Mr. Karanjawala, and we'll stick with you for a bit, but we also have another very special guest, one of the most senior legal experts in our country today, Mr. Harish Salve, senior advocate in the Supreme Court, joins us today. Mr. Salve, welcome and thank you for joining us. My first question to you, Mr. Salve, is that the DOJ in this case has already decided that it wants to drop the case. What sort of power then does the judge have? What is the judge really testing here? Is this a legal test or is this a procedural test that the judge is looking at?
Well, I don't. Procedure mandated by law is a legal test. So I don't think your question is the divide which you're suggesting is correct. There is a basic rule everywhere that once a case is brought into court, it is in the possession of the court. So it is for the court to accept. You cannot unilaterally withdraw a criminal case in any jurisdiction in the world. The trouble is, I think the Indian reaction is more based on our culture, where, especially in the last couple of decades, judges have become far more interventionist. That's not how the American system works. It's a case which has been filed, which must have proceeded up to a particular level. There may have been a grand jury procedure set in place. So to unwind all that, the judge will say, give me your reasons. They will give their reasons, whatever the reasons they have, whether it is commercial reasons, whether it's a broader interest of the economy, or whether it's that they just felt that it's not the right case to prosecute. The judge will say, fine, we'll close it. These judges are not interventionist. And there has been a settlement, financial settlement. The courts don't, unlike in India, courts are more interventionist in India. In US, the courts are not interventionist.
Perfect. I'll take your point on that. The courts are not interventionists in the US like they are in India. And I'll also take your point that this is still a legal test, even if it is part of the procedure. It is still a legal test.
It is a procedure. It's a procedure. See, even in India, if you have to withdraw a prosecution, you have to give your reasons.
Yeah.
You can't, once it is in court, the court can say, give your reasons. In America also, it says give your reasons. He's asked for the reasons. They'll give the reasons. What is the reason? The reason is, have they suddenly realized that they have no evidence, or have they realized that the prosecution was brought for a particular purpose, but there has been a settlement? You see, these are again concepts which we have been saying India has to become familiar with in commercial prosecution, which we don't have, of settling. So there is the securities case is civil case, civil in the sense it's like your SEBI, and there is a concomitant prosecution. If this civil case is settled, obviously the settlement closes the wrongdoing, and they may say, all right, we don't want to prosecute a foreign company. Finished, end of the matter. But they'll have to put all this on record as to why, what has happened, what's the settlement.
I understand that point. I wanted to ask, though, if I push you a little more on this, what sort of legal threshold exists for a court to then even intervene in a case like this? You said that they're looking at it as sort of an exercise to see if the evidence is there and so on and so forth. So what sort of legal test exists in American law for a court to then intervene?
See, as the legal test says, they have to give their reasons. They don't, they don't have PILs, they don't have judicial review of reasons, they don't have all that. So when you are looking at it as an Indian, you're wondering what's going on. If this is not like a case in India where the media is jumping up and down and everybody's worried about why a case has been withdrawn, etc. It's a small case for America. It's some foreign company which is being prosecuted. DOJ brought a prosecution. DOJ, under the Foreign Corruption Act, they may have. I think there were some charges. There were some charges against some local companies. They've all gone and settled. They said fine. Primarily, it was as far as America was concerned, it was a securities case. They've settled it, closed.
Absolutely.
They don't go behind saying, oh, who did it and why they did it. And they don't have people filing a PIL, then Supreme Court issuing notice and appointing SITs. That's not how their system works.
Absolutely. I think that's very clearly explained, especially for a layman audience as well, to understand what's going on in the US courts and how it's different from how we function in India. I'd like to bring Mr. Karanjawala in here and take the conversation further to how this affects the timeline for the settlement for Adani here. Given the court has given a deadline of July 13th to the DOJ to submit a more detailed reasoning for closure of this case, do you see the deadline being extended here?
My understanding is very clear. Whatever closure that the DOJ announced had this particular process in mind. I mean, you see, to the layman reading the newspaper, it looks like, oh, this is something new. But I'm sure the Adanis knew and the lawyers would have told them that this is the actual procedure we have to go through. So whether they already had that timeline in mind or not, I don't know. But I mean, the timeline will be a normal timeline that such cases take and such consent takes before it is granted.
Absolutely, and like you said, the lawyers for Adani would have been apprised that this sort of thing is routine and happens as part of the process before any closure. Mr. Salve, I'd like to put to you, in a case like this, once now the court, the DOJ submits its detailed report, we understand from legal sources, far before the July 13th deadline. In such a situation, do you see, and if the court gives its then clear go-ahead for this closure, does that end the case against Adani completely here?
Of course, that's the end of the matter. There is no appeal. There is no citizen Lok Prahari who can come file a case and say, why is all this happening? That system doesn't work like that.
Absolutely, I'll take your point on that. I think it is a very important
and there are timelines. Let me tell you, if a date is fixed in the court, date is fixed in the court. You want the date to move. It's not easy.
I see your commentary there against the Indian system.
No, we have it's not a commentary. We have a system where our courts are overloaded, where our judges have so much work to do. Their calendars keep getting shuffled. We've been fighting for increasing judicial strength for that reason. In America, it's a lot more relaxed system because they don't have the kind of pressures our judges work under. So it's not just a criticism. It's a difference in culture. You must understand that there's a cultural difference.
I'll take that point, Mr. Salve. And to you, Mr. Karajawala, just to close out this conversation, the word routine has been thrown around a lot. And as Mr. Salve pointed out, it's actually a cultural difference between how these cases are dealt with in the US versus in India. And once it's closed there, it does stand closed. In a routine case like this, is it standard procedure? I want to just understand so our audience is clear. Is this standard procedure in a case like this to ask for more information?
Yes, because whenever you want to withdraw a case and you want the consent of the judge or what they call the leave of the court, you have to go to the court and explain to them why you want the case to be closed. Normally the judge who is exercising even a truncated jurisdiction has the right to know on what basis you've chosen to act in a particular manner. Nothing out of the way.
Thank you, Mr. Karanjawala. And a last question to you, Mr. Salve, before we close out. Closing thoughts. Again, you said that this would close out this case. It doesn't leave scope for anything else against the Adani Group here. Again, standard procedure, nothing to be alarmed about with this sort of a request from a judge. Am I right in thinking that?
Absolutely. Our alarm, I was wondering why there's alarm, but then I suppose it's because, culturally in India, we have become so much more sensitive to the way things work, and then there is so much interest, there is so much media interest, and then the culture of allowing PILs and allowing people to come and move, and none of that happens in that part of the world. Secondly, their settlements in criminal prosecutions, we were doing a study once, long time back, we were working on this. And they were saying even in criminal cases, 2 out of 10 cases go to trial or some such statistic. Very low statistic. Most cases get settled, a plea of guilty, you come in with a plea of guilty, you negotiate, there is plea bargaining. You go to the prosecutor and say, okay, you agree to so much, I will settle, I'll pay, I'll do this, I'll do that. And it doesn't go to trial. So it's a very different culture in which that system works.
Thank you so much for that extremely insightful, ready reckoner on how the US court system works and how this case will fit into that context.
I'm not an American lawyer. This is
I understand.
Working internationally. This is what I know, how it works. The nuts and bolts of it, what reasons have to be given, how a court is to be addressed, we don't know because I work in English courts. I don't work in American courts.
Yes, absolutely. Thank you so much for your time, Mr. Salve, on this. There you have it, insights on this case, on US law from our Indian experts and from the US experts. A short disclaimer for you right here that we're part of the Adani Group. It's on your screen now. And now we're going to slip into a quick short break, after which you will be joined by my colleague Mahima, who will give us some insights on commodities.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury
and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Alright, welcome back. You're watching Lunchtime Trades here at NDTV Profit, of course. And, this is a show, of course, where we talk about a lot of things that are happening in the markets as we speak. Let's try to pull up some insurance names because, Nomura has remained bullish on the entire space and has gone ahead and, hiked the target price, even, initiated buy on some names today itself. To name a few, Niva Bupa is the first one where they've initiated buy with a target price of 105. They're winning with quiet confidence. Loss ratios can stabilize at current levels is what they believe, while fast growth momentum continues from here on for something like a Niva Bupa. They expect FY26 to 29 estimate premium CAGR growth at 23% and ROE at 15.9%. Star Health is the other one where they initiated buy with a target price of 675. Annual repricing, cohort-based pricing and focus across 4 pillars is something that they are liking in this particular counter. Deep dive into new accounting method, except ROE of 12 to 14.9% over FY29 to 27 to 29 is something that they're expecting out of this one, and expect more predictable underwriting profitability going forward for something like a Star Health. The other one is ICICI Lombard, where they've initiated neutral with a target price of 1820. Better growth outcome possible only with favorable regulatory events. So a little cautious approach here. They're saying health is the main driver of growth. Price wars in motor and commercial segments is something that they're looking at. High valuation demands high growth momentum. So valuations is a concern, which is why they've maintained a neutral stance here. And PB Fintech is the last one where they've initiated neutral rating with a target price of 1590. Pending regulations could trigger big changes by the management is something that Nomura has flagged off. Multiple new age platforms, derived 90% revenue from insurances in FY26, plus insurance market share tripled from FY22 to 26, plus the credit business remains volatile. And all of these factors combined together, are something that, makes Nomura bullish on the entire space, as well as the names that we just talked about. So that's with regards to insurance names. But Persistent Systems has, launched a voluntary public takeover offer to acquire Nagarro in an all-cash deal valued at nearly 11,820 crore. And Jasmeet joins us with what makes this deal unattractive and why is the stock tanking 10% as we speak. Jasmeet?
Well, Mahima, thank you for that. Before we get into why the stock is tanking, let's quickly understand what is the deal about. Well, as rightly said, Persistent to acquire Nagarro on the open market offer, and here's more details on the same. Well, Persistent expects that the combined entity value post the acquisition will be nearly $2.9 billion. That's roughly an uptick of 70%. Along with the acquisition, they also say that the overall goal which the company had to reach $2 billion by FY27 March, they're already reaching that in advance because of the acquisition. Let's quickly understand more details about the acquisition and why is it impacting the stock. Well, the first one is the overall company has already locked in 21% stakes from one of the largest investors, and once the company had announced this particular acquisition, the stock rallied nearly 20% in the pre-market, and currently the stock has rallied nearly 90%, showing the overall positive momentum. Now, in terms of the deal math, the company is offering €81 per share, and the stock is already down 55% on Y20 basis. So the company is giving a premium of roughly 120% on the share price, which was previous to the deal was announced. Now, if you look at the other key details, the overall acquisition is roughly valued at €1.1 billion, roughly 13,000 odd crores. And with this, Persistent expects that while acquiring this company, that they will extend their market share in Europe. Now, the key concern why the stock is tanking are on the multiple fronts. First one, Nagarro has a very slow growth compared to Persistent. Nagarro has been growing at a range of 5 to 6% over last 3 years, while Persistent is among the fastest growing IT companies, where we have seen the growth of Persistent nearly at 18 to 20% in the previous year. While the second reason is overall margins. Now, Nagarro is lower in margin compared to Persistent, so there's a fear that there will be margin dilution. Now, when you look at Nagarro as a company, Nagarro is a very large company to acquire Persistent, nearly 70% of the entire Persistent value. So the integration risk is something still is watching out of how it company acquires. So all in all, these are a few reasons why stock is hanging in trade today, and some streets watching out of how does the whole integration works out going ahead.
Okay, Jasmeet, thank you so much for getting us those details. With that, we're completely out of time on this edition of Lunchtime Trades, but do stay tuned because you have small cap buzzers on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMAC, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality.
He has been tracking markets for over
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of iFinance. Now, the company has recently seen an upgrade in its credit rating. Long-term credit rating has been upgraded by India Ratings to Ind A+ with a stable outlook. Along with this, their commercial rating has also been upgraded to India A1+. So what's the way forward? By how much can their cost of funds come down because of the same is something that we'll try to decode and get the answer from the management on the show today. Apart from that, we'll be also talking about a stock called Ramco Systems. The stock has been gaining for the last 5 consecutive sessions, and in the last 5 sessions, the stock is up nearly 35%. For Vikran Engineering, the stock has snapped its 4-day losing streak. At one point of time, the stock was up as much as 9% in trade, and this is largely on the back of a big order announcement of close to 3,500 crore rupees.
When it comes to Bansal Wire, that stock has gained as much as 10% in trade. The stock had hit its 8-month intraday high, and this is on the back of the bullish data that came in on Thursday, where the names of large mutual funds have come up and they were the buyers in the block deal that happened on Thursday. Names like HDFC Mutual Fund, Invesco, Malabar India Fund were among the prominent buyers of this block. And lastly, when it comes to Bajaj Healthcare, the stock had gained over 15% in trade, its biggest intraday move that we have seen since September 2025. And this is on the back of an approval. In fact, it's first to get in India the approval for a tablet that treats partial onset seizure in adults. So that is one of the reasons why the stock has been gaining in trade today. Now let's look at the market. The Nifty, it's a very dull day of trade. The market is down around 80 odd points. It's been holding around the 23,900 to 23,950 support levels, but not much of an action that we are seeing over on the markets. The downtick is largely led by Reliance Industries and M&M in trade. When you look at the sectoral indices here, auto is a top sector loser. It's down around 2.1%, followed by PSU Bank down around 1.5% in trade. Very few gainers here. Nifty Pharma and the Nifty Metal up anywhere between 0.7 to 1.2% in trade. But when it comes to small cap index, the trend is clearly reflecting the benchmark. The small cap index is down at nearly 0.5% in trade. But Varsha, which are the key stocks here that are buzzing in trade today?
Well, you know, apart from your list, we have Omax, which is buzzing on the. So they have actually announced dedicated hospitality vertical with 6,200 crore investment. You also have Mac Power CNC. Omax is up almost 18%. It's 41 times of its 30-day average. The volumes are trading. You have Mac Power CNC also buzzing in trade. Stock is up almost 14% in trade. Of course, strong volumes there also. Gujarat Natural Resources. Let's pull up that chart as well, because the stock is up almost 36% in last 5 sessions. Today also stock is buzzing on the back of strong volumes. Gujarat Natural Resources. You have Borosil Scientific as well, you know, buzzing in trade. Saxoft is also buzzing. Even Quality Pharma, actually, you know, whole pharma pack is actually buzzing. You have Quality Pharma, even Ceneris was also in focus, was up almost 3 to 4% if I'm not wrong. Quality Pharma is up almost 7 to 8% in trade. On the loser side, though, you have Krishna Foskam, which is on the losing trend. You have Advanced Enzymes, IFGL Refactories, and Oriental Aroma, which are losing when it comes to the small cap 250. But one stock which is in focus is, of course, iFinance. Now India Ratings have upgraded long-term rating to in A+, which is a stable one, and even commercial paper rating have also been upgraded. But to speak more on this, we are here joined by Mr. Sanjay Sharma, who is Managing Director at iFinance. Mr. Sharma, welcome at NDTV Profit. Pleasure to have you. You know, how quickly will this benefit be visible in your overall borrowing cost and margins, and by how much?
Good afternoon, and thank you for having me on the platform. I think since our IPO, it was a matter of time that we would have applied for our re-rating. And I think we are happy that it's happened in very quick time, considering that it has happened immediately after the war in the West Asia was called off. This has a clear impact on our cost of borrowings. Today, last year, our cost of borrowing was about 10.8%. Our incremental borrowings come today at about 10.2%, and with this rating upgrade of A+ stable, I think we will see a 20 to 25 basis points of further reduction. So obviously, it will not have an immediate impact, but any incremental borrowing that we bring in will be closer to 10.1%. So that would be the effect that we see. In the year, we will see a 30 to 40 basis point drop in our cost of borrowing.
Okay, as you were mentioning about the war has ended, but are you seeing any impact of the same on the MSME's businesses, be it for short term, but any impact that you're seeing?
Vineet, I think it's an excellent question. When we talk of micro scale MSMEs, these are the unorganized businesses which sell their entire produce, whether they are manufacturing something or they are trading into some product. It's all done at the local level. So they rarely get impacted by the bigger movements of the organized industry, like logistic problems or such problems don't really affect them. And that's why we have not seen any change in their approach to business. They're doing good business, they're growing, and the demand for working capital loans which we provide has not diminished. So while we had initially said that we'll watch for what are the effects of the war in the first 2 quarters, but in the first quarter, we haven't seen any sort of indication that it has impacted our customer base.
Right, so no stress on asset quality that we should expect at the end of the first quarter.
No, certainly. There won't be any impact that you'll see. In fact, in our customer base, we have been seeing a drop in credit costs for the last 6 quarters. And I think this will be the 7th quarter where we'll continue with that trend. And the reason I say that, Vineet, is that, Soumit, is that it is the outcome of bounce rates, collection efficiencies, and all these are trending to very good levels. So I don't see that we will see any surprise in this quarter.
Right. And sir, your AUM has grown 27% in disbursement at 20% in FY26. How confident are you sustaining that 25 to 30% growth when it comes to FY27?
I think we are quite confident, and the first quarter is turning out to be a good quarter in terms of disbursements. We had given a guidance of 25 to 30% growth in this year, and I think we are on track for that growth. I also mentioned that our customer base doesn't seem to have got impacted by the effects on the economy from the war. So I think we don't see that going anywhere except in that range.
You also mentioned to launch new products like gold loans or solar financing, if I'm not wrong. What's the timeline and expected contribution for the next 2 years?
Varsha, we are in the process of doing a market study, so it's very early days.
Okay.
But we do want to look at starting something in this year, at least one of the ideas. And I think it will be only after we do detailed market survey to find out what do the customers really want, how can we fulfill a need in the market.
Okay. When we see a portfolio mix, I believe mortgages form around 23, 24 odd %, followed by hypothecation loans of around 40% and unsecured loans 37%. Say over the next 1 year, how will this portfolio mix change?
Yeah. You're right. About 23% of our portfolio is secured with property, and the remaining portfolio, which is the 77%, is secured by hypothecation of working assets. And in business, hypothecation is a more relevant or more suited product line. So we offer both. We've seen the property-based or mortgage-based lending increase in the last couple of years, and we believe that this from 23% will probably move to 25 to 30% range in the next 2 years.
Okay. And sir, any further plans for any strategic funding going ahead?
Yes, I think we will need to raise borrowings because it's a business which is doing well. We disburse close to 400 to 450 crores of disbursements every month. So the equity that we had raised during IPO will get deployed and be used to leverage. We took almost 4,500 crores of borrowings last year, and this year with the growth, that number is going to probably cross 5,000 crores. So there is a lot of borrowing up ahead. And even every month, we find that we get borrowings from either banks or our typical providers, be it DFIs or NBFs.
But no plans of raising any equity?
So we raised equity just in February, and that equity is enough to leverage ourselves and take us to a AUM of almost 13,000 crores. Today we are sitting at about 7,300 crores. So it has a 2.5 years of headroom for us.
Okay. And lastly, if you could just take us through what is the guidance that you're seeing for FY27 when it comes to credit cost and your net interest margin?
Sure. I think on the credit cost, as I mentioned, that we have seen a reducing credit cost for the last 6 quarters. The last quarter of last financial year, our credit cost was 4.3%. And this year, we want to keep it in the 3.5 to 4% range. My sense is that in the first and second quarter itself, we will see it fall into that range. So we're expecting a 3.5 to 4% credit cost. NIMs will stay more or less steady because NIMs on one side will have the impact of this credit rating that has improved. That will bring our cost of borrowing down. At the same time, the mix of mortgage will move from 23% to maybe 25-27%. That will bring the NIM down. So both the effects cancel out in a way, and our computation says that we will stay in the same range of NIM. 14.6% is the actual effective NIM, and that's where we will be.
And just one thing, I believe 5 states contribute around 60% to your AUM. Will your focus continue to remain in these 5 states, or are you looking to diversify as well?
Yeah, so Amit, we are there in 18 states and 3 union territories. So I think in terms of geographically diversifying, we are probably the most diversified company among peers. When you look at top 5, while we may have let's say 55% of our business from top 5 states, most of the similar companies have that number is almost 70% or thereabouts. So we are well diversified. We will grow in all states. So it's not that we have excluded any states in growth. The purpose of diversification was to keep the book geographically diversified and not to focus and concentrate on a single state. So we'll continue to focus on that strategy.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for the company. Well, that was the management of iFinance. Let's also welcome in our fundamental guest, Gaurang Shah, Senior Vice President, Geojit Financial Services. Gaurang, you heard the management, 25 to 30% is the AUM growth that they're targeting. No issues on the asset quality front despite the geopolitical issues that we had seen. How are you looking at this counter? Is it attractive enough at current valuations?
Thank you so much, Sumit, for having me on the show. Good afternoon to all your viewers and to all of you all. Small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, I do not have any kind of personal investments, no financial interest, no conflict of interest. But we share similar investment ideas with our clients. They might have their investment interest. So one thing is very clear, Sumit, as the verbatim was given out by the management of Air Finance, that cost of borrowing is likely to stay low. Asset quality is strong and it is likely to improve. Credit demand, Sumit, is expected to stay at an elevated level. So this possibly tells us that the earnings that we are going to witness for not only this financial year, but next financial year is likely to be strong and improving. Point number 2, as a brokerage house, we've been very positive on the entire BFSI segment, and that consists of public sector banks, private sector banks, and strong NBFCs. We have been positive on NBFCs, diversified small finance banks, etc., for a long time. On Air Finance, we do not have any specific coverage, but we remain very positive on the NBFC sector. Some of the names, if you will, L&T Finance, Bajaj Finance, Shriram Finance, AU Small Finance, Credit Access, Grameen. These are some of the names on which we have a positive coverage. And we believe that if the India's growth story is on track, and if we indeed want to become a hub for the countries to outsource from India, then credit demand is going to stay elevated. There is no doubt about that.
Okay. Well, thank you, sir. Let's slip into a short break and we'll be back and address more small cap stocks post that.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Welcome back. The small cap action continues. Let's pull up Ramco Systems. Let's see what that stock is doing, because the stock is up 39% in the last 3 sessions. Today it's up 10%. It's up 70% in a month. What can be the key triggers behind that? We are here, Jasmeet, to tell us more about that.
Well, Varsha, thank you for that. Before we get into the key triggers of this particular counter, let's quickly understand what does the company do. Well, the company operates into the software space and also provides the ERP and payroll platform spaces, and the payroll platform is basically the top leading sector of the company. Now, in terms of the stock performance, as rightly said, the stock has gained nearly 39% in last trading sessions, and today is up about 10%. Well, if we look at over last 1 month, the stock has nearly rallied 70%, and over a year, the stock is up nearly 89%. Now, in terms of the key trigger of the particular counter, we basically see the volumes and also a turnaround story for this counter. We have seen over last 12 to 15 quarters of margins from being negative to flat, and now they have improved 24%. That's the key trigger. Further, even the management commentary, which is quite strong going ahead as they focus on the building an AI native company. And company has also launched its own AI tools where they are also creating overall conversation platform to help the clients as well. Let's quickly understand the top 5 key takeaways from the FY26 result, what we understand. The first one, the revenue saw an uptick on the back of the recurring revenue because of the ERP. So the company saw revenue coming again for the ERP process itself. The second one is the overall margin expansion that we have seen in this particular quarter, which has improved by nearly 1000 BPS points. Now, the fourth one would be the company expects a near-term moderation on the back of aviation moderation on the back of that West Asian war, but given the war has seen a downtick now and there's been easing, we are seeing the stock rallying on the same basis, expecting that the Q1 might not have the impact that was expected due to the ongoing war. Now, in terms of the last key point, we have also seen that the overall revenue saw an uptick of 13%, while the net profit reversed from loss to a profit of nearly 41 crore versus a loss of 34 crore. In terms of management commentary, they want to build their own AI native product so that they can enable AI deeply into the operations.
Understood. Well, thank you so much, Jasmeet, for all the details. Gaurang, we've seen turnaround in this company. Maybe Q1 might turn out to be a good one, but simultaneously, we've seen this stock giving almost 70% return in the last 1 month. What should investors do at this point of time?
Well, honestly, I think when you have these kind of rallies on fallback of course, a lot of news flows, if you are venturing into the stock at current levels, it might be a little bit disastrous. Having said that, Varsha, I won't be able to give any specific buy, sell, and hold on Ramco Cement since we don't have a coverage. But I think, as your colleague Jasmeet was just elaborating what the company plans to do, looks like that this should possibly augur well for earnings to come by. But since anticipation, normally you always have a rally in the stock before the reality sinks in. It's a company that can perform well, I can say that, but buy, sell, and hold is difficult. But I would also at the same time urge that if you have got into the stock from a short to medium term point of view, after this kind of a rally, I think it is always better to use your common sense and wisdom.
The next stock that remains in focus is Vikran Engineering. The stock has been buzzing on the back of a big order announcement. It has snapped its 4-day losing streak. Let's get in Parth with more details on what does this order actually mean for Vikran.
Absolutely. So Vikran is a power infra EPC company that operates across various of sectors like power, T&D, solar, water, and even railways as well. The company's order book stands at 5,700 crores as of today. And the reason why they're in focus is because the stock has gained over 8% today, hitting the highest volume since December 2025. Now, the reason behind this move is that they have won a big 3,518 crore order from NOPL, which has a size of 969 megawatts and an execution timeline of 12 months. Now, earlier this order was from Onyx, but now it has been replaced by NOPL. So this relation between NOPL and Onyx gets a little bit complicated. So let's try to understand in a simple language. So before in December 2025, Vikran had received an order of around 2,035 crore from Onyx, which was originally for a 600 megawatt solar plant. But for this project, they had created a special purpose vehicle or developer for this project by the name of NOPL. But now Vikran has acquired a 100% stake in this NOPL, making it their wholly owned subsidiary. So now the project execution is directly related with NOPL instead of Vikran being the subcontractor for Onyx for this project. So of the previous order that Vikran had won from Onyx, around 388 crores of that has been executed, and the rest around 1900 crores has been cancelled because of this restructuring process. The management has said that this has no impact on the company because it's just a restructuring thing. Lastly, moving on to the management outlook as well, in FY27 the company has guided for a revenue in the range of 2200 to 2500 crores, targeting the EBITDA margins between 14 to 15%. In FY28 further on, they target revenues of 3000 crores along with achieving positive operating cash flows. So the key monitorable going forward will be if the company is able to achieve its FY27 and FY28 guidance which they have given.
Right. Well, thank you so much, Parth, for all the details. Moving on, let's pull up chart for Bajaj Healthcare because that stock is buzzing. It's up almost 14% in trade. This is on the back of company receiving SEC recommendation for a drug or a product which is used for treatment of partial onset seizures in adults. Now, SEC recommended approval for manufacturing and marketing, and they plan to continue working with the regulator for final approvals. Well, onto the strategic importance, this marks key regulatory milestone for Bajaj Healthcare, which also strengthen presence in specialty CNS, that is neurotherapy segment. Lastly, on to future outlook, well, they're well positioned to manufacture and launch the product and aims to expand portfolio of differentiated specialty pharma products. Overall, if you see, this is the reason why the stock is buzzing, and in the last 1 month also the stock is up 14%. But that's all, guys. This is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. So if you haven't already done that, do start sending in your queries on the numbers that are flashing on the top of the screen. You can also call us for your stock-related queries as well. But as we do a very quick check of how the markets are doing, because now we are trading below that 24,000 mark. Now, while it is a psychological one, it's also an important one for the markets to track this one. And as we look at the heat map for the Nifty 50 as well, individual movers, of course, have been strong from the morning, but seeing some pressure now. So DRL was up almost 4% at one point of time. Now, below that 2.5%, just around 2.5% right now. Max Health, Cipla, as well as Hindalco are some of the other names that are doing well in trade today. While in terms of the losers, you continue to see pressure on a bunch of them. So we've seen actually build up of those losers in today's trading session as well. And you're seeing pressure on Kotak Mahindra Bank as well as, on some of the bunch of the other names. like M&M, Eicher Motors, amongst others, those continue to be under pressure for today. In terms of the sectoral heat map, also what you are seeing for the index are some of the other names. So you're seeing that for the Nifty Pharma, which is doing well, but auto has now slipped below that 2% mark in terms of sectoral index. Nifty Media also down about a percent and a third, and continues to be under pressure yet again. When you look at the advanced decline ratio though, that has been the other key pain point for the markets today. Now we saw that in the morning the declines actually took the breath away, and that just continuously climbed through the day as well. So almost 1700 stocks that are declining in trade today versus about 940. But while we have seen some buying in individual names, let's look at the mid cap 150, small cap 250 also very crucially, because you have seen the small cap index actually do better. So you've seen 0.5% downtick continuing for the mid cap 150 over the and actually a similar trajectory there as well. So over the last couple of weeks, the small caps have been doing well compared to the mid packs. But for now, both of those crucial for the last 1.5 hours of the trading session. BSE 500 shows you those pressure points today. Astral, Persistent, Supreme Industries, all of those stocks are the top losers for today. While Zydus Wellness, Ajanta Pharma are doing well, you're seeing a lot more in terms of the tech names also, including L&T Tech, that's down almost 5.5% now. But let me welcome in our guest for the show who will be solving your stock-related queries, Vishnukant Upadhyay, AVP Research, Master Capital Services. So on the technical side of things, we'll also be joined by Mr. Chokalingam very shortly on the fundamental side of things. But Vishnu, very good afternoon. Thanks so much for joining in. Let me go across and start taking the first stock-related query. It's coming in on Ashok Leyland. Shankar from Bengaluru actually is asking us this question. He wants to buy 1,000 shares of this counter. Has been interesting because slipped from that 211 mark all the way down to 144. Seen some revival as crude prices have taken shape. But Vishnu, is it a good time to buy for the next 2 to 3 months for Shankar?
Hi, Puneet. Very good afternoon. So, so the stock is, just taking resistance somewhere around 200 exponential moving average, but just chart pattern is looking quite good. So, I believe as long as the stock is remaining above 148, one can go long, maintain stop loss below 148, 147 sort of levels. While on the higher side, I believe 178, 179 kind of levels can't be ruled out in a very short term.
Okay, so that's the view coming in on Ashok Leyland. The next one that we have is on two names, BEL as well as PFC. Jerry from Pune wants to know from a slightly long-term perspective if he can go ahead and invest in one of these counters or can divide his money on both of these counters. Vishnu, PFC of course is in news today on the back of board approving the merger of PFC and REC. But both of these, where are the charts looking more attractive, or should he divide his money?
Well, so definitely, I would prefer to divide money in both stocks because both stocks are looking good, basically from the technical standpoints, and they both are a portfolio stock. So first, let's talk about the BEL, Bharat Electronics Limited. Their stock is trading a very, close to it's a very crucial horizontal support that aligns somewhere around 399. So from risk reward point of the view, which is in our favor, currently one can go along with keeping stop loss below 195, 196. While on the higher side, 440, 460 will definitely be definitely on card in a very short-term span. While in the second PFC, right? Power Finance Corporation, although their stock is in news, but still from the technical perspective, their stock is trading above the 200-day moving average. So as long as the stock is holding above its a long-term key moving averages, that is a 411 kind of levels, one can go long, maintain stop loss below 405. While on the higher side, 465, 470 sort of levels can't be ruled out.
Got that view, Vishnu. But let's go across, take another question now. And this one's coming in on Persistent Systems. It's a stock that's down and out in trade today, made a big acquisition. I think Street's taking some fear of the lower margin profile as well as the higher debt that the company will have to take to go across with this acquisition as well. But Vishnu, on the charts, I think we've been looking at 4,300 as an important level. Is that the level that you're also watching out for? If that breaks, what are you looking at in terms of downside for this counter?
Pani, so that's a news-driven fall in a persistent system. But the major horizontal support that lies 4,100 near that level. is still intact, but sadly the prices fell below. It's a 200-week exponential moving average that had been acting as a very crucial support for long. But in fact, here I would prefer to adopt wait and watch kind of strategy. If prices manage to hold above 41, then this could be a golden opportunity to go long in the counter. But if prices falls below 41, then definitely one can get exit from the counter.
Okay, all right. The next one that we have is coming in on Kalyan Jewelers. By the way, we are also joined by Mr. G. Choklingam of Economics Research, on this side of the show as well. Mr. Choklingam, next one is on Kalyan Jewelers. Our viewer Aditya Gaur is holding 5,000 shares bought at the levels of 435. He wants to know as to what should be the next course of action for him. What would you suggest on this one? First of all, a very good afternoon to you.
Yeah, good afternoon. So we are very optimistic on Kalyan Jewelers. In fact, a couple of weeks ago, we have come out with the buy report. First of all, tactically, the stock is beaten down a lot, but of course, that doesn't justify buying. Fundamentally, also, it has become quite attractive. Third, I believe that even if import of gold is controlled, the domestic sales of jewelry will not come down, because if you do the primary research in the market, the appetite for the jewelry is unlimited among Indian households. And also, I expect the government to come out with some attractive scheme for recycling gold within the country to avoid outflow of precious foreign reserves. So that also would be favorable to domestic jewelers. So considering all these facts, we maintain a very strong buy on Kalyan Jewelers.
That Mr. Chokalingam, and Mr. Chokalingam, also a very good afternoon to you. But we were talking about persistent systems, and I think it's important to get a fundamental view as well on the stock, because technically a gold standard in itself in the mid-cap IT space, down 10% now on the acquisition. How are you viewing this counter now?
See, it is really worrying to touch IT stocks. In fact, we do have two stocks, but I am quite apprehensive about the sector. But if you ask me persistent, no doubt, it's a proven to be extraordinarily well-managed company. There is no doubt about it. Even the acquisition valuation, if you see, though it is at premium to listed price of the investing company, the acquisition value is around 1.3 times, the valuation to annual sales, which is also reasonable. But the only concern is on the industry outlook and the valuation contraction happening in the industry. So maybe little risk-taking investors can consider. Otherwise, I would move away from generally IT sector to other sectors.
Okay, all right. The next one that we have is coming in on SW Solar. Dipti from Chennai has bought 276 shares at the levels of 650. Wants to know if she can average, hold, maybe add more or sell. Vishnu, what would you recommend?
Well, definitely, Mahima. So recently we have seen prices, just given a breakout from the neckline resistance of inverse head and shoulder pattern, and the stock is decisively trading up the all key moving averages. So the stock has started to form a higher highs, higher lows kind of pattern. So it could be seen as an initiation of a fresh bull run. So definitely from the technical standpoints, I would prefer to go long. One can go long on present juncture as well, with keeping a stop loss below 222 sort of levels. On the higher side, 280, 290 kind of levels can't be ruled out in a short term. There is a disclaimer that we have given this recommendation to our client as well.
Got that view, but let's go across, take a first call for today. This is Narendra, who's dialing in from Hyderabad. Narendra, very good afternoon to you. What's your query?
Yeah, good afternoon, sir, and good afternoon, panel members. Regarding my question is C8 Limited. It's a tire company. I have the quantity, fixed quantity at the rate of 3,700. I lost like 1,500.
Okay.
So can I hold or can I sell this stock?
And Narendra, you saw the charts or the fundamentals before buying this counter?
Yeah. That time actually this lost because I am thinking the war issues, the crude oil, the tires is impacted, right? So I'm looking for this fundamental. I bought that time. But unfortunately, this war is came in middle. So what is the now like future about this company and the tires company growth? Or can I exit or can I hold it? That's my question.
Got it. Well, Mr. Chokalingam, let me come to you then on CAT, because of course you've seen the crude price as well as higher rubber prices be an impact on margins for the tire companies. Would you recommend Narendra to continue holding this counter for the next few quarters and then take a look again?
I am quite optimistic, even in the short to medium term, on tire stocks like SEAT. As you rightly mentioned, the crude oil is down almost to 38% from post-war peak price, which is too good for tire companies because synthetic rubber is the most dominant input along with other derivatives of oil for tire companies. Yes, natural rubber price is quite elevated, but historically we have seen whenever crude oil price corrected and synthetic rubber prices have gone down, the natural rubber price also corrected. So therefore, I believe CRT is a good stock for short to medium term.
Got it. Well, let's also put in focus Oberoi Realty as well, because the company is stepping into the Gurugram luxury market now. And my colleague Rishabh is now actually with the management of the company. Let's listen into what he has to say.
Absolutely. We're here in Gurgaon. I'm with Mr. Vikas Oberoi, Chairman of Oberoi Realty. Now, Mr. Oberoi, thank you so much for taking time out. This is the first project that you've come up with outside of the Mumbai metropolitan region. Give us an idea about what stood out for Delhi and Gurgaon as a market to Oberoi Realty.
Well, thank you, NDTV, for having me over. It's a milestone moment for us. After 4 decades of working in the Mumbai metropolitan region, we are here in NCR. We've brought in our best product. 360 West was built in Mumbai. We are now building 360 North. It's I would say, a 2.0 version of 360 West. And we come in here with all the learnings, and we are humbled by the way people have received it, and very excited about it.
Mr. Oberoi, just a few numbers, about 6,000 crores in total investment, including land, about 16,000 crores of revenue potential is what you see. Give us an idea of the timeline as well. And you already said that you've studied this market very deeply. You've studied your competitors, the design, everything that goes into this. Talk to us about where you feel Oberoi Realty stands in terms of what you will be offering in this market. What's new that you will be bringing?
You know, we are bringing our old self here. What is our old self? Our old self is, literally our DNA is design, our DNA is execution, our DNA is quality. We are bringing all of that here. We are bringing our best practices here. And we feel that this is a great market. I always say that Gurgaon is one market which has both depth and width. Mumbai has great depth, but we are restricted by the width. So I'm very attracted to this market, and I see ourselves grow here.
Mr. Oberoi, also you've been in Mumbai for about 4 decades, finally stepping out of your home market. There's Noida here, there's Ghaziabad, Faridabad, a bunch in the national capital region as well, akin to what you have in the MMR. Talk to us about what other micro markets within Delhi NCR excite you at this moment.
So firstly, we are driven by price points. We are comfortable working in an area which gives us anything above 20 or 25,000 rupees a square foot. And these are the markets we want to, frankly, get into. We are very happy to look at NCR. We are happy to look at Noida. We are happy to look at further into Gurgaon. But the basic threshold should be the price point that we are really looking at.
Mr. Oberoi, also give us a sense about what you feel about the general market right now, right? There's a lot of commentary about how it's slowing down, how certain valuations are really sort of in a bubble. Give us your personal view on what you feel.
I personally feel that there's nothing like that. Obviously, the entire world is in some sort of a stress or a turmoil given the war between Iran and the US and so on and so forth. So given that, obviously, we have economic shockwaves in every vertical, and real estate is not alien to that. But, it's all momentary. It is going to bounce back as soon as all this fades away. So, buying a house is not going out of fashion. People have become more and more affluent and ambitious about how they want to live. And So I don't feel, that there is anything that is going to stop or slow you down.
Fair enough, Mr. Oberoi. Also, give us a sense about what you are seeing when it comes to your competitors, right? This is a market where you have ultra-luxury premium residences already in play. You have a certain demand for it already, be it investors, be it end users. Talk to us about what you feel about the competition here.
So, we have great respect for everybody who's working here. And we are just bringing, what we are good at. We're bringing ourselves here. We are bringing our experience here. And we will, I guess, only improve the market. And so, there's enough space for everybody. And I think we'll coexist. And that's what we've done when people from...
Right, okay, so of course that was Vikas Oberoi of Oberoi Realty, and Rishabh exclusively speaking to him on the entire space and as well as what is the way forward for Oberoi Realty. But it's time for a rapid fire round. Mr. Oaklingam and Vishnu, you both know the drill. Try to keep your answers as short as possible. The first one is on the pharma space. Rajesh wants to know as to which stock can he go ahead and invest in, considering that it's already run up so much. Vishnu, what would you recommend?
That's a Laurus Lab basically. One can go long in Laurus.
In the export names, Rajesh from Hyderabad has picked up Pearl Global, Natco Pharma and Azad Engineering. Mr. Chokalingam, either of those names that you like right now?
Maybe Azad Engineering on decline.
Okay, the next one is on Sirma SGS. Dilip from Kolkata is holding 150 odd shares bought at the levels of 700 rupees. From a long-term perspective, continue to hold, Mr. Chokalingam?
I would sell on rise because L&T is getting into similar business.
Mr. Chokalingam, you find a way to mention L&T at some point of time in the show, but the next one coming on case on KEC International, and Mr. Chokalingam, I'll give you a chance to complete your view also on L&T, but our viewer Jeshi from Coimbatore wants a 1 to 2 year view, so Mr. Chokalingam, both those if you want to answer.
L&T I personally do not own. I never invest in stock like L&T personally. I am only in a small cap, mid cap.
Okay.
Yeah, so I prefer a stock like a Techno Electric to KEC, but if one is holding KEC, one can hold because the track record is good. It has come down a lot, so one can continue to KEC.
Okay, the next one is on BSC as well as NSDL. Which one is a better bet on the charts, Vishnu?
BSC and second stock is?
NSDL.
NSDL. So basically BSC is looking good on a graph, although slightly it has fell below to 21-day exponential moving average, but still I would prefer to go with a BSC.
Okay. Next one's coming on Nitin Spinners. Our viewer Venkat has bought shares at 570 odd. Mr. Chokalingam wants to know a long-term view and if it's a good time to add.
It has run up a lot. At best one can hold it.
Okay, the next one is on HDFC Bank. 500 shares bought at the levels of 775. Good time to hold, sell. Mr. Oaklingam, your view?
One can buy. Medium to long-term prospect looks very good. Industry prospect also too good.
Suzlon Energy bought at 45 by M. Ahmed from Delhi. Vishnu, he wants to know a 6-month view for his 1,000 shares.
Yes, one can go long, but maintain a stop loss below 54. On the higher side, I'm expecting 66 and then 67. Sort of levels can be seen on the card.
Okay, Keynes Tech bought at the levels of 4,200. Our viewer Vishwanath from Bengaluru is holding 50 shares. Wants to know if he can go ahead and average at the current levels. Vishnu, would you recommend that?
Keynes Technology.
Keynes Tech, yes. Stock is currently trading at 3174, down to 2.7.
Yeah. Basically, no. One can avoid the counter. Technically, it's looking weak.
Rajiv Kashyap from Gurgaon is holding on to Acme Solar at 273, Mr. Chokalingam, and asking what's a price target that he can expect in the next few months.
Oh, I am a wrong person for a few months.
So, if you can recommend a long-term view on the stock, because I think the QIP was also at a similar price.
Even in the short term, I am not optimistic because all big players have entered the solar business. So going is going to be very tough for mid-sized players.
Okay, Cipla, is this a good buy from a long-term perspective? Ishwar from Kolkata wants to know. Mr. Oaklingam?
Yes, certainly it's a good buy for long term.
And Mr. Chokalingam, since you mentioned on Acme, because we had a lot of question on Vari Energies today, stocks down 5%. Do you think that's a better play?
See, valuation comfort is not there. Now, if you look at, two largest industrial houses also getting aggressive into solar business model. So that gives me a lot of fear. So I would be a seller of all mid-sized companies unless they are valued at less than 30 PE.
Okay, got it. Well, that was the last question for the rapid fire as well as this edition of the show. Vishnu as well as Mr. Chokalingam, thanks so much for joining in as always, giving us your views across a whole bunch of stocks and spaces. But viewers, out of time on this edition of the show. Thanks so much for watching. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
PMAC, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us. Welcome. You're watching India Market Close, and we've come off, lost some gains. Remember, Nifty rebalancing is also going to be taking place, and that could be something that will kick off in the next 10 minutes or so. Let's pull up the intraday of the Nifty if we can as we start off the show. And look at what's happening. You're not at the lowest point of the day, but close enough below the 24,000 mark. So it was a muted start and then some pressures coming in, Alex.
Yeah, absolutely. And what is also visible, Tamanna, is that we're once again back to that very narrow range. I think that's been a bit of a theme over the past couple of sessions in particular, but not too much of a gap between the high point and the low point of the day. And I guess to a certain extent, one can assume that that will continue in the near future. Of course, in the broader markets as well, you're not seeing very big moves. It's across the board cuts of about 0.4%, but like the chart is indicating, off the low point of the day, small cap index as well reflects that. But the advanced decline ratio is at the widest point of the day, more or less, very close to that, right? So it's not really very heartening.
Not heartening at all. Let's pull up the Nifty heat map for you, and you will see IT stocks which are really pulling down the market more than anything else. A smattering of auto also adding to that pain. Mahindra & Mahindra top loser, 2.85% down right now. Kotak Mahindra Bank, after it's clear that Ashok Vaswani, the current CEO and MD, will not be continuing and taking an extension. Indigo also losing steam. Eicher Motors, Maruti, Bajaj Auto, you have your entire auto pack also facing the heat. It's basically healthcare which is doing fine. DRL, after that note which was very positive on it, a brokerage note, it's about 2.5% up. Max Health is also doing fine. But, pull up the Nifty contributors. You actually have some of the heavyweights which are actually pulling down the markets today. RIL, M&M, L&T and Maruti among them. So Eternal is the one that's actually bolstering the markets to some extent.
Yeah, just about 5 points though. Reliance Industries is a big weight down, 1.8+% lower, and it's not been the best year 2026 has for Reliance Industries. I do want to pull up the sectoral indices as well. You will see auto at the bottom of the screen where Tamanna is standing. It's down about 2% or so. Reliance Industries weighing the oil and gas index as a whole, and IT does stand out here, but it's more because of the smaller counters in the IT space, and really that's going to be one of the big talking points today.
Persistent,
yes. Right? Pharma, as you pointed out, is doing well. Dr. Reddy's Laboratories, as well as Cipla and a couple of other names from that pack in healthcare. I've actually witnessed in the recent past in particular, when there's such an amount of red on the screen, usually these are the two indices that will be in the green.
Yeah, so the defensive play comes into focus, and really not enough to bore the entire mood coming in. But you have to look in a little more detail to understand what's happening. So I want to pull up the gainers and losers in the broader markets before we get to the main triggers you're seeing on D Street this afternoon. And look at it. It's news flow, right? Coming on the losing side. So Persistent, the valuations of their acquisition is making the street a little uneasy. Astral is going to demerge two parts of his business. The street is not so sure how that will work out. Supreme Industries, who's in the same space, is getting pulled along for the ride, so that you have some kind of a pain there. On the positive side, it's pretty much all the pharma names, right?
Yeah, it is. It is quite a few of them. Ajanta Pharma doing well, but if you have a few other names, Finolex is okay, Carborundum, not too much in the way of a very clear theme in terms of the broader market winners.
Yeah. All right, so here's what's been happening. Supports around 23,950 to 23,900 levels are being seen. There's a structural uptrend that is intact as long as the Nifty stays above 23,800. Expect continued consolidation with a positive bias. You'll see a breakout over 24,200 to 24,250. That's required to trigger the next big rally. SMIDs, or the small and mid-cap stocks, are seeing a higher sell-off than the benchmarks this afternoon. Metals and pharma are seeing buying. There's sell-off in PSU banks, auto, IT. The Nifty rebalancing, which was expected in the last half hour of trade, you need to keep an eye out on. For the Bank Nifty, resistance zones at 58,500 to 58,600, 59,000 to 59,195. Support zones at 57,600, 57,330 to 57,500. That's a crucial structural support. Himen Kapadia of DR Choksi FinServ with us this afternoon. Samir Dalal of Natwar Lal and Sons Stockbrokers also joining in. Welcome to both of you. Himen, I'm going to start with you on a chart check.
Very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. Well, 1,100 points of a Nifty upside, Tamanna. We need to cool off a bit. We have. The consolidating hasn't gone down much. There's an open gap which should have been covered, hasn't been. Plus, there's a monthly expiry tomorrow, Tamanna. So Nothing seems to suggest that we're going to do something very positive in a day or two. We are in a range between 23,800, 24,200. But if things need to be more on the positive side, 24,344 needs to get taken out. I don't think we are there yet. Consolidation could take a few trading sessions more. As far as the bank nifty is concerned, Tamanna, 58,712 is a level to watch out for. It seemed a tad bit overbought. Maybe same logic, little bit of consolidation. 57,364 is important, and below that 57. So these levels need to hold. Otherwise, VIX is below 14. Everything is okay. Crude is cooled off a bit. Currency is better. So it's more script specific. But the markets still don't seem to be going anywhere. They haven't decided on a trending bias. And like I said, after 1,100 points of an upside, they need to catch their breath, so to speak. Tamanna.
Right. What are the individual names that you're liking in this kind of a market? Because in the broader markets, and good afternoon to the both of you, but in the broader markets, there are still a few winners, right? Even though the breadth does not look very attractive at this point.
Yes, Alex, very good afternoon to you too. Firstly, I have a buy call on LIC Housing Finance. Stock is looking good. We are giving an upward bar reversal today. The oscillators on the weekly charts are showing positive price action. On the monthly charts, it's going to give an upward key reversal, and the monthly indicators are probably in a situation where they are going to turn positive after almost 2 years. So LIC Housing Finance seems like a decent buy in this market. One can buy at 550, stop loss 530, target 590. The other one is not a very short-term trading by Alex. I have a buy call on Dr. Reddy's, but the time frame is at least 1 year, if not 1.5 years. It's a long-term call. The target and price action is going to be obviously more. One can buy Dr. Reddy at 1380, stop loss of 1300, target of 1540. It's been, Alex, almost a, what do you say, 1.5 year consolidation. Outlook is turning positive. Pharma index is given a broken out at all-time highs. I think this looks very, very positive. But yeah, sort of short-term call. It will need to break out of the range where it spent almost 18 months, Alex. So a 1.5 year call.
1.5 year call on Dr. Reddy's. I don't know if that kind of patience exists right now. Samir, just want to ask you about Dr. Reddy's and some of the pharma pack. Ajanta Pharma also in focus today.
Yeah, so good afternoon, Tamanna, Alex, Hemant Bhai, and all your viewers. You're right. People don't have patience for 1.5 years anymore. I think it's more about 1.5 days rather than even 1.5 months. But having said that, let's talk about the pharma where the question lies. So, we continue to remain very constructive on the entire pharma space from the simple reason that we still believe that the opportunity that exists for the export market to the US is extremely large. The number of drugs continually coming off patent where the Indian CRAMS players can keep participating because they have filed the ANDAs. It'll open up the markets and, they can get a good share of that and grow their top line and profitability. These companies work at 80-90% gross margins, which is absolutely phenomenal. So any increase in volumes translates very, very well to profitability. Now, having said that, obviously the risk also remains that if more competition keeps coming in, then the pricing powers go away and pricing pressures come in, and that could hurt. But overall, we still think there is way more opportunity. Now, Dr. Reddy's is also a counter we think is attractive from a 2-year perspective. It has good upside. Sun Pharma, which is doing its non-branded generics, over-the-counter kind of medicines. I think that is something that continues to do well. We think Sun Pharma, of course, the acquisition is something that everyone's paying too much attention to right now, and it is a large one, and it is going to hurt their balance sheet in the short term. But we think in the long term, this is a cash positive acquisition which will do well. So that is another counter that we think we like. Aurobindo Pharma is another counter we think is doing extremely well. It has great growth opportunity ahead of it. Yes, they have one plant under surveillance, but we think they'll be able to scale, get past that and move forward. So we think the pharma space is something one should focus on and invest in. We gave you our top pick, which is Sun Pharma. Dr. Reddy's also we like. And in the mid cap, if you want to take an exposure, I think Torrent is one of the ones that we continue to remain quite positive and constructive on.
Okay. You know, we've named a few stocks that are doing particularly well today, but one that we mentioned at the start that's really bearing the brunt of quite a bit of selling is, in fact, the stock of the day. It is Persistent Systems from the IT pack, and this is on the back of the acquisition that the company has announced and a total spend of $1.3 billion. Let's go across to Jasmeet to talk about that Nagarro acquisition and what D Street doesn't seem to like about it.
Well, Alex, thank you for that. We did note that overall Nagarro acquisition did have a lot of positive key triggers. While the European geography saw an uptick of, expected to see an uptick from 9 to 22%, and company also crosses the 2 billion landmark quite early from what it had stated. But there are a few key reasons that are still not liking about the overall acquisition, and here are the one. But the first one is the growth profile. Nagarro as a company has a slower growth profile compared to Persistent. And Persistent is among one of the fastest growing IT companies. We look at the growth profile, Nagarro has roughly grown at 5% over last 3 years on a compounded basis, but Persistent in a year itself has grown nearly 18%. While the second one is a valuation. Persistent enjoys a high valuation among the IT pack because of the way it grows faster compared to other IT packs. Now, given the adding a slower company to the overall portfolio, and given the company is quite large compared to Persistent altogether, this might overall slow the valuation, slow the growth, and also impact the valuations. We look at the third key aspect, what the street's not liking from the overall acquisition is a margin gap. Nagarro operates an EBIT margin between 11 to 13%, while Persistent operates in a EBIT margin range of roughly 16 to 18%. So this might be a margin dilution for Persistent going ahead when the transaction is completed. That's what the street's expecting. While the fourth one, the company is very bullish on the overall European expansion, and Persistent has been focusing on the Europe from quite some time. It's one of the goals to acquire more in Europe. But together, we have also seen that for the IT pack, Europe has been a slower IT spend. So even though they're increasing their stake, but how much will it reap the benefit for Persistent becomes a key question. Now, we look at the next key aspect of what's really impacting the fifth one is the ERP exposure. Now, Nagarro as a company does operate in service and AI, but it also has its ERP stance. While the ERP is a business segment which is a bit slower and competitive compared to other industries, while Persistent, on the other hand, is in digital engineering, a new age company. So the overall ERP competition might impact the company, and the integration becomes a key to watch out for. While the sixth one is Nagarro itself as a company has a lot of concerns. First, the stock is down nearly 80% from its all-time high of $202. Now, the reasons why this is down is on the back of that cash conversion crunch. The negative operating cash flows is something unique, given the IT companies generally have a positive operating cash flow. This company has a negative one. The company also has a slower working capital. So that's what really sits out liking about Nagarro as a company. While we also have a few brokerages which have penciled in their views on the overall acquisition. When you look at the brokerage, we have Nuama, which have downgraded this particular stock to hold, and they have cut the target price to rupees 4,800 from earlier 6,100. Now, what they see is the overall acquisition becomes a key overhang. That's what the brokerage expect. They say the transaction is likely to lower the growth profile of the particular counter, and that extra cream that Persistent enjoyed being a fastest growing IT company might not be there anymore. Well, the second one they see is the acquisition will impact the integration risk of its business given the size of it. While I also have the next brokerage firm which says that the overall impact that they expect on the Persistent growth is Motilal Oswal. While do they reiterate buy, and this is a bit bullish note, while they expect that the valuation attraction from the acquisition remains to be seen, but this particular counter is a key positive for the company. But they also know that the cautious on the ERP profile is something that they're watching out for. Let's quickly understand the valuation point of view. Where does Persistent and Coforge stand? Their competition. Where Persistent's current valuation is roughly at 52 times when the average is 36 times. So current valuation is below the 5-year average for Persistent, while the Coforge is lower, so cheaper compared to Persistent. 30 odd times. We look at the 12-month forward valuation for this particular counter. Again, Coforge is cheaper compared to Persistence at 28 odd times. Now, in terms of the overall buy call for this particular counter and return potential, we do make a note that the Coforge has a higher buy call at 34 versus Persistent at 22, but the return potential is still higher for Persistent at roughly 26% versus 11% for Coforge.
Okay, thank you for that, Jasmeet, and that great detail that you've gone into. Sameer Dalal, do you think that the reaction has been a bit harsh for Persistent?
No, I don't think it's harsh. I think it's to some extent justified. Okay, so one, we have been saying for a while that Coforge and Persistence. Okay, let's first just say about one thing about valuations. We've been saying that these stocks have been trading at much higher valuations than the rest of the peers, and those needed to correct. Now, why am I saying this reaction is not harsh? Is the fact that the acquisition is so large that it is going to, in the short term, hurt the company, right? On its cash, its cash flows, dividend payouts. This is a company, yes, it's profitable, but also, as your person mentioned, it's a much slower growing company. So now they got to justify why these high PE multiples should be assigned when the growth may not be as large, given the larger chunk or large chunk of 50-60% is going to grow at a slower pace. So the growth obviously takes a hit. So your PEG gets questioned. The second is the kind of premium that was given to the company. I'm not denying the fact that the stock is down. But when the stock is down and there is less interest in the counter and people are worried about IT, it seems a bit risky for Persistent to go out and say we're giving a 140% premium to the existing valuation based on what market participants believe. Now, no doubt you're getting the controlling stake, but the controlling stake, sometimes you give 30%, 40%, not 140% premium. So I think that is one of the other reasons that the stock has got hammered. And we still believe that IT growth is going to be subdued and slow for the next 2 years. So the only positive trigger that could help Persistent in this situation, to be very frank, is if they can manage to scale up the growth opportunity of the acquired company from 5% to 10, 11%, and then say that, look, we are still on a consolidated basis growing at 12, 13%. So that's why we can command a PE multiple, which is about 30. Otherwise, this PE multiple will start correcting sharply. And, what we saw in the other IT counters, I won't be surprised if you see something like that happening in Persistent as well.
Okay. I'm of course going to ask Himen about his view on Persistent. Just the point there, I understand, Samir, that you're buying something at a great premium. But the fact is that Indian companies got flayed for not having an AI play. They need to go out and acquire an AI play. They're saying this is going to be EPS accretive from the first year. It seems like you can't win.
No, it's not a question of you can't win, right? So, your question is so good, and it's difficult for someone like me as an analyst to answer it, or as an investor to answer it.
No, I'm asking for your opinion. I'm asking for your opinion and qualifying your previous comment. I understand perfectly fine, and you have a valid point when you say that why are you buying something at 140% premium? But
no, I agree. So you can't win it, and that is correct. I mean, but is this the company that is going to be creating the LLM models which are required for the AI? Do they have multiple amount of data centers sitting there in Europe, which is being used extensively? I don't have those answers as of right now. But to make an acquisition of this size and hope that you can turn around that company, that becomes a bit of a question mark. And that's why when you're trading at a premium valuation, then the market obviously doesn't like it, and that's why the market is selling off. So what I'm saying is, why is the sell-off justified? Is I think the premium valuation given the market doesn't agree with, and two, I don't think they have that much in AI that is going to be allow Persistent to say that we become an AI company.
Okay, so that's on the point of view with regard to acquisitions, but companies in the IT space in India are trying pretty much everything. When it comes to incorporation of artificial intelligence. Some are being bought into by the street. Hexaware is a stock that saw a little bit of a pop earlier today. In fact, it continues to trade with gains of about 5%. Why? Because it has become Anthropic's authorized reseller for Amazon Bedrock. What does that deal mean? It's joined a select group of companies globally authorized to resell Claude. It can sell, integrate, and support Claude for enterprises, and it strengthens AI-first strategy across the entire AI life cycle. It's targeted at regulated sectors like BFSI, healthcare, and manufacturing, and it has a dedicated AI center of excellence to support this strategy. Now, this is the kind of deal that you're probably likely going to see for a lot of companies going forward, particularly those that cater to enterprise, because as you know, for an enterprise, one of the key concerns is the sanctity of its data. So they're probably going to be more comfortable dealing with IT companies that they've worked with in the past. Quick comment on this, Samir. This is the kind of deal that you would look at positively?
Oh, absolutely. So these are the right kind of deals that should be done, to be very frank, Alex. And I'll tell you why, because it's very low on capital that you put in. And secondly, now when a company like Hexaware or even Infosys has done a tie-up, what they do is they incorporate Claude or ChatGPT, which is OpenAI, into their softwares which go into the end customer. The end customer can get the value plus the service. So you as an Indian IT company are not only providing the AI tools that are required without having to develop them yourselves, but being able to earn a revenue stream from that and running your ERP systems and maintaining all of those systems at the same time. So this kind of a trade, these kind of deals, I think are continually going to happen. Only thing is where we don't know what's going to happen is how it's going to affect their number of employees required for running all of these things, and does that hurt the revenue model for Indian IT companies, which we will get to know in the next 6 months to a year, which is when we'll probably be able to take a better call on how to invest and what should be the fair valuation multiple and what will be the long-term growth numbers for AI for Indian IT companies which provide the services.
Okay. I actually want to get a quick view from Himen, both on Persistent and on Hexaware. We've spoken about both IT companies. And how are you looking at both of them on the charts?
Actually, Tamanna, Persistent has broken downwards from a 3-month consolidation phase. I'm saying this consolidation. On the hindsight, I will term it as distribution. The range was between 5,600 on the upside and 4,450 on the downside. Okay, it's the beginning of the week. The week is not yet over, but there's a bearish gap, which is not a good sign. It will make an attempt to try and cover this up. But if we close below 4,450 on this Friday, I think things are not looking good. And we've gone nowhere in the last couple of years. That's been with most of IT. But this has posted a fresh 1-year low, and I think there is distinct pressure. As far as Hexaware is concerned, Tamanna, it's relatively less of data, higher top, higher bottoms on the weekly chart. There's a volume spike coming in today, huge volumes. I'm not sure if this is a block or whatever, but 70 lakh plus, we'll have to check the delivery marking. Seems reasonably okay in a market where IT is not doing anything, but this is due to paucity of data, slightly a short to medium term view, Tamanna.
Okay. The fact is that the overview on IT has been anyway cautious, but brokerages have turned even more cautious and largely negative on the IT sector, with one exception, I believe. Jaspreet, what are brokerages saying today?
Well, Tamanna, thank you for that. As rightly said, we do have one exception in terms of what brokerages have downgraded the overall IT pack, and they've also cut the target price, starting with the first brokerage that we have Morgan Stanley on IT. Now, what this counter has done is they have downgraded a couple of stocks and also cut the target price of majority of them. Now, we can see the company has cut the target price of top 5 IT companies by nearly 18 to 23%. The highest cutting is come on the to TCS and HCL Tech. TCS, they have cut the target price by nearly 23%, and they have also downgraded to Equiway. Now, what they see in the overall churn of the IT pack is that they expect further room of downside from here on. They're still not concerned. Still not concerned about the raise they have cut, but they still expect the further downside coming in from the current target price. But they also put that TCS is currently at the premium when you look at Accenture as a company, because Accenture saw a recent downtick on the back of the weak guidance that they had given. So which puts the entire IT companies at risk. Given the valuation compared to Accenture, we are still listed at a premium. So that's again concern. Further, they also expect the Q1 to be muted and Q2 to see no growth. So they are saying the FY27 might be another 4th year of no to low growth going ahead. Lastly, they also give the key ideas what they prefer. They say they prefer Infosys and TCS over the other top tier IT companies. In terms of the mid caps, they prefer Coforge and Emphasis over the ER&D plays. Now, well, we also have Citi. Well, Citi has a mixed set of rate cuttings what we have done. They do hiked the target price of Hexaware, the highest thing they have hiked in the entire portfolio by nearly 7.7%. But the highest cut in the target price has come to HCL Tech again. It's down nearly 18%, and they have maintained this sell rating to majority of the IT pack. While we also have Goldman Sachs on the similar trajectory where they have cut the target price of all the companies that they're tracking, and they've given HCL Tech, which has cut the major target price of roughly 11 odd %. Infosys, they have cut the target price by again 11.6 odd %, while TCS also they've cut the price by 11 odd %. Now, while they've given the overall stance that the FY27 becomes a key year to watch out for, and FY28 might be the year they might see turnaround. But last year, they've also seen that the sectoral EBIT might see a further downtick of 30 BPS from here on. So these are the few concerns that brokers are pointing out. We are 10 days away from the Q1 of FY27, so it's a wait and watch of how does the overall result of the Q1 pans out.
We'll know soon enough. Thanks so much, Jasmeet, for getting us those details. All right, so we've covered quite a bit of ground with regard to the IT pack, and we'll know soon enough, I think, Tamanna, in the next couple of weeks, as Jasmeet pointed out, some of the metrics are going to be looked at with a hawk's eye. And I think the margin of safety for some of these companies, not valuations, on earnings, is very, very thin.
I think currency will give a bit of a tailwind. Because it's been a bad quarter for the rupee.
100%.
So that will be some sucker, I suppose.
For the most part of the quarter, you actually had the rupee significantly lower than it was in the previous quarter. And towards the end is when we've seen a recovery from those 97 levels all the way up to 94.
Yeah, so exactly. A week could be good for IT. So
100%.
that's the only saving grace, I suppose. But more and more when it comes to IT results, it has become more about the commentary and the guidance, the actual numbers. Let's go across to Samit Sarkar, joining in this afternoon with all the chatter that he's picking up from dealing rooms. Samit, what do you have on your plate today?
Well, firstly, it's on APL Apollo. Now, there are sell flows on the large HNI desk is what dealers are indicating, and this is largely because they're expecting a weak Q1 update to come in when it comes to APL Apollo. On the flip side, Coal India is seeing buy flows on the PMS desk. Dealers are expecting strong volume number for the month of May and for the month of June and for the first quarter of FY27. So keep an eye out for Coal India in trade. For Eternal, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter. Dealers are expecting a strong Q1 numbers here. And lastly, when it comes to Force Motor, there are sell flows on the domestic institutional desk. Delivery volumes are expected to be on the higher side. Keep an eye out for Force Motor as well.
So interesting names there. Thanks so much, Somit, for that. But while you're with us, Somit, let's talk about what we're looking forward to, which is the quarterly review of NSE's indices, and on account of that, several stocks are likely to see inflows and outflows as that rebalancing and adjustment takes place, right?
Do remember that there is no addition or deletion that is happening. It's just that because of the free float change, there is some inflows and outflows that will happen in individual stocks, and this is expected to happen in the last half an hour of trade. So the top 5 stocks that are expected to see the highest amount of inflow is NTPC, Tata Steel, Adani Power, MCX and G Vernova. Now, these counters are expected to see an inflow of anywhere between 66 to 103 million US, which is nearly 0.5 to 1.8 times the 20-day average volume. And top 5 stocks that are expected to see the highest amount of outflow is Asian Paints, Eicher Motors, Bajaj Finance, Maruti and Indigo. And outflows are expected to be anywhere in the range of 57 to 69 million US, which is nearly 0.6 to 1.7 times the 20-day average volume. So we could see some weird volume action that could happen in most of these counters in the last half an hour of trade on the back of this reject that is expected.
Okay, so you might see some flows increase because of this quarterly review, but no big movement that is likely to happen. Sameer Dalal and Hemen Kapadia continue to be with us. I want to talk to you a bit about the auto stocks, Sameer, and the kind of hit we've seen today. Of course, the buyback rates for Bajaj Auto have also been announced, and there has been a lot of positive momentum on that stock. Would you recommend that shareholders participate in the buyback? And do you think that what we're seeing with auto stocks is a bit of a blip?
So I think it is a bit of a blip, right? We still remain very constructive long-term for the auto sector. We think the opportunity in India is only going to increase, and early adopters of the new technologies which are shifting to EV are actually going to be beneficiaries. I'll give you a simple case of example. Look at the way Tata Motors in India and Mahindra, who've been early adopters of electric vehicles, have seen sales grow. Whereas Maruti, of course, though they've not got EV, but their price points are low, have been able to capture. But going forward, we think that basket is going to grow at a much faster pace. And that's going to be a similar story in electric two-wheelers as well. Bajaj has its lineup coming up. They obviously have the Chetak, which they're doing. The Hero through Hero, its own company, plus they own 30% in the Ather Energy. That is something we think is very exciting. The stock's seen a decent correction. We think that's a great long-term buy story for the Indian markets. So Tata Motors PV, given the fact that Jaguar Land Rover will see a rebound this year after last year's pain points that they had. And going forward, we believe growth is going to continue the India Tata Motors operation. So these are counters that we like. But then you have to also not only look at this, you have to look at companies within the auto angst place also, right? You can simply put the tire industry. We think that is something that will bounce back. They've seen profitability coming off because of the rise in crude and crude price derivatives and things like that. But once crude is coming off, the prices of the chemicals are coming off. We think the the tire sector will see a decent bounce back. You can look at something like a Sona BLW, which is Sona Comstar, which makes a lot of the parts for the cars, especially they have a lot of focus on the electric side. So that is a company we think that would do really well. Motherson Sumi is another one that would do really well. Companies that are doing seats, lights, Lumax Auto. There's so many of those. We think those have a lot of opportunity as the auto industry in India continues to grow.
What about you, Himen? What are some of your favorites in this space?
I think I go with what Sameer said. Sona Comps, Sona BLW Precision looks interesting. We are in an intermediate uptrend. I believe further upside seems like a distinct possibility. Minda looks interesting. It hasn't done anything much. Downside appears limited. Yeah, so a couple of these stocks are standing out, Tamanna. But yeah, despite what has happened, I think I am not very bearish on Maruti also. I believe we've been consolidating for some time. Yeah, and this is within the consolidation. So today's move doesn't amount to anything much unless there's a decided breakdown, which I still don't see happening.
If there is some positive optimism on auto despite a poor showing today, well, there's no doubt when it comes to pharma and especially Dr. Reddy. Nomura is keeping a eye on Dr. Reddy, citing fewer US FDA observations. They see a Q4 FY27 launch, attractive valuations as a big upside. Varsha joining in with more details.
28% upside is what Nuvama is eyeing, and the stock is buzzing despite receiving 7 observations in their Bachupalli facility. Though these observations are lower versus earlier received 9 and 13 observations, but still, not clean. But what Nuvama is saying is that the facility which has received the observation has old and new blocks, and most issues now are in new block, and old block concerns are largely fixed. Number one, company is confident on resolution and also targeting approval and launch in Q4 FY27. Abatacept biosimilar opportunity stand at around $3.7 billion considering the global market, and the stock, according to Nomura, is trading at around 25 times of FY27 and 20 times of FY28 and 29 valuation, and the EPS is overall the valuation seems attractive as per Nomura, and hence they have given a buy rating with the target price, which gives an upside potential of 28%, which is backed by 22% earnings CAGR, better branded mix, and overall no Abatacept upside built in.
Okay, all right. So that's a word on Dr. Reddy's Laboratories. The entire pharma pack is doing well, and already Hemen Kapadia has given us his view on Dr. Reddy's. It's a long-term view. Sameer, a quick comment on Dr. Reddy's Laboratories?
Yeah, so I've already said that I remain positive and constructive because the opportunities are quite strong. But in that pack, the pharma space, still Sun Pharma remains our preferred buy at this point over Dr. Reddy's. And I mentioned in the mid-cap, Torrent is the one that we do like. So those are the two that we recommend. But Dr. Reddy's is also an interesting play. Like you said, valuations are not extremely expensive. But they need to get a few new launches to get through. And once that happens, then I think Dr. Reddy's could see a trigger up.
Got it. Okay. All right. Let's talk about the outperformance broadly of the broader markets. You haven't seen this last week, but over the last, say, since the start of April, you've seen a significant outperformance to the Nifty 50, and analysts see up to a 48% upside still at this point in select names with strong earnings growth visibility in the broader market companies. Mahima joining in to talk about what the lowdown is on some of these names and how, despite that up move from March lows, there is still such an upside.
Yeah, absolutely, Alex. So if we take a look at how, Nifty has done versus mid cap 150 and the small cap 250, the recovery from its low is quite significant because Nifty has recovered around 8% versus the mid cap 150 recovering almost 18% and the small cap 250 recovering almost 25% from its lows which were recorded in around March and April 1st week. So that's one part, and as to what are the counters that still suggest the highest upside potential, what we've tried to do is we've tried to get stocks where at least 10 analysts track them with the highest potential. So in the mid cap, you have names like Swiggy with a return potential of almost 48%, followed by ICICI Pru Life at 37%, UPL with an upside potential of 29%, and so with the Dalmia Bharat as well, and Info Edge with a return potential of 28%. Now, what has the management actually talked about going forward in a year? What is the outlook looking like for FY27 for these companies? For Swiggy, the growth CAGR they've said it should be around 18 to 20 odd %, and Q1 FY27 is where the company is expecting a contribution break even as well. For ICICI Pru, the management has taken a cautious approach for FY27. They said that they'll watch out for as to how things globally pan out for and then give guidance going forward. For something like a UPL, Q1 FY27 revenue growth anywhere between 10 to 14% and EBITDA growth of 14 to 18% is what the company expects. For Dalmia Bharat, well, the company is expected to reach 75 metric ton per annum by FY28 in terms of capacity, and that's a huge runway for the company. And Info Edge, where the company should turn cash generative in FY27 as per the guidance given by the management. Now, the same thing in the small cap space as well. You have something like an Aditya Birla Lifestyle with an upside potential of 46%, followed by Sagility with a return potential of 43%, Aditya Birla Real Estate 41%, Brigade Enterprises with a potential return of 37%, and Affle 3i 35%. This is one of the counter which was a part of a lot of brokerages pick at the start of 2026. Now, what is the guidance that the management has given for all of these companies? For Aditya Birla Lifestyle, 13% revenue growth CAGR till FY30. For something like Sagility, the company expects double-digit growth plus M&A to boost acquisition is something that the management has said in their con call. For Aditya Birla Real Estate, they have a land bank worth a gross development value of 72,000 crore, and that's going to augur their overall growth. And lastly, in terms of Brigade, at least 20% growth is expected in FY27. And for Affle, 20% organic growth and 23 to 25% EBITDA growth is what the company is expecting. So these are some of the names that you can definitely watch out for in terms of, especially in the mid cap and the small cap space, that could potentially give you better returns.
Very comprehensive list. Thank you for that, Mahima. Samir, anything from that list that we presented which is catching your eye?
So Aditya Birla Real Estate is obviously a company that we are invested in, and we think there's an opportunity. The land bank value plus the development that they're doing, we think will unlock value. The stock, if you go back into the last 1 year, has probably, or maybe a little longer than a year, it's come down from 3,000 odd levels to 1,300. So we're seeing a 60% correction. So we think there is room for upside. Probably not up to 3,000, but up to maybe 2,200, 2,300. There are a lot of other stocks apart from these also that we remain. And, I agree with the view that the broader market probably will outdo the Nifty over the near term, because Nifty valuation for some of the counters still remain expensive, barring the banking. Banking is the only cheap space. We think there are a lot of other stocks which have valuation which will not be able to move up significantly. So the broader market stocks will outperform, we feel, over the longer term.
All right. On that note, gentlemen, thanks so much for taking the time today. Heyman as well as Samir, pleasure having you on the show, and talk to you really soon. But to slip in a very quick break, on the other side, we'll talk about the top buy today, sell tomorrow candidates, and also what you should pay attention to ahead of expiry day tomorrow. It promises to be an exciting end to this series. Stay tuned.
Superstar Stock stocks of the day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
PMAC, the mustard specialist since 1933.
बरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.
Welcome back. You're watching India Market Close, and where we began the last half hour. At 2:30, we were very close to 23,950. We are pretty much stuck there. On that note, let me get in Osho Krishan, who's the Chief Manager, Technical and Derivative Research at Angel One, as well as Lancelot Dicuna, who's CIO of Value X Wealth Connect. Gentlemen, thanks so much for taking the time. Pleasure speaking with you. Osho, how do we break out of this? Consolidation seemingly is underway after that pretty rapid run up for the benchmark Nifty 50. What are the levels that you're watching out for ahead of tomorrow's expiry?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Well, yes, no doubt we are witnessing a kind of a lackluster trade today. There has been a strong sell-off from the 100 exponential moving average. So technically, the last trading session, which was on last Thursday, has seen a very strong sell-off from the higher level. So there has been a negative candle formation that has been seen on the daily time frame chart. And again, the follow-up is again on a negative note. So this is not a very constructive chart pattern on the daily time frame chart for Nifty. But on the higher end, there is still very strong resistance around the zone of 24,130, which is the 100 exponential moving average. But considering the expiry day, tomorrow will be very critical because tomorrow we might see some kind of a strong short covering as well. Because the last week we have seen a kind of a short but simple long formations where they're in the last trading week. So I'm expecting that tomorrow will be the crucial day for the consolidation to have a breakout or not. So mostly by tomorrow, 24,100, 120 will be the only critical resistance that I'm eyeing for. If there will be a breakout, then in the coming period, we can see some kind of positive traction. But as of now, there is no sign of recovery, no sign of respite. So there is no BTST for Nifty at current levels, but definitely for stock-specific action, one may look for buying opportunity.
Speaking of buying opportunities, a space where you're seeing considerable selling pressure and possibly on account of the run-up as well is the automotive pack. Can we pull up the index components and look at who's losing ground? Because we're trading very close to the low point of the day for the index as a whole, but the likes of MRF as well as TVS losing over 3%, M&M very close to 3%, Maruti Suzuki also about 2.5%, Bharat Forge, which is not only an automotive play, is the only one that's up about 0.8%. Pull up the intraday chart for Hyundai as well, or Hyundai as they call it in South Korea, and it's down at the low point of the day. In fact, considerable selling coming through in the last 1 hour or so, down about 4%. Osho, what's playing out in the automotive pack in some of these individual counters?
The automotive pack was looking very positive last week, but today, again, from the higher end, there has been a strong reversals in the majority of the counters. But comparatively, there is relative strength in Tata Motors CV. So TMCV is looking quite positive to me. There has been a very strong formation in the counter, and after a consolidation breakout around the zone of 410, the counter has been sustained on the higher end. So I'm expecting that today's correction or today's profit booking can be considered positive for this counter. Any dip towards 415 to 410 can be seen as buying opportunity for Tata Motors CV. On the higher end, 445, 460 will be the next potential target, while 385 is the advisable stop loss for short-term traders.
Okay, let's talk about another candidate for stock of the day, but something that has been in focus is Astral. Astral Chemicals demerger sharpens pipe focus, but valuation concerns and segment level uncertainties could keep near-term sentiment volatile, with paint losses still an overhang. Puneet joining in with a bull versus bear scenario. You know, on the face of it, this demerger makes complete sense. Why has the reaction been so negative?
Well, I think it's the valuation play that the street is still very uncertain at this point of time to determine what could be the individual valuation both for the pipes as well as for the Astral Chemi business as well. And hence, you're seeing what could be, that could be creating a near-term volatility at this point of time for both these businesses. What you've also seen, of course, that the demerger will create a separate chemical entity, but also a higher focus on pipes, and hence you're seeing an impact on Supreme Industries today as well, and we'll get to that in just a bit. The second key point is what Equirus as well has made of this. They have said that they will have to, of course, depend on the pace of growth as well as the profitability of each business to get a perfect valuation, which might not be available at this point of time. Q1 is where the company has said that the separate financials will be available, but till then, you could see that uncertainty to continue. Management, of course, mentioned that the chemical business is currently at 1,890 crores. That could be expandable to 4,400 crores in the next 4 to 5 years, but something to watch out for as well. Currently, the number 3 very important aspect, and that's where the Supreme Industry point comes through, because currently, Astral trades at around 44 times price to earnings. Supreme is much cheaper at 32 times. But once the chemical business goes out, you have a higher focus for margin expansion for Astral to pay out, much higher compared to Supreme. And I think the streets at this point of time sidestepping both these counters and waiting for some more time to get some clarity. Backward integration will be a key for margin benefit, as mentioned, for Astral. And finally, in terms of valuations, that for the chemical business will be a key monitorable. You have to realize this is almost 6 to 7 times smaller compared to the Pidilite numbers that we are very used to, and hence might not be a very easy fix, because the margins are also much lower at 10.3% for Astral Chemi, and the paints business continues to be a loss-making entity at this point of time. So whatever benefits you've seen coming through for the chemical business, restructuring in UK, has been washed away by pains at this point of time. So that's the bull and bear case for Astral. Streets clearly sidestepping any kind of valuation discomfort that might come through in terms of numbers in the near term, and hence you're seeing an impact across the piping players today.
Okay, the other news focus, Puneet, and I want you to talk a bit about it, is the Delhi EV policy that they've talked about, and what the impact of this could be. Can you just throw some light on this?
Well, there are some important Comments that have come through from Delhi CM as well at this point of time. Now, Rekha Gupta has mentioned that once the LG approval comes through, the scheme will be valid till 31st March 2030. It's something that Alex also spoke about, that you're seeing a higher impact on the car makers because there is no direct benefit for electric cars as of now on personal vehicles in Delhi within this particular scheme. Now, she's also mentioned that the scheme outlay is a 4-year implementation. 7,000 crores is the outlay for the direct benefit to customers, but 8,000 crores will also be spent on the EV infra, which is a very critical and important part of all of this to work through as well. She's also mentioned that the number of vehicles has been uncapped, so there's no cap in terms of the benefits to vehicles, but this amount of 7,000 crores will run through over the next 4 years. I also just want to highlight the 3 key important aspects from the scheme, that the timelines from 2027, only electric 3-wheelers will be allowed to register, and hence you could see an impact on stocks like Bajaj Auto, which have a higher market share there. Mahindra could see that benefit. For 2-wheelers, only electric registrations from 2028, and hence you're seeing a runaway move on Ather amongst other key electric vehicle stocks. And school buses, minimum 30%. have to come under this gambit. So you're seeing a play on JBM Auto, Electra Green Tech, and hence a clear differentiation in stock price clearly visible today, and might be because of one part of the scheme as well.
Okay, so here's what's going to happen. There's going to be a benefit in terms of upgrading old trucks and buses in Delhi. There's going to be some kind of subvention on new vehicles as well. We need to look at the entire auto pack and see what's happening there, because you're going to have some impact there as well. Lancelot, I want to come to you on what you're watching for in terms of the Delhi EV scheme being put out.
I think it's an interesting scheme because you are trying to upgrade the vehicles, and especially because of the environment. You know, there is an urgency in Delhi to try and move towards green fuels or green vehicles, because that will help in terms of the environment as well as, you know, the climate that is there at the moment. So given that background, I think this scheme is important because it gives a fillip to the electric vehicle industry, and especially the two-wheeler space, because they would get maximum benefits from this scheme, and that would drive consumers to trade in or, you know, reduce their combustion engine two-wheelers for electric vehicles. And given that we are seeing, you know, Ather is one of the dominant players in the space, I think the stock is reflecting this, you know, the higher, anticipating higher volumes. Of course, valuations are a little bit high at this point in time, but yes, the longer term growth does look good for the companies.
It's up and about. Ather Energy at the high point of the day, up about 9%. But you know, there are a couple of other stocks that are also buzzing in trade. One of them is Vikran Engineering. Interesting update that has to do with acquisition of new business and also an acquisition that they've done that's affected existing contracts. So we'll get you details on that. And the other one is Bajaj Healthcare. Parth is joining in to talk about both of those. Parth, Vikran Engineering required a little bit of a read-through on what they've done, because they've acquired an SPV of a company who they were catering to, right? So what are the details that you found out?
Sure. So there are, let's start with Vikran only. So the stock is in focus today because it has gained over 8%, hitting the highest volume since December 2025. Now let's try to understand the reason behind this move. The company has won a 3,518 crore EPC order from NOPL, which has a size of 969 megawatts and an execution timeline of 12 months. The company mentioned that earlier this was an order from Onyx Renewables, but now this has been replaced by after the NOPL acquisition. Now this relation between Onyx Renewables and NOPL gets a little bit complicated, so let's go through the entire timeline. It starts in December 2025, where Vikran received a 2,000 crore EPC order from Onyx Renewables that was originally for a 600 megawatt solar project. Now for this solar project, Onyx had made a special purpose vehicle by the name of NOPL, but now Vikran has acquired that special purpose vehicle itself, 100% stake in that NOPL. So instead of being a subcontractor for Onyx, Vikrant will now execute the entire project by itself via NOPL. So out of that order which Vikrant had earlier won from Onyx Renewables, around 389 crores was already executed, and the remaining around 1800 to 1900 worth of order from Onyx has now been cancelled. So management has said that there will be no impact on the company because this is just a matter of restructuring, and in fact it's around a positive for Vikrant because now the orders from that NOPL stands at around 3500 crores versus just 2000 crore Onyx order which the company received earlier. The second one, the second small cap which is buzzing today is Bajaj Healthcare. The stock has gained almost 15% today, hitting the highest level since April 2026. Also, the company has seen the highest ever volume since they have been listed. The reason behind this is because their new drug, which is an anti-seizure medicine used for the treatment of partial onset of seizures in adults. Bajaj has become the first in India to receive the SEC recommendation for these tablets. SEC has recommended the approval and manufacturing as well as marketing for these tablets, and Bajaj will now be planning to continue working with the regulators for the final approval process of this tablet. So these are the two stocks from the small cap space that are in focus today.
One is up 15% and the other is up 7% or thereabouts. Osho, these two, Bajaj Health is up 15%. What would you do on the charts? Vikrant is just about 2,000 crore market capitalization and the volumes are quite considerable today as well.
Firstly, for Vikrant, I expect the counter is already having a very decent chart structure in the recent period. But on the higher end, 77 rupees 20 paisa will be the initial target that I will be expecting as a resistance. If it breaches the zone of 77.20, then from there onwards, we can see a decisive move of another 6 to 7 points. So overall, the trend is bullish. There has been very strong volume today also. So we can see some kind of strong traction in the coming session. But first target is 77.20. And if it surpasses the zone, then from there onwards, 85 to 86 will be the next potential target that I'm expecting on the technical front. Now coming to Bajaj Health has seen very strong movement today. No doubt the counter has seen 15% upside movement with volume, but technically the counter has surged above the 100 exponential moving average after a very elongated period of correction zone. So there might be some kind of follow-up traction that can be seen as a technical pullback. So on the higher end, another 30 points can be seen. So 380 will be the target for short-term perspective. And if there will be a sustained move or any consolidation within the range of 350 to 380, then positionally also the chart structure will start moving towards bullish side. So for now, 30 points of movement is expected. On the lower end, 325 should be seen as the short-term or as a stop loss for short-term traders.
Osho, what about BTSD ideas?
There are few counters which are looking quite positive to me. The first one which is looking positive is PCBL. So PCBL has seen a very strong momentum in the recent period. The counter has emerged above the 200-day simple moving average today. So I'm expecting the momentum can be seen in this counter. 330 will be the target that I'm expecting, while on the lower end, 315 is the advisable stop loss. The other counter is Apollo Microsystem. So Apollo Microsystem have seen very strong traction, has made a very strong bullish engulfing pattern on the daily chart. So currently it is nearly 5 to 6% on the higher end, but it is having potential to retest the zone of 430. So one may look for buying opportunity in Apollo Microsystem. 395 will be the advisable stop.
Okay, just want to quickly, before we wrap up, and we have 6 minutes to go for trade, just look at quickly what's happening with the key indices, and we'll pull up the Nifty, we'll pull up the NSE 100, we'll pull up the mid cap and the small cap as well, because you can expect some volatility coming in while that rebalancing takes place. So keep an eye out on that. Some of the stocks which could be impacted are there at the bottom of your screen. But meanwhile, let me go across to Varsha, who's talking about EPC stocks. They've become sharply underperforming in the last 1 year, turning from market darlings into laggards. Varsha is joining in to explain why.
Well, there was a time when EPC companies have given huge returns to investors, and investors were giving double-digit or triple-digit valuation to these companies. But in the last 1 year, all these companies have given negative returns. There you go. In the last 1 year, starting from Dilip Buildcon to Power Mech, all have given negative returns, and look at returns over here. So clearly there is something wrong, or some reasons why these companies have not given results in the last 1 year. Let's see what are those reasons. One is, of course, EPC stocks fell despite strong order book visibility. There were execution delays which hurt earnings conversion. Even sell-off was driven by slowdown, margin pressure and guidance cut. There were no order inflow for road companies. The second problem was, of course, the execution, which is the reason why these companies have not given returns. The land and clearance issues slowed project execution. Transmission lagged with 8,830 versus 15,000 circuit kilometers target. Overall, if you see, there was a weak project execution discipline added pressure to these stocks. Even there were some cash flow stress also. Payments from government delayed cash inflows, unbilled revenue increased working capital pressure for these companies. Talking about budget, there were also budget cuts which hit water infra EPC companies, leading to stock price fall. Talking about the valuation derating, stocks re-rated sharply on infra boom expectations. Earnings misses triggered sharp correction into these stocks. Even 1 weak quarter led to steep derating in all these EPC stocks. Lastly, so these were the key reasons why EPC companies didn't give returns in the last 1 year. But what lies ahead is, one is urban infra, urbanization and energy transition will support long-term demand for these companies, and order inflows may recover from FY27. But one thing to keep a watch out, that EPC companies historically have been given a valuation of around 15 to 16 PE. So don't expect sharp premium valuation to these companies. The outlook looks great, but of course these are some of the reasons why EPC companies didn't perform in the last 1 year.
I'm wondering what we mean when we keep saying EPC, engineering, procurement and construction. That's the lot of companies, and those are the functions that we're talking about. Thank you for that, Parcha. Very quick call, Osho and Lancelot, if we can just squeeze it in. One top call for tomorrow.
Tomorrow, I am expecting a good movement in the Piramal Finance. It is a cash counter, has given a very decent movement in the recent period. So I'm expecting the counter can do very well in tomorrow's trading session as well. So one can look for buying opportunity in this counter with a stop loss of 2080. On the higher end, 2250 will be the expected target for this counter.
Lancelot, one stock that you like, not necessarily for the short term, but something that looks attractive right now?
Yes, Alex, I think one should look at, maybe HDFC Bank from a 1 to 2 year perspective, because this bank has, this stock sold off on a lot of negative sentiment and news. And a large proportion of the bank was held by FIs, and that sold off. I think the bank results will prove that it is still resilient, and you will start to see some amount of its valuations have come off from their peak valuations closer to their low valuation. So the margin of safety is a lot higher at the bank at this level, and one should buy and maybe hold on for the next 2 years.
Right. Okay. Thank you so much, Lancelot and Osho, for that. We're just closing off. And we're under the 24,000 mark. We've definitely slipped under that crucial psychological mark as well. Just pull up the heat map and we'll show you what's leading the decline. The advanced decline ratio turning even more adverse. The last half an hour has been very, very choppy, by the way. Kotak Mahindra Bank was anyway a laggard today, now about 3% down. I actually want to look at what's happening with Max Health and BEL. If you can pull up an intraday chart of Bharat Electronics for me, because Max Health was up there, but Bharat Electronics seems to have seen a bit of a spike. There you have it, but just 1.5%, but climbing up there for sure. Nifty contributors, just very quickly, Nifty contributors, and show you what's working there and what's not. Eternal leading the pack. BEL up there, and Bajaj Finance also coming to the fore.
Yeah, and Reliance Industries coming off from the low point of the day, 1.8% to about 1.3%. Pull up the heat map for the sectors and you'll see what's moved. You'll probably notice that auto continues to be languishing at the bottom of the pack, but it's come off from cuts of over 2%, cuts of about 1.6%. Oil and gas, Nifty IT, pretty much where we started this hour. CPSEs come up on top with a few of those names, as Tamanna pointed out. Metal and healthcare and pharma have actually given up a little bit of ground.
Yeah, the small cap and the mid cap also seeing A sharp drop as we close. It's been a tough half hour as we go into the end of trade. A bit of recovery actually on the mid cap 150, the small cap 250, about 0.39% down. So a muted day, a quiet day. As one of our guests said at the start of the show, Alex, that we need to take a breather after the kind of recovery that we've seen on the markets overall. So maybe we can think of it as a bit of a pause more than anything else.
Yeah, a bit of consolidation at play. Looking for the next trigger. In all probability, it's going to be the earnings season. So you might have to contend with a couple of weeks of quiet trade before you see some of those triggers.
Unless you have big moves coming in from Delhi, because buzz of that cabinet reshuffle, etc., will be top of mind. Well, that's all the time we have on this edition of India Market Close. So from Alex and the team that put the show together, thank you so much for watching. Stay tuned. We have all of the action on the other side on NDTV Profit. Hi, I'm Tamanna.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin nears $59,000 mark due to liquidations. Clarity Act now eligible for Senate floor. India's finance panel to meet RBI on crypto on July 2nd. Hong Kong sets stablecoin timeline. So today we have a myth buster, and that myth is crypto guarantees quick profits. Now this is one of the biggest myths around crypto, is that it's a shortcut to getting rich. Social media is filled with stories of overnight millionaires, but how much of that is the reality? Let's bust the myth. Well, the idea that the crypto guarantees quick profits is one of the biggest misconceptions you'll have in investing. Like any financial asset, crypto prices are driven by demand, supply. Global liquidity is there are regulations, there are macroeconomic events, and of course, most important, investor sentiment. This means that the prices can move sharply in both the directions. While there have been periods of significant gains, there has also been steep corrections where investors have seen substantial losses. What often goes are the viral success stories. What rarely gets discussed are the risks, volatility, or the people who invested without understanding what they are buying. Successful investing, whether it's in stocks, mutual fund, gold, or crypto, is rarely about making a quick profit. It's about long-term perspective, understanding the asset, managing the risk, and of course investing only what aligns with your financial goals and of course the risk appetite. For crypto investors, diversification is equally important. Crypto should be generally viewed as a part of a broader investment portfolio and not a guaranteed path to wealth. Crypto offers a lot of opportunities, but it does not guarantee returns. If someone promises assured or quick profit from crypto, that's a red flag. Invest based on research, not hype, and remember, higher potential returns always come with higher risk. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names. chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
Hello and welcome back to NDTV Profit. You're watching Market Express and my name is Puneet Zaveri. Let's get straight into the show. The markets end on a slightly more weaker note. The Nifty ends below the 24,000 mark while the Sensex falls over 250 points. Max Healthcare, Dr. Reddy's were the top counters which were under pressure, while which were actually doing decently well on a day where you saw pressure, while Kotak Mahindra Bank and M&M were the key laggards. Pharmaceutical stocks rallied sharply, pushing the Nifty Pharma Index to a fresh 52-week high with gains of nearly 2%. Shares of Dr. Reddy's, Ajanta Pharma, Ipca Laboratories as well as Ipca and Cipla surged up to 5%, driven by optimism around India's growing role in manufacturing GLP-1 drugs as global demand rises following key patent expiries. Now, the pharma index has outperformed the broader markets over the past week or so, and it'll be important to see what happens with this week's performance as well. Brokerages remain divided on Persistent Systems after its proposed acquisition of Nagarro. Now, while analysts see strategic benefits, concerns remain around the slower growth as well as the lower margin profile of the company, as well as any kind of integration risk that might be so. The addition of more mature ERP business will be something to watch out for as well. Brokerage from Nuvama actually downgraded the stock to a hold, while Motilal Oswal has retained its buy rating, saying the long-term creation of value from the acquisitions remain to be seen at this point of time. HDFC Bank moves to steady the ship as external illegal reviews clear the air around the past concerns. Now, the bank has now speeds up the search for both the chairman and the chief executive officer as well, even as it looks to extend its current CEO's term. Now, with the allegation found lacking any kind of substance, the focus clearly shifts to leadership, continuity at this point of time, and closing out a phase of uncertainty behind the bank. Kotak Bank faces a fresh leadership reset as CEO Ashok Vaswani decides against seeking another term, citing personal reasons. Now, markets had expected continuity, but the bank now moves quickly to identify a successor. Now, after steering the lender through a tough regulatory phase, the focus now shifts to a smooth handover and avoiding any kind of uncertainty, but stock continued to remain under pressure today. Brokerage firm Citi has reiterated a buy rating on Astral with a target price of 1900 rupees, implying an upside of more than 28%. And now the brokerage has actually welcomed Astral's proposed demerger of its plumbing and chemical business, saying that it will improve capital allocation and allow both verticals to pursue independent growth strategies. Now, while Citi remains positive on the plumbing business and, of course, the pipes business, it sees some uncertainty around the long-term value creation and valuations of both the adhesive as well as the paint business after the split. And you've also seen that reflect on the stock today, down almost 8 to 9% in trade. Dr. Reddy's comes under regulatory focus yet again as the US FDA flags observations at one of its Bachupalli Biologics facility as well. Now, while the issues are fewer than before, the inspection is not a clean slate. The company now works to address these gaps with approval timelines hinging on how quickly it can resolve concerns and push ahead with key biologics launch. Waaree Energy faces trouble yet again with the US now, with the customs alleging tariff evasion and misreporting of origin of solar shipments. Now, the company disputes the claims, saying the issue is limited and will be challenged legally. As though still, with steep duties on the table, the episode raises questions around compliance, even as Waaree maintains the growth plans in key US market. IT company Hexaware sharpens its AI play, becoming an authorized reseller for Anthropic on Amazon Bedrock. Now, this puts the company among a select global group that can directly offer support and advanced AI models for enterprises. Now, with a clear push into regulated sectors, Hexaware looks to deepen its AI footprint and move up the value chain. Magellantech Cloud lines up a series of strategic moves, approving a merger with IVIS International and backing it with group-level support. Now, the company also raises fresh capital through a preferential issue while opening the door wider for global investors. The steps signal a push towards consolidation, expansion, as well as stronger financial flexibility. It will be something to watch on this particular counter as well. Pharma major Lupin gains momentum after securing a key regulatory nod in the US for its generic cancer drug. Now, the approval, though tentative at this point of time, clears the path for a future launch once the patent hurdle eases. Now, with added dosing options and a stronger equivalent to the original drug, this move strengthens Lupin's oncology pipeline as well as positions it well in high value market as well. Well, a new kid on the block, Turtlemint Fintech Solutions made a weak stock market debut with shares listing at over 11% discount to the issue price of 152 rupees per share. Now, the stock opened at 134 on NSE and roughly around 136 on the BSE, reflecting subdued investor sentiment despite the IPO being subscribed about 1.2 times. The insurtech company had raised roughly around 883 crores through its public issue. Zerodha looks to expand beyond broking, applying for a merchant banking license to enter the investment banking space. If approved, this will allow the firm to manage IPOs, fundraising, as well as advisory deals. Now, the move is clearly signaling a shift towards a full-service financial play as Zerodha eyes a bigger role in India's capital markets. OpenAI has rolled out an update to ChatGPT that makes the AI assistant less literal and more capable of understanding user intent. Now, instead of following prompt words for word to word, ChatGPT is now better at interpreting context, refining these ambiguous requests, and delivering more natural responses. Now, the improvement is aimed at making conversations more smoother and reducing the need for users to repeatedly rephrase their prompts. India will be represented at the funeral of Iran's Supreme Leader Khamenei by Bihar Governor Saeed Atta Hasnain and Minister of State of External Affairs Pavitra Margarita, and the decision follows the earlier speculation over Prime Minister Narendra Modi's possible attendance as well. The Ketan Agarwal murder case has taken another turn, with the Pune court set to decide on police custody of the two accused. Now, investigators are closely examining the alleged deleted chats, call records, and Ketan's final phone conversation as they piece together the sequence of events. Police believes the digital evidence could be crucial in establishing premeditation and the alleged conspiracy behind the murder. The government has introduced an improvement notice mechanism under the Legal Metrology Act to make compliance more business friendly. Now, under the new framework, first-time procedural violations by businesses can be corrected without immediate penal action, giving companies an opportunity to rectify the lapses before the enforcement begins. Now, the move is aimed at reducing litigation, encouraging voluntary compliance, and improving ease of doing business while continuing to safeguard consumer interest. Applying for an Indian passport is set to become more expensive from July 1st. Now, after the centre revised the passport fees for the first time in over a decade. Now, the government says that the hike is aimed at covering higher administrative, printing as well as security costs. Fees have been increased across regular Tatkal and reissue categories as well, impacting both the fresh applicants and those renewing or replacing their passports. Now, amid heightened tensions around the Strait of Hormuz, Iran and Oman have held the first meeting of their joint military committee, signaling efforts to strengthen defense cooperation as well as maritime security. Now, the talks focused on expanding military collaboration and enhancing coordination in one of the world's most strategically important shipping routes as well. Now, the meeting comes as the region remains under close global scrutiny following recent geopolitical tensions. New satellite imagery has revealed the devastating scale of destruction caused by the twin earthquakes that struck Venezuela last week. Now, before and after images show widespread building collapses, damaged infrastructure, and the entire neighborhoods reduced to rubble, particularly in the coastal state of La Guaira. Now, rescue operations continue as authorities and international teams search for survivors amid mounting casualties as well as extensive damage. But when you look at the strong offshore earthquake that rattled Japan's northeastern coastline, triggering tremors across several structures as well, authorities said that there was no tsunami warning and there were no immediate reports of major damage or casualties. Japan's meteorological agency continues to monitor seismic activity, while officials have urged residents to remain alert for possible aftershocks. Europe's record-breaking heat wave is turning increasingly deadly, with France reporting nearly 1,000 excess deaths linked to extreme temperatures. Now, over the past week or so, that has been one of the key concerns. Health authorities say the fatalities have largely affected the elderly and vulnerable as scorching temperatures continue to grip large parts of Europe. Government agencies across the continent remain on high alert, issuing health advisories and emergency measures to tackle prolonged heat. Jay Mundra, an India-born cricketer from Rajasthan who still holds an Indian passport, starred for Ireland in a historic 2-0 T20 series sweep against India. Now, making his international debut, Mundra took 5 wickets across the series and claimed the Player of the Series award. India's campaign at the ICC Women's T20 World Cup has come to an end after a 6-wicket defeat to Australia in a must-win clash. Now, despite a fighting half-century from captain Harmanpreet Kaur, India failed to defend a target of 171 as Australia completed the highest successful run chase in Women's T20 World Cup history. The defeat also ended India's hopes of reaching the semi-finals. Lionel Messi added another milestone to his legendary career as Argentina defeated Jordan at the FIFA World Cup 2026. Now, the Argentine captain became the first player in the World Cup to score in 6 different editions of the tournament, extending his remarkable legacy on football's biggest stage. Now, Messi's goal helped Argentina seal a victory and strengthen their push towards the knockout rounds. Canada also booked their place in the round of 16 with a dramatic 1-0 victory over South Africa in the FIFA World Cup's first knockout match. Steven scored the decisive goal late in the game, sending the home fans into celebration and sealing Canada's first ever knockout stage win at the FIFA World Cup. Now, the victory also keeps Canada's dream run alive. Earlier today, we spoke to Sanjay Mukim, Head Indian Equity Research at JP Morgan, about his views on what drives the market direction as well. Listen into what he had to say.
Sanjay Mukim, Head of India Equity Research at JP Morgan, joins in right now with his thoughts on the markets and more. Sanjay, great having you. Thanks so much for joining in. I want to ask you about what banks are doing too, but per se, firstly, you would have had a chance over the course of the last 2-3 months to reflect upon, talk to clients, etc., and what is it that could happen to flows and to Indian markets prospects. How do you pencil them for the second half of the year?
Good to be on, Neeraj. Thank you for having me. There are 2 or 3 things I think that were top of conversation as far as the Indian equity market was concerned. One, of course, was the oil shock. And thankfully, a lot of that has been handled. Oil is actually fallen faster than any of us had modeled, which is a big relief. And this has direct implications for the volatility in the currency. In combination with what the RBI has done, I think the outlook for the currency has become far more stable than it was just a few weeks ago. The second challenge, of course, for Indian equities is the fact that there is a lot more excitement in North Asia, especially the global tech cycle still remains at least visibly strong. And there's a lot more that fund managers can invest their time in overseas if they have to, allocate time between one market versus the other. So that strength in the tech cycle obviously drives attention away. But there's actually a third problem, Neeraj, and I do want to highlight, not a problem really, but the opportunity cost of capital is too high. 10-year bond yields in the US are 4.5%. Overnight rates are reasonably high. And when you do look at sending money to EM, sending money to India, you have to worry about the opportunity cost of capital. So while one issue has been addressed, the second will probably peak out at some point, which is tech investments. The third, which is the opportunity cost of capital, likely to stay for some time. And I don't expect that in that sort of backdrop, you will get a whole bunch of money coming into India in any rush.
Okay. So therefore, what does all of that mean for prospects? I mean, per se, we've had, 7 quarters of near flatline performance for the benchmarks or the Nifty, but while the broader markets have done well, sectors have done well, could that continue to be the template for the second half, Sanjay? Could we still have rank winners even if the Nifty flatlines?
Well, first, the first answer I gave you, Neeraj, was a very flow-based answer, right? What we expect, will relative investors look at India or not? But what I worry about more is whether the asset looks attractively priced or not. And this is one of the few instances where we can actually say that Indian equities valuations is reasonable, especially if you look at them compared to global equity and global asset classes, etc. So one must dampen, I guess, any caution or any bearishness one has with the price element as well. And given the fact that India is a duration asset, that you can happily buy a bunch of large caps and patiently wait for the earnings to compound. I mean, one of the things we will not debate is that India has, or Indian market has, multi-years worth of earnings growth at least. So then that now available at a reasonable valuation, whether it is on headline Nifty or whether it is on a select bottom-up large cap stock basket, that makes you a little bit more positive. I don't see any specific risks for second half, other than the fact that we might get a little bit more earnings downgrades like we do every year.
Very difficult to predict. Obviously, it's the weather, but a lot of people talking about not weather but climate, and you're talking about the implications of lower dispersion of rain more than the long period average decline, right? 90% or thereabouts. What will that do to consumption? Because as things stand right now, based on the indicators, it still seems relatively robust.
Alex, there are multiple sort of suggestions here. One, it is a material issue, right? For the economy not to have enough water for agriculture can accumulate into an impact over a period of time, right? Now, of course, if you look at we are all hoping that it normalizes, dispersion gets a little bit better from where it is today. But we are starting off this season with relatively high food inventory, with relatively high water levels in our reservoirs. So hopefully it doesn't cascade into anything material now. What we see that typically when you get back-to-back El Ninos and when you have 2 years worth of stressed rainfall, then it starts to show up in numbers more materially. I don't expect either a major CPI swing or a GDP downgrade in the next few months on the back of what is happening with the El Nino at the moment, right? Of course, we all hope it gets a little bit better. But the other problem, Alex, is that the representation of consumption of the bottom half of the economy in listed equities is not very high, right? So you can't find too many companies which have, or too many large cap companies which have material exposure to the cohort that will be directly impacted by weaker rainfall. And therefore, what you're saying is correct, that if I talk to the listed set and you go ask them, are you seeing any impact to volumes? You will not get any.
Yeah, it's a very interesting look at that. So therefore, let me ask you about one of those sectors. And in the banking space, we're looking at credit growth at 18%. Now, I'm wondering whether you're looking at it based on what segments are doing incredibly well. And I've not looked at the internals to say how much of it is gold loans, but one would assume that looking at the trajectory that has had, it would be a significant contributor to that growth. So are you seeing that at face value? Are you positive on that? Are you taking it with a pinch of salt?
Well, to flip it around, Alex, if you're thinking of policy stimulus to the Indian economy, that's probably the only stimulus we have at the moment, right? We can't expect any lower rates environment. We don't expect any major fiscal stimulus because, frankly, the government's done its bit post-COVID, and there isn't much headroom in the budget to try and stimulate. And it is probably not advisable for government to expand deficit in this environment to begin with, right? So from a stimulus point of view, the only thing that you could possibly drive an uptake is the acceleration in the credit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Ayush, since when do we do scripts? Fair point. Picture this, the biggest stage.
Market ends lower today. Nifty ends below 24,000 once again. Nifty Bank closes with cuts of 0.5% as Kotak Mahindra Bank ends as top loser after CEO Ashok Vaswani decided to not seek a reappointment at the private bank. Kotak Mahindra Bank under pressure after MD and CEO Ashok Vaswani, who succeeded founder Uday Kotak in 2024, says he will step down in December. Hunt for a new CEO gains pace. HDFC Bank gets a clean chit from external legal firms. Found no evidence to support concerns raised by former independent director Atanu Chakrabarti. Sources say board is likely to recommend reappointing Jagdishan as the CEO for 3 years. US lawyers say New York judge's query is procedural, unlikely to derail Department of Justice move to drop charges even as a federal judge seeks detailed explanation before approving request to dismiss the indictment in the ongoing case proceedings in the Adani case in the US. Iran and Oman hold first talks on Strait of Hormuz under US-Iran MOU, discuss future management of Hormuz, but oil prices remain mixed as fresh US-Iran clashes reignite the Middle East supply fears. Brent crude hovers around $73 a barrel. Day 3 of Prime Minister Narendra Modi's Seychelles visit. Prime Minister visits Mandir in the place, meets diaspora. Prime Minister honors Indian Armed Forces in the place. Unprecedented heat wave situation in Europe derails normal life. Roads and traffic lights melt up. Schools shut, rail tracks buckle, and officials record hundreds of deaths across several countries. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and let's take you through the top headline that we are tracking today. Well, it's the equity markets, and markets ended the session on a weak note today, with the Nifty snapping its two-day winning streak to close below the 24,000 level mark. Now, the Sensex also finished lower, while the Bank Nifty lost around 0.5% and was an underperformer. Now, Kotak Mahindra Bank was the biggest drag in the market, falling nearly 3% after CEO Ashok Vaswani decided not to seek reappointment. Mahindra & Mahindra also slipped over 2.5%, with the broader market ending in line with the benchmarks. Let's bring in my colleague Parth, who's standing by with all the market action and the highlights of the trading session today. Parth, over to you.
Nifty has closed in red, snapping its two-day gaining streak and closed almost 0.4% down. This was led by Kotak Mahindra Bank and M&M, both of which were the top losers in the index, with Kotak Mahindra Bank losing almost 3%, while M&M saw a downtick of over 2.6%. The broader market also performed in line with the benchmark, with Nifty Midcap 150 also closing in red, down for the second consecutive day and seeing a downtick of over 0.1%. This was led by Persistent Systems and Astral, both of which were the top losers, with Persistent down almost 11.5%, which was on the back of their Nagaro acquisition, and Astral also saw a downtick of 8%, which was due to a brokerage note impact. On the other side, Nifty Small Cap 250 has also closed in red, down almost 0.5%, led by Netweb Technologies and GSPL, both of which were the top losers in the index. Netweb seeing a downtick of over 9%, while Asahi India Glass was down almost 7%. On the sectoral side as well, all of the sectors have ended in red except just two sectors, which are Nifty Pharma and Nifty Metal. Nifty Pharma was the top gaining sector today, up over 1%, led by Ajanta Pharma and Laurus Labs, both of which saw an uptick of over 3.7% today. On the other side, Nifty Auto was the top losing sector, down almost 1.5% today, led by Uno Minda and TVS Motors. Uno Minda seeing a downtick of over 4%, while TVS was down over 3% today. On the sectoral trend side, Nifty Metal has snapped a 3-day losing streak, while Nifty Financial Services, Nifty Bank, Nifty FMCG, Nifty PSU Bank and Nifty Realty have snapped a 2-day gaining streak. Also, Nifty IT and Nifty Oil and Gas have closed in red for the second consecutive day.
All right, Partha, thanks so much for getting us all the important highlights of the market session today. And we spoke to Sanjay Mukim of JP Morgan on India's macro outlook. He says that easing pressure on the currency could allow monetary policy to remain neutral to accommodative, particularly on liquidity, supporting stronger bank credit growth. And let's listen in to his view on the markets.
I do expect that with reduced pressure on the currency, that monetary policy could remain neutral to possibly a little bit accommodative, especially on the liquidity front for banks, and that should facilitate stronger credit growth at some point in time. Prior to the Middle Eastern conflict, we were arguing that the Indian economy was on a bit of an uptick, a cyclical uptick. You remember we were talking of the whole consumer stimulus that the government was focused on, and that was catalyzing a little bit of capex-driven demand. We'll have to see if that restarts post-conflict again.
All right, let's shift focus on Kotak Mahindra Bank, which was the top loser on Nifty 50. And it says that the CEO, Ashok Vaswani, will not seek reappointment, with his tenure really ending in the month of December. Now, remember that Ashok Vaswani has cited personal reasons, even as street expectations were building around a possible extension. Kotak now says that the search for a new CEO will begin soon, with swift succession key to avoid any leadership overhang. And said the lender, however, points to strong internal bench strength, with Anup Saha as well as Jaideep Hansraj seen as the key names in the race as well. Now, Vaswani had succeeded, remember, Uday Kotak, Deepak Gupta as CEO in 2024, and Vaswani previously held leadership roles at Citigroup, Barclays and Pagaya Technologies. And a technocrat, Vaswani was brought in during tough times at Kotak, and his term will end in December, and new hunt is on now. So top brass changes at big private banking firms. It looks like that's the flavor of the day, as HDFC Bank gets a clean chit from external legal firms, with no substance found in the allegations flagged by former chairman Atanu Chakravarti. Also, a key leadership decision really looms at HDFC Bank, remember, and sources tell NDTV Profit that HDFC Bank board is likely to recommend reappointing Jagdishan as the CEO for 3 more years. Piyush joins in with all the latest. Piyush, what are you gathering from your sources about the clarity on the next CEO of HDFC Bank?
That's right. NDTV Profit spoke to former HDFC Bank chairman Mr. Atanu Chakraborty, and speaking to us, he dwelled on the fact that his resignation was meant for the board to introspect. It was not related to some compliance gap at the bank. He said that he had repeatedly sought the terms of reference for this engagement with the external law firms, and despite the repeated request, he was not given those terms, and hence he refused to participate in the interviews that were being sought by external legal firms. What Mr. Chakraborty also said that the report has sort of picked up only a few aspects with regard to the internal interviews that with some of the team members that the external firms did, and with regard to picking up some material from the minutes of the meeting of board that happened during his chairmanship. And he coined these legal firm report as very caveated. He said that his resignation was essentially a matter of conscience. He did not he was not on board with certain business practices at the bank, and it differed with his personal values. He said that we did during his tenure, the Dubai regulator had taken action against HDFC Bank for alleged mis-selling of 81 bond case, and the bank on its part also acted swiftly and terminated some of the employees. Moving on, the other major aspect to the HDFC case is now that the external legal firms have given a clean sheet to the bank. The incumbent CEO, Mr. Sashidhar Jagdishan's reappointment bid, it has brightened now. The legal firms did not question any, the behavior of the CEO, and the legal firms, said that the ex-chairman's allegations were unsubstantiated. So this is a positive for HDFC Bank's current CEO. How we understand things are going to pan out according to sources is that within the next month, both the CEO and the chairman appointments will happen. The bank will likely appoint a CEO within a chairman, a permanent chairman within days, and Mr. Jagdishan is likely to be recommended for another term by the bank to the RBI in the later half of the next month, which is July.
All right. Thank you so much, Piyush. Of course, some clarity coming in on that tussle on that board with Atanu Chakravarti and his resignation now. Now, the US criminal case against Gautam Adani has taken another procedural turn. A federal judge in New York has asked the US Department of Justice to provide a more detailed explanation before approving its request to dismiss the indictment. While the move has really raised fresh questions about the case, the legal experts say that this is a routine judicial process under the US law and should not be seen as a sign that the prosecution is back on track. My colleague Nimit shares what this means legally and what the road ahead looks like. Nimit, tell us.
Yes, the news coming out is that the US court has asked for additional information from the Department of Justice before it grants its approval to its proposed settlement with the Adani Group and Gautam and Sagar Adani. Now, we spoke to legal experts who explained to us that this is a very routine procedural part of the process where since the matter is with the court, even though the DOJ has confirmed the settlement, that will have to be confirmed by the court finally. Now, generally, because the DOJ is the constitutionally executive deciding authority on which prosecutions to take up, when it's decided to drop this prosecution, generally the courts do not interfere with that, and this is not an observation on the merits of the case. This is simply the court dotting the I's and crossing the T's and making sure that the affirmation of the DOJ's decision here is correctly done. Now, it's sought for some additional information and it's given a date of July 13th. Legal experts say that the DOJ will provide this additional information at that point of time, and we'll likely see the closure shortly after that, depending on how if the court asks for more information or is satisfied with the information provided. Legal experts' key mentioning is that this does not jeopardize the actual settlement between Adani and the Department of Justice.
All right, thanks for giving us that legal clarity, Nimit. And senior advocate Harish Salve says that there is no reason for alarm over the US criminal case against Gautam Adani. Speaking on the latest procedural developments, he said that the American judicial system is not interventionist and added that a criminal case cannot be withdrawn unilaterally. Listen in.
There is a basic rule everywhere that once a case is brought into court, it is in the possession of the court. So it is for the court to accept. You cannot unilaterally withdraw a criminal case in any jurisdiction in the world. The trouble is, I think the Indian reaction is more based on our culture, where, especially in the last couple of decades, judges have become far more interventionist. That's not how the American system works. It's a case which has been filed, which must have proceeded up to a particular level. There may have been a grand jury procedure set in place. So to unwind all that, the judge will say, give me your reasons. They will give their reasons, whatever the reasons they have, whether it is commercial reasons, whether it's a broader interest of the economy, or whether it's that they just felt that it's not the right case to prosecute. The judge will say, fine, we'll close it.
And reacting on this particular matter, a US-based lawyer, Chris Mann, says that the move is routine legal process. And adding to this, he also says that while the Department of Justice has really broad discretion to file or withdraw cases, once charges are filed, a judge must formally approve their dismissal. Let's listen in.
It is a fairly routine process. The government, the prosecution, the Department of Justice has great discretion in deciding whether to bring a case and whether to dismiss it. Once a case is filed, the judge has to approve a dismissal, but I'm not aware of any instance where any judge has ever refused that happening.
Now, Astral's board has approved a composite scheme of arrangement to demerge its chemicals business, and the stock went under pressure today during the market hours post this particular announcement. So shares really fell 8%. My colleague Puneet is right here to give us details on what this demerger means and what is it that the stakeholders may be concerned about. Puneet.
Well, Astral continues to be in focus today on the back of a demerger that's been announced for the chemical vertical, but the stock continues to be under pressure, and essentially the street seems to be waiting to determine what kind of valuation will both of those individual entities be looked out for. Now, the company has mentioned that chemical business will also house the paints business. Secondly, Al Aziz, which was acquired a few months ago, will be integrated and amalgamated with the existing plumbing as well as pipes business. And thirdly, the plumbing business will continue to remain in the listed Astral business as well. But Q1 is where both those separate P&Ls as well as balance sheet financials will be available. And I think the street is just waiting on for that at this point of time in terms of valuation differential. When you also look at the ratios, a 1:1 has been announced. So for every one share that you hold for Astral Limited, you will get another share for Astral Chemi, which is going to be listed as well for the chemical business. And very importantly, this will be done on a going concern basis. Finally, in terms of what you've seen as the rationale as well, because the company has mentioned that this will be the reorganization will consolidate all the chemical businesses together, and this will give a separate capital structure, a separate capex decision for this particular business. When you also look at the story numbers, though, it gets very interesting as well, because at the end of FY26, the pipes and plumbing business was about 4,672 crores in terms of revenue, with almost an 18% EBITDA margin profile. On the other hand, though, the chemical business continues to be roughly at 1,900 crores and with a margin profile much lower at 10.3%, and hence the valuation differential will be very key for these entities. Compared to Pidilite, that was going to be a bigger, of course, a very larger comparative analysis, but that is the only pure play company, and hence brokerages like Investec continue to have a target price of 1,710 on Astral, where they felt that this will become a second largest pure play chemical company after Pidilite, and this will be an attractive business category for Astral as well as its shareholders to look at. They feel that the enhanced disclosure on revenue mix will be coupled with the right execution, offers room for the shareholders also for value unlocking into this company. Citi also had a positive view as well with a target price of 1,900, where they feel a double-digit volume growth in the plumbing business that has continued is expected to continue as well. So while the street is taking some concern on the valuation part and waiting for a little bit more clarity, brokerages as well as the management remains confident at this point of time.
All right. Thanks, Puneet, for breaking it down for us. Now, Persistent Systems has launched a voluntary public takeover offer to acquire Nagarro in an all-cash deal valued at nearly 11,820 crore rupees. Jasmeet joins in with all the details on this big plunge. Jasmeet.
Well, Persistent to acquire Nagarro via the voluntarily public takeover. And here are the key details. Well, Persistent post the acquisition expects a revenue run rate of roughly $2.9 billion versus $1.6 billion of Persistent alone, and additional coming in from the acquisition. Now, we look at the other key details of this particular acquisition is where it's an all-cash deal, and Persistent has pegged the per share value of at rupees 81 per euro. So that's a roughly 140% premium from the last closing before deal was announced of roughly $33. The Persistent is paying a high premium, what we see from this particular deal. While we also look at the overall share lock-in, the company has already locked in the 24% stakes of the company, and the company is yet to acquire the rest to call it a subsidiary, and company expects to acquire 50% shares. Now, in terms of the key timeline of this particular acquisition, we are expecting the acquisition to be completed by the Q4 of calendar FY26 at the end of this year or in the early beginning of the coming year. Now, a bit about the deal math. While the company has secured 1.4 billion euro to finance this particular deal, and the company is paying roughly 1.1 billion euro to acquire the complete 100% stakes in the particular counter. Now, we look at the key benefits of combined entity that Persistent is seeing. The key synergies is the revenue, which we as discussed, which expected to cross that 2 billion mark and reach 2.9 odd billion. While the second one is the European market. Persistent expects the European market to grow from initial 9% to 22% from this acquisition, given Nagarro has a huge stance and huge presence in the European segment. While the third one is the overall targeted market. Persistent expects the targeted market to cross that 1.4 trillion mark going ahead. Now, if we look at the key concerns, the stock was down about 10% in today's trade. Here are the few key concerns from this deal that we are that indicating the overall performance. Well, the first one is a slow growth. Nagarro as a company has seen a very slow growth compared to Persistent. Well, Nagarro has been growing at a rate of 5 to 6% over last 3 years on compounded basis. But on the other hand, Persistent has been growing at a rate of 18 to 19%. So Persistent is a high growth business, but Nagarro we see a slow growth business. While the second one is the overall valuation risk. Now, we do see that the Persistent is a higher valuation, roughly 33 times the forward year valuation, but given the slow growth might put the valuation down. While the third reason is the overall margin. Nagarro has a lower margin compared to Persistent, so there is a risk of margin dilution from this particular deal. While the fourth one is the overall ERP segment. Now, Nagarro as a company operates under the ERP segment as well, which is highly competitive, but Persistent operates at a base level where it operates under the core digital engineering. So we can see some integration risk coming across, given the size of Nagarro is also huge compared to Persistent. Now, while the last reason why the stock is under pressure is the overall growth story of Nagarro. While Nagarro stock is down roughly 75 to 80% from its all-time high of $202 and currently $33 odd. Now, if you look at the other key aspect, the slowing growth, the weak operating cash flow, and the other key aspect of Nagarro is something that's impacting the overall growth story of Nagarro, and that's what has impacted the overall performance today.
All right. Thank you so much, Jasmeet, for putting all that into perspective. Now, Oberoi Realty is stepping into the Gurugram luxury market with its new project, 360 North. Now, the company is investing over 4,000 crore rupees on a 14.8-acre parcel with plans for high-rise towers and over 600 apartments. In fact, my colleague Rishabh Bhatnagar spoke to Vikas Oberoi, the chairman and MD of Oberoi Realty. Listen in.
Mr. Oberoi, just a few numbers, about 6,000 crores in total investment, including land, about 16,000 crores of revenue potential is what you see. Give us an idea of the timeline as well. And you already said that you've studied this market very deeply. You've studied your competitors, the design, everything that goes into this. Talk to us about where you feel Oberoi Realty stands in terms of what you will be offering in this market. What's new that you will be bringing?
You know, we are bringing our old self here. What is our old self? Our old self is, literally our DNA is design, our DNA is execution, our DNA is quality. We are bringing all of that here. We are bringing our best practices here. And we feel that this is a great market. I always say that Gurgaon is one market which has both depth and width. Mumbai has great depth, but we are restricted by the width. So I'm very attracted to this market, and I see ourselves grow here.
All right, a big announcement coming in from the Delhi Chief Minister. Rekha Gupta says that Delhi is set to roll out its new EV policy by 2030 with a 7,000 crore rupees outlay and focus on zero-emission mobility. The measures really include purchase incentives, scrapping incentives, and the creation of charging infrastructure, as well as exemption on road tax and registration fees. Let's take it across to my colleague Danish Anand with all the details of the EV policy and its impact. Danish, tell us.
Well, the Delhi government has cleared the EV policy, and now for the final signature, it will go to the LG House. And once the LG approves it, then we will see that the policy will be applicable. So this policy is expected to get applicable from the 1st of July this year, and it will last till the 31st of March 2030. In this four-year-long policy, the government aims to bring more EVs on road, and there is also certain riders for EV registrations as well. So if you look at these riders first, from 2027, all three-wheelers that get registered in Delhi, they will be only EVs. Similarly, from 2028 onwards, whatever two-wheelers that get registered in Delhi, they will be completely EVs. So we can clearly see that the government's main focus is to ensure that the two-wheelers and three-wheelers are the first primary transport mediums that should be converted into electric, because as per the study that the government conducted, they can clearly see that these two are the major sources of vehicular pollution in Delhi. Besides that, there was major anticipation on whether the hybrid cars will get an incentive or not, but the Delhi government is very clear that the hybrid vehicles will not be treated separately. Rather, they will be 100% road tax waiver and other exemptions for all kinds of EVs that get registered in Delhi. And besides this, if we also look at the phase implementation plan for replacing the BS4 cars, the Delhi government will be offering incentive of rupees 1 lakh, and this will be applicable for the cars for the first year. Besides this, the government will also be offering incentives for scrapping your old two-wheelers and three-wheelers. And I have that particular rate that the government has said in the first year. The two-wheelers, that will be like the incentive for two-wheelers will be 30,000. In the next year, it will be 20,000, and in the third year, it will be 10,000. Similarly, for passenger three-wheelers, the incentive that the Delhi government will give in the first year will be 50,000, followed by 40,000 in the second year, and 30,000 in the third year. And very lastly, there is also exemptions for the L1 trucks, and by that I mean those cargo vehicles which weigh up to 3.5 tons. So even they are getting a lot of incentives under the scheme.
All right, incentivizing the EV push. Thank you so much, Danish, for all the details coming in there. All right, moving on to the war situation and the resolution. Well, Iran and Oman have held their first formal talks on administering the Strait of Hormuz under the US-Iran Memorandum of Understanding. The discussions focused on ensuring safe navigation as well as uninterrupted commercial shipping through one of the world's busiest energy corridors. However, oil prices, remember, remain mixed as fresh US-Iran tensions really rekindle concerns over Middle East supplies, and Brent crude is hovering around $73 a barrel. So that's the situation on the crude oil prices. But talking about overseas, let's also get you an update, and it's about Prime Minister Narendra Modi, who has departed from Seychelles after concluding his 3-day state visit to the island nation. Before his departure, PM Modi interacted with the Indian diaspora in Victoria and received a warm welcome from the community there. The visit marked 50 years of India-Seychelles diplomatic relationships, with both the countries announcing 19 agreements across defense, maritime, security, digital technology, space, healthcare, and the list is long in the key areas. All right, with that, completely out of time on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew.
markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Presented by Suzlon, good energies that work.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey, where I decode important companies, their stories, and also is there any alpha to be made or not. But before that, try to guess the company, and I guess it's quite easy for you to guess the company. The first hint is it's a Hyderabad-based coffee manufacturing company. Now, I'm sure there are two names to it, and you'll try to guess it very fast. The second hint is Bandhan Mutual Fund has 6.62% stake in the company. Very interesting, right? It's a small cap, but nevertheless, mutual fund participation is quite strong. Also, I'll give you one more hint. Stock is up 20% from March lows. And one final hint, and I'm sure you'll guess it by now. The company is trading at a discount to its peers CCL products. It's a coffee company, and remember, it's the monsoon season. I'm sure you want to watch this entire show with a coffee in your hand as well. And the company in focus is also Vintage Coffee. This is the company which we are talking about. Everybody talks about it in social media, but we want to understand what's the real story about this stock. Is this a run-up to CCL products, or is there something else to it? But why are we calling this company? That's the big question to be asked. The newer markets growth. They are bullish on Southeast Asia, Africa and Central America. So what are their expansion plans? Also the focus in the high margin products and the new segments. We'll try to understand what are the timelines which Vintage Coffee is suggesting to us. Third thing we would like to know is definitely the timeline for the commissioning of the freeze-dried coffee plant. That is where the company is going a little bit of expansion. There is a turnaround at play and a lot of stories to be uncovered. Capex plans planned for the next 2 to 3 years, if any. If yes, how will they raise it? Internal accruals, or will there be a debt? Global pricing and demand trends, how the overall situation changes. And remember, coffee is largely an inelastic product. The demand keeps growing up, and so is the purchasing power for it. The outlook for the domestic business, the impact on the raw materials. Remember, almost 33% of the revenue comes from the domestic space. The current versus FY28 capacity utilization, a lot of changes are happening, and if that happens, maybe the fall in margins might have bottomed out. The revenue and margin growth outlook, that is also something which we definitely ask the companies. And remember, we'll get everything from this management. Balkrishna Tati, he's a CMD at Vintage Coffee. So You're ready to smell the coffee bean? Let's understand the details about the company. I know what are the key factors to watch out for when you are analyzing a company like that. I'm sure you have watched CCL Products, how the analysis is, but this time it's a bit different. It's a Hyderabad-based coffee manufacturing setup. Of course, their presence is there in Secunderabad, which is like a twin city, or twin sister city to be honest. They deal with manufacturing and exporting of quality instant coffee, but there are other products and other arms as well. This includes chicory as well and private labeling. That is where most of these Hyderabad companies, the larger ones, the mid ones, are working at. They listed post restructuring. This was not a proper listing. There was the restructuring, there was a special situation, there was a reverse merger and rights issue. And after that, we of course saw mutual funds coming in. The capacity expansion almost double from 6,500 million tons per annum to 11,000 million tons per annum. So that is where they have done a good turnaround. Speaking of turnaround, mutual funds have shown interest, especially Bandhan Mutual Fund. They are having almost 7% stake in the company, and last 2 years they have actually increased the stake. Remember, the listing which happened was in 2024 via this reverse merger. The instant coffee market, how big this is. I'm sure you must be sipping your favorite instant coffee right now. It's valued at $11.4 billion. But how large can this market become? That's the big question. Look at that. The projected growth is roughly around 5%, but this demand stays. As and when India's growth comes in, the purchasing power comes in, more value-added products in the coffee starts coming in. Also, let's talk about the value which can reach this year. It's around $15.2 billion. And of course, the most important, the basic thing in economics, this is the one. Demand is largely remaining inelastic. That is why this coffee industry is definitely a cash cow. We have seen that in some companies as well. The Southeast Asia, Africa and the new market, Central America market, that is where the focus is coming on. So whether there will be a acquisition or whether they'll set up a plant, we need to understand that, and the street needs to understand it. They're working on commissioning a freeze-dried coffee plant very soon. We'll try to understand what is a freeze-dried coffee and what's the difference between instant coffee with it. And of course, the revenue breakup, 67% still comes from exports. Remember, this is the consolidated analysis which I'm talking about. The remaining 33% comes in from the domestic space. So this is the overall revenue breakup looking like. But the question remains is, what may work for the company? First point, market is big, so no major threat from the larger competitor. This is what I would like to talk about because I have done a lot of channel checks in these regions, and that's our analysis comes in when it comes to scuttlebutt investing. The global demand momentum remains strong. Of course, economics 101, which I had explained to you earlier. Another important reason what may work for the company from the current levels is of course the strong interest from FISDI. The smart money is taking positions in this counter. Stock hasn't moved much from its reverse merger and the special situation play. So that's a hint for you. Improvements in the efficiency ratios, the way they are expanding. I'll show you the ROC numbers. They have been going up. So there is definitely a turnaround at play. But what may not work? There's a lack of analyst coverage. There's just one analyst tracking the stock. It's a small cap. There isn't much reports on it, and that is where a little bit of uncertainty comes, and that's why we get these companies in KYC to understand what's the entire picture. The promoter stake dilution is definitely there, around 30 to 35%. So that you could say slightly negative, but that's how you got to look at it. Execution risk, if they start acquiring companies, global expansion, there might be delays, there might be regulatory risks. So concern might come in for vintage coffee, but pros are more than cons when it comes to vintage coffee. But let's try to understand the KYC ratings, how things pan out. Of course, I'll give you the history of the company. They have already been featured in November last year, but you need to wait for the end of the show to show you whether the company has increased their KYC ratings or not. Income statement, balance sheet, cash flow, return ratio, the basics which are there. And of course, we try to understand how the stock has moved, the shareholding pattern has changed. And of course, we'll get you the valuations also, compare that with CCL Products. And lastly, the outlook, what the management commentary has come up with. Let's start with the income statement, and largely the CAGR numbers are pretty strong. Revenue, EBITDA and even PAT. Look at these numbers. All of them look like a triple digit number. So that's a great momentum and the turnaround coming in, but let's go a bit deeper into it. The margins segment, largely the numbers year-on-year basis was flattish. It's fine when it comes to the margins, but my concern is in the margins. Is it a very stable business to look at? But it's largely, it was 24%. Now it is there between 19, 17, 18. So we're trying to understand if they go into the new product and the new segments, this can even easily cross that 20% mark. But for that, we need to take a little bit of time. So I have taken, benefit of doubt in both the sides, and I've given this a neutral rating when it comes to the income statement. Let's talk about the balance sheet. And yes, balance sheet, we see slight borrowing has gone up. It's around 124 crore rupees, but the equity and the cash size is pretty decent. So definitely you can look for an acquisition or an expansion at play as well. So let's keep this a neutral rating as well. So we spoke about income statement, we spoke about balance sheet, but cash flows seems to improve for the company, especially for FY26. As I compare that with FY24 and 25, there were of course a lot of changes happening, and that's why these impacts were coming in. But now it normalizes, and that's what the street wants, and that is where the reward also started coming in for this counter, and it's done really well. So I've given this a strong thumbs up. So let's talk about the return ratios. I spoke about the turnover, I spoke about the turnaround, I spoke about over the cash flows, but definitely there is a change in the model, the way the company is expanding without hitting the return ratios, and that is something which you'll watch out for. FY24 it was around 9%, but it has been gradually going up, and that shows a good momentum and a good return for the shareholders also. It's a very important parameter to track, that is the ROC, return on capital employed. So it's a strong thumbs up as well. Let's talk about shareholding. Largely there wasn't any FIDI exposure in March 2024, and you can understand there was a special situation at play, and then the FIs and DIs, that is where the buying started. And look at that, in March 2026, 8% stake held by DIs. Of course, Bandhan Mutual Fund has roughly 7% in that, and even 5% FIs are holding in this count. It's pretty interesting. Some HNIs are also there, and smart money is definitely accumulating at every fall for this counter. So it's a strong thumbs up when it comes to the shareholding. Let's talk about street cred, how things pan out. And remember, there's a small history which the company has from 2024, that restructuring when it happened. This is the number. It's largely been flat. So if you have been holding this company from 2024 onwards till now, you haven't made that much money. But during 2025 lows, the stock has almost doubled up. Look at that number. It's almost 95%. From the highs, if you look at it from 2026 highs, it's still down 13%, but from the March lows, it's up 24%. So right now it's a neutral rating, I would say. Let's give it more time to judge this company. एक लंबा history होना चाहिए. So it's a neutral rating as well, but valuations is pretty interesting. Let's get you that. So CCL products and vintage coffee. This is the trailing 12-month P ratio. यहाँ पे देखिए vintage coffee और CCL products लगभग 25% का डिस्काउंट पे ट्रेड हो रहा है वैल्यूएशंस के हिसाब से when I talk about vintage coffee as compared to CCL products, and this is the closest business model analysis which I can get for you for this counter. So overall, I would like to give this a strong thumbs up when it comes to the valuations for vintage coffee, and of course these are the numbers to watch out for. The last one but not the least is outlook. This is where I'll share with you the important numbers which the company has given. They want to expand the capacity and the utilization, that's expected to go up. So we'll try to understand from the management what are the numbers. Also the introduction of premium and value-added product offerings through FY28, and when these start coming in, the margin profile does change. The proposed freeze-dried plant with the installed capacity of almost 5,500 million tons per annum. We'll try to understand the timelines and the progresses. So it's a net positive outlook coming in. But let's give you the entire picture of our analysis for vintage coffee, and it seems like the numbers are pretty good. Income statement and balance sheet has been neutral, but cash flows and return ratios have done really well. The history has started coming in. Shareholding, DIs are lapping up. So are the valuations cheaper than CCL products, and outlook as well. That's where the strength is coming in. So this is the overall picture, and the total number for vintage coffee comes in at 6.5 out of 8. But hold on, there's a history also. Let's get back to the history, what has happened in the KYC historical ratings. It was 5.5 out of 8 in November 2025, but in the next 6 months it has done well, so it's at 6.5 out of 8. Now next time if it comes to KYC, will it go up or down? That's what the time will suggest. But the management, that's what we will be talking about with Balkrishna Tati. He's the chairman and MD of Vintage Coffee and Beverages. An interesting trivia about him: more than 3 decades in this industry. He started as a leadership and a sales position in Tata Coffee, which is of course right now called Tata Global Beverages, and he set up this company in 2017. A lot of arms are also there, a lot of special situation is there. Joined in by Balkrishna Tati. He's the chairman and MD at Vintage Coffee and Beverages. Good afternoon, Mr. Tati. It's always a pleasure to have you with us at NDTV Profit. An interesting company, interesting weather, and interesting product. Let's start with the new markets growth. You know, the way you're expanding, it's almost 60 to 70% of your revenue comes from exports. Southeast Asia, Africa, and Central America. How are you expanding? Are you acquiring something, or you're setting up your own plants? We want to know your international plans.
Good afternoon. Nice to have on NDTV once again. Thank you. Yes, we are now more focused in Southeast Asia, African markets, and also now we are focused in US and North America and Central America, and also in Europe and other parts of the country. So we are keep expanding the business. As I mentioned in my previous statement, that we have expanded from 6,500 metric tons to 11,000 metric tons. This year we have now going for an 11,000 metric tons of instant coffee. This will cater the markets which we are emerging into, the new markets which is coming up, not only in Africa and also in Central America and some parts of Europe, and also the new markets which is coming up from China and other markets. So these also we are targeting.
All right, but in this target segment, are you looking at any acquisitions, or you will set up your own plant? Just a follow up on that.
No, we are not right now. We don't have any plans about the acquisitions or anything. So we have the plans we are doing right now in a private label, so customers' brands which we are supplying to them. And most of these regions are particularly we focused for the brand owners of the particular regional brands which is coming up growing very fast. So we are targeting those brand owners and we are supplying to them, and because their volumes are increasing, the coffee as such, the coffee consumption is growing almost, as I mentioned to you earlier also, it is growing almost in a free state coffee around 8 to 10%, and then the soluble coffee around 2 to 3%.
Fair enough.
So these are the markets.
Right,
yeah.
Sir. But what are the high margin products? You know, how the trends are changing if you're having coffee or something around it. What are the high margin products you feel like getting into, and any new segments around it?
Yes, the higher margins we are getting from the superior premium quality, which is the free state coffee. The company also has a plant now. Right now, we are in a process of setting up the plant, and that will be ready by next year. So this is the free state coffee where the margins are much higher compared to the spray and agglomerated coffee. The company has plans now immediately to go and keep expanding the free state coffee, because that is one of the fast growing market. And there is a trend, there is a shift from the people moving from the roast and ground coffee and then the normal spray and aglow to the free state coffee, because typically free state coffee gives an excellent aroma levels and is giving the strong coffee that gives a feel of roast and ground coffee. So obviously people are moving for that.
Enough, you have explained us very nicely, what does instant coffee and freeze-dried coffee mean. But just give us the timeline for the commission office. I am sure you are expanding this segment, the freeze-dried coffee plant. So we want to understand the commissioning timelines, by when it can happen, end of FY27?
Yes, end of 27, we are very certain that end of 27 we should commence the commercial production and also start exports. And FY28 we should able to add some freeze-dried coffee turnover also.
Enough. So these are the numbers you are talking about, but how the global pricing and the demand trends looking like when it comes to the client additions? Of course, there is a hedging mechanism at play for a company of your size, but could you just explain us how the global pricing and the demand trends looking like?
Yeah, though typically we are an export-oriented unit. So what we do is that we right now we are sourcing the Indian beans only. We are not importing any coffee or anything. Although the coffee is now it is in a very volatile market, but now it is settled at a levels around $3,200 to $3,500 levels and all for the robusta, which normally we use it for the soluble coffee. I think that we since we planned only for around 70 to 80% of Indian coffee and then 20-30% only for the imported coffee, but we have a natural hedging. The reason is that because we have sourced the coffees on an outright basis. Basically the day we finalize the order, then we source the coffee beans. So the price fluctuation will not have any sort of impact on our the top lines and bottom lines.
Right, Mr. Tati, I was just looking at the ROC numbers. They have been improving. There is a turnaround story also at play. But I want to understand simply, what's the current capacity utilization and maybe in the next 1 or 2 years, how the capacity utilizations change. I just want the number right now.
I'm very glad that last year we have done a 6,500 plus. That is the full capacity utilization. This year we are targeting to go for 11,000 metric tons. So more or less we are very confident around 90-95% of the capacity utilization will do it this year also.
Fair enough. And Mr. Tati, just to understand the numbers front, the revenue and the margins outlook, can the margin start bottoming out and going up in the next quarter because there is a new segment also at play? Or do you think the margins will remain same which was there earlier in your business model? How does the margin and the revenue outlook look?
Certainly, because not only the new products are adding like a freeze dried and this additional capacity which is coming in. So obviously, going forward, we will definitely have an improvement in the margins, especially in EBITDA levels and PAT levels. As a matter of fact, this year since we have expanded to 11,000 metric tons, so obviously the EBITDA levels will also be slightly improvement because the fixed cost will remain same. So the production, the output is more. So definitely this will have a better EBITDA levels.
Fair enough. The numbers will be on the better side when it comes to the operational profit, but the domestic business is also there, which are catering to domestic consumers. Is there a more volatility at play here? How are you trying to, hedge yourself in that? Because globally you can, but domestically what happens?
Yeah, domestically, I can say that, this India is now becoming one of the emerging market for the coffee consumption. Because typically this was, if you decades, you see that typically India was only a small contribution to the entire global coffee market consumption. But today it is growing very fast. I can say around 10 to 12% growth is there. And going forward, I'm very confident the markets are going to increase, like not only in India, especially for the countries like in Japan, China. These are the typically China and India is the tea countries, but slowly expanding towards the coffee because this is because of the urbanization and the youth generation. So obviously there is a shift for this.
Of course, that's a mega
our
trend.
company as such, we are targeting to capture this also by doing some sort of e-platform. So we already have some presence in e-platform, but we don't have right now any plans to go for brand building in India at this point of time, but slowly we'll look into this option.
Because a company like your size, and I'm just looking at the cash levels also, the industry is evolving, any kind of a B2C acquisition because your distribution is strong. You can buy in a small company, a D2C company also, and maybe take that brand as well. Is there any plan like that for your domestic market so that, consumer also sees your brand?
Yes, you are absolutely right. Company has trying to explore these options also. We are looking into these options and we keep it open and see that if we get in a right company and the right brands, so definitely we'll look into this option to acquire the brands.
Okay, so because there is a good cash flows, you already have a distribution network. It technically makes sense for you to acquire some good D2C brands, at least in your area. But the capex plans, we have already spoken about your capacity going up. There's freeze dried angle, which you have given the commissioning by FY27 end. But any other capex plans are there over the next 4 to 5 years, which you think would be there coming in organically? Any number on your mind?
Company has already have a 5 years business plan and we are going in that direction. So as a matter of fact, as I mentioned to you, next 3 years to 3 to 4 years time, we have a plans that 5,500 is the freeze dried coffee what we are making a line next year. But the thereafter we have a plan for go for another one more line for another 5,500, which makes around 11,000 metric tons of freeze dried coffee. which is in a 11,000 metric tons of spray and aglo and 11,000 metric tons of freeze-dried coffee coming together is to around 22,000 metric tons. So this will be through by, I can say, FY 2030.
Right. So the vision FY30, that's what the management has spoken about. Thank you, Mr. Tati, for taking out your time and giving the entire picture about your company. And always it's a pleasure to have you at NDTV Profit. Best of luck for the future.
Thank you so much. Thank you.
So that's the management of Vintage Coffee, and a lot of viewers had written to me about getting this company in KYC, even though it is less tracked. But definitely company is focusing on expansion and new products as well. So for interesting stories like this, stay tuned to KYC, and yes, keep watching NDTV Profit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of...
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Presented by Suzlon, good energies that work.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you're at a particular stage in your life and you're looking for a regular income flow without doing a job, that is mostly when you've stopped working and you're retired, then you're looking for financial instruments that will give you a regular payout. Now, what are those instruments? You can either have a stock portfolio where you get regular dividends, and these are dividend-paying stocks. There's a distinction here. You can have mutual funds where you have not the growth option, but the income distribution option, which gives you income over a period of time. You can have REITs and InvITs. These also pay you every quarter. Or you can have fixed deposits that give you interest income, mutual funds that give you interest income, and you can also have small savings schemes, something like a senior citizen savings scheme. The question is, which is the best option as things stand right now? To talk about that and the various pros and cons involved in that decision, I'm joined today by Mohit Gang, the co-founder and chief executive officer of Moneyfront. Mohit, thanks so much for taking the time. Let me start by asking about whether I missed out any of the options.
Alex, I think you never miss out on any of
Hey,
the
no,
points,
that's not fair. Come on. No, but genuinely, did I miss anything out?
No, I think REITs and InvITs, direct bonds and corporate deposits, Alex, and SC, SS or the government savings schemes, perhaps. I think those could be added if you need a regular stream of income.
So let's break this down. Though having said that, interest income would have covered the bonds portion as well. But let's talk about dividend income, right? A lot has been said, particularly about the large companies in India and the fact that valuations have come off. Without getting into too many details about why that has occurred, talk about why dividend yield is an important consideration and whether, in your opinion, now is a good time to buy these stocks if you're looking for regular income.
Alex, look, I think dividend income has always been an income of immense potential. There is some amount of capital appreciation which you can always build in if the quality of stocks is good. Typically, dividend income in direct stocks was always associated with PSU stocks, the oil refineries, and so on and so forth. But these days, if you go deeper down, perhaps IT stocks or IT pack is one such pack where, because of the immense cash on their balance sheets and the way they have got hammered down in the market, the dividend yields are looking very, very attractive. You have some large FMCG names which shell out good dividend incomes, and obviously the PSU names are always there. Some commodity companies like Vedanta and Hindustan Zinc also are great dividend paying stocks. But one thing which investors will have to be aware of is that dividend in their hands is fully taxable at the marginal slab rate. So if you are an investor at the highest slab rate, then the dividend which you are receiving will be completely taxed. So even if you're selecting a stock which will perhaps give you a 6% yield, in hand yield is only 4%, right? So it can't truly justify your living expenses unless you have a very large stock portfolio. But yes, it can take care of some portion to a certain extent, but it is not a foolproof mechanism because there is volatility associated with the stocks, and which we have seen in recent case in IT stocks. The names look good, the dividend looks promising, but they've got hammered out of shape, right? So that inherent risk will always be there, and it is a tax.
Mohit, let's talk numbers as well, right? Because if you're saying relatively high dividend yield, ultimately what you're talking about? You're talking about what is paid out as dividend as a percentage of what you're paying to buy the stock, correct? As simple as that. So therefore, is 5 to 6 to 7% a very good dividend yield?
I would say it's a modest yield if you're if you're comparing it with other fixed income options, Alex, which can perhaps fetch you from, let's say, 8 to 12 odd percent kind of range. Then it's a modest yield. But in stocks, you always have to account for the capital appreciation, which can happen by virtue of you holding it for a very long while. So I think that compensates to a large extent.
So very simply put, if you have a stock portfolio worth 1 crore, and if your dividend yield is 5 or 6%, then effectively you're getting 5 or 6 lakh rupees in a year. And that's spread usually over a period of time, right? You have interim dividends and then you have a full year dividend. And so you can get payouts at different times of the year. It's not periodic in the sense you can't bank on it coming every month, right?
Oh, absolutely. There is no regularity. There is no certainty to it. The dividend payout ratios can differ widely depending on the PAT for the year. And yes, of course, there is an interim dividend and then there is a final dividend and so on and so forth. So it is very, very ad hoc and there can't be any consistency which can be built around it.
Okay. So we'll come back to how you weigh the order of choice here. But let's come, since we're talking about dividend, we'll come to the dividend option as it used to be called in mutual funds. Now it's called income distribution come withdrawal, right? Yes, so how does that work? Because even here, there is a conditionality associated with the payouts, right? It's not necessary that a mutual fund will pay out over a period of time and on a regular basis.
Oh, absolutely. Look, I think they are all out of context now, Alex. Honestly, in the new shape and era where dividend income from mutual funds and stocks is completely taxable, the IDCW option, as it is popularly called, or the dividend payout option erstwhile, is no longer a preferred choice because number one, mutual funds don't declare dividends separately. They will reduce your NAV, or the NAV will get reduced to the tune of the dividend declared. So in effect, you are only redeeming out of your own units, but taking it as dividend, right? Which is making it fully taxable. If you are doing that, then might as well do an SWP or might as well redeem the units so that there is some portion which is getting booked as profits and some portion is coming back to you as capital. So A, you're not getting fully taxed on the amount being withdrawn, and B, the tax rates are also long-term and short-term capital gain rates and not your full marginal tax rate. So an IDCW option vis-a-vis an SWP or a redemption is never a feasible option.
So for a lot of people, whatever you said with regard to SWP has gone straight over the head. So we're going to come back to that at the end because this might just be the best option. SWP, in case you were wondering, is a systematic withdrawal plan. We'll come to next, REITs and InvITs, Mohit, which is your real estate investment trusts and infrastructure investment trusts. They've actually come up in the ranking quite a bit because a lot of people are looking at it now. REITs have cleaned up their issues that some of them were facing, and they're paying a pretty decent return to investors, aren't they?
Yes. Oh, absolutely. It's a fantastic option, Alex. And just for perspective, last year, which is calendar year 2025, the REIT InvIT index was up 25%. So there was a very handsome capital gain also, which investors made in these products. But leave that aside because we aren't talking of capital appreciation. And perhaps that's not the theorem which you should build when you are investing into REITs and InvITs. It's more a fixed income product. So within REITs, I think the yields typically hover between 6 to 7.5%, and InvITs perhaps could be 7 to 8.5%. Again, depending on the nature of the REIT and InvIT and how they are formed and the underlying SPVs and their investments, right? Now, this income can be categorized as rental income, can get categorized as capital appreciation, or as dividend income. Again, the taxation varies as per the nature of the income received in the hands of the investors. But broadly, there will be a tax incidence when you receive this 6 to 7.5% yield or 7 to 8.5% yield. The tax incidence won't be completely to the extent of your marginal slab rate. It will be a mixed rate, which the REIT or InvIT will perhaps tell you once they have distributed the income in your hands. So it's a very good, very efficient mechanism, consistent regularity in income, they have to necessarily pass back or distribute back 90% of the incomes which they are receiving in their hand. So REITs and InvITs by regulation have to distribute 90% of the income back to the investors, so which builds in surety, consistency. These are all long-term leases, long-term projects, A-grade properties, or a very large-scale highway and road projects or power transmission projects. So there is certainty around it, and then there could be a built-in proposition of some amount of capital appreciation. So all in all, a fantastic instrument.
Yeah, just on the portion of the taxation that you alluded to, we had a more detailed conversation a while back on REITs, and I'd invite you to go and check that out. Essentially, for most REITs that you would invest in India, dividend component, there's a dividend component, there's an interest component, and there's one more component with regard to capital appreciation. The dividend component, in most cases, you're not going to be paying tax on that.
Yes,
right? So that's an added advantage. That's what Mohit was referring to. Bonds and other interest-bearing instruments, and here I'll talk about fixed deposits as well, and let me throw in small savings schemes as well. How do these rank when you're looking for regular income?
Okay, so if we want to cover the spectrum, I think fixed deposits with banks will be the lowest spectrum. I think the rates could hover between 7 to 8% depending on what category of bank you're choosing and what is the tenor of your deposit. Then you go into government savings schemes, small saving schemes. You have SCSS, which is Senior Citizens Saving Schemes. The rate of return out there is 8.2% with a minimum 5-year lock-in. And you have a sovereign government bond, which is at 8.05%. Again, the interest from all these schemes, whether it be a fixed deposit, whether it be a SCSS or the government sovereign bond, everything is completely taxable at your marginal slab rate. So these aren't tax efficient instruments, but yes, these are all regular income giving instruments with absolute certainty, and in some cases sovereign backed. So there is a lot of surety around the income which you're building. So for absolute safe, conservative investors without any kind of pluses and minuses, and these are the instruments to go for, but obviously the return potential is pretty limited. The second upgrade on this could be NCDs or corporate deposits or direct bonds. Now again, you can choose the quality of the instrument which you want to go for. You could have government backed bonds like AAA entities, REC, PFC, NHAI, and so on and so forth, or you can have private bonds, or you can have corporate deposits of the larger NBFCs like Bajaj, Shriram, Mahindra & Mahindra, and so on and so forth. Now, on the corporate deposits, the interest rate can vary from 7 to 8 odd percent. On the bonds, the interest can go from 8 to 12 odd percent LX, depending on the credit rating of the bond and the kind of tenor which you are selecting. But one has to be very careful in the names and has to be pretty sure in terms of due diligence and everything, because we have had incidents galore in India where the bonds have got downgraded and perhaps investors have lost some money in some good quality names also. So that is an area which I would not advise anyone to go unless you are pretty sure or you have an advisor who can really help you out in identifying the right quality and the right credit rating of the direct bonds which you're investing. But if you can figure out those names, then perhaps the yields will go as high as around 10 odd percent. Again, the interest component is completely taxed across deposits, corporate deposits, NCDs, bonds, everything. So it's all taxed at the marginal slab rate.
Yeah, well put. Again, I'm not plugging things in, but I'd invite you to go and take a look at the MoneyWise episode from week before last. And we had a detailed conversation with the CIO of a fixed income mutual fund to give you a sense of what he looks at when he chooses to invest in these bonds. But Mohit, the SWP which you mentioned at the start, explain how this works. Essentially, this is you're taking your mutual fund investments, and instead of doing an SIP where you're putting money in, on a systematic basis, you're pulling money out through the SWP, which is a systematic withdrawal plan, right?
Right. Okay, so as the name suggests, you are automating your withdrawals or redemptions, basically. So every month I can select a frequency and a day wherein I want to redeem something out of my funds which I have invested. Now, those ultimate funds could be debt mutual funds, could be hybrid balance funds, or could be equity funds, right? Typically, we advise that if you are at the retirement age where you want regular income, then the choice has to be between debt funds or hybrid funds, so that there is certain amount of surety and there is certain amount of safety which is built in terms of your corpus. Now, look, if you take dividend option or a dividend payout option, the dividend is completely taxed in your hand. But when you redeem or when you withdraw, so let's say if I were to redeem a lakh of rupees, Alex, through SWP mode, I can take a choice of 10,000 for next 10 months. Now that 10,000 which comes to me will have some amount of capital and some amount of profit. It won't be completely out of my profit because as redemptions happen in a single folio, it is always a FIFO, which is first in, first out. The money which I invested first is the first one to come out. Right. So let's say I invested 5 years back, I invested 5,000, which has grown to 10,000. So I redeemed that many units. So my capital, which is coming back, is 5,000. My profit, which is coming back, is 5,000. So when I withdraw 10,000 rupees, I'm only getting taxed on my gain of 5,000 and not on the complete 10,000. And that gain is now long term for me. So I'm only paying 12.5% tax. Now compare this to a dividend option where let's say the fund declared a dividend of 10,000 rupees, theoretically speaking. That entire 10,000 rupees would have come out of the fund by reducing my NAV by that much proportion, and the 10,000 in my hand would have got fully taxed at my marginal rate, which is 30%, assuming you are an HNI investor at 30%, right? So then it becomes a highly inefficient. 10,000 which is coming via SWP will have only 5,000 rupees taxed at 12.5. Which effect is very less, or 10,000 coming out of a dividend option is completely taxed the full thing at 30%, right? So the impact is huge. So when you do an SWP of 10,000 every month for next 10 months, then I am withdrawing my capital and profits in a particular proportion, and only my profits are getting taxed incrementally. And that gives SWP so much heft and is so much better in terms of taxation and overall process.
Okay, so fantastic. So we've come to the conclusion that if you've got a substantial amount of money saved in mutual funds, then that's the best way to withdraw money from a tax perspective as well. Mohit, on that note, thank you so much for joining me today. Pleasure speaking with you as always.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV.
The tendency when you're looking at the equity markets in India, or practically anywhere else in the world really, is to judge it based on the benchmarks. And the benchmark, of course, for India is either Nifty 50 or the Sensex 30. But remember, this is just a group of either 50 or 30 stocks. And of course, these are the largest mega caps in the country, and they account for a large part of the market capitalization of the entire market. But they're not necessarily the best indicator of outperformance. Now, when it comes to strategy, a lot of people have been gravitating towards passive investments, which is investments directly into these indices. But they tend to ignore certain options available to them. And today I'd like to talk about one such option, which is the Nifty Next 50. It's the 50 stocks beyond the Nifty 50. Chintan Haria, Principal Investment Strategy at ICICI Prudential EMC, joining me to talk about this. Chintan, very good evening to you, and thanks so much for taking the time. Let me ask you about what you've seen in the way that the benchmark has been constituted and is performing compared with the Nifty Next 50.
Yeah, thanks, Alex. And of course, it's always a pleasure to speak to all your viewers as well. It's always interesting topics you come by. And this is probably a deja vu for me because in 2018 also, I had a very detailed, long discussion on the Nifty Next 50 with a couple of investors who were looking at that. So it's interesting that you picked this up right now. See, if you look at it, like you mentioned, Nifty 100 is what we consider as the top 100 large cap names, right? That's Nifty 100. Broken up, it's Nifty 50, which is the top 50 names, and then Nifty Next 50, which was erstwhile known as the Nifty Junior Index, which is 51st to 100th name. While both are large caps, of course, the construct of both, given the way the dynamics work, ends up being very different. Firstly, if I look at Nifty 50 itself, which all of us are much more familiar with, you have a very large representation of the banking sector. It's about 35-36%, courtesy the larger banks having a float which is higher, and all these indices are on free float. So you have 35-36% on the banking sector, then you have oil and gas, then you have technology, and which is one of the reasons you mentioned about the underperformance of, let's say, Nifty 50 versus the Nifty Next 50, because Nifty 50 has a larger exposure to the larger tech names, and that's what has hurt it in the last 6 months to 12 months. So from a construct perspective, Nifty 50 versus Nifty Next 50, the differences would be that Nifty 50 is a little bit more concentrated in terms of sectors, and even the top 10 names would have probably a little higher concentration of 45 to 48%, while in the case of Nifty Next 50, the sectoral changes are a little bit subtle, and we'll come to that when we elaborate, while the top 10 names have only about a 25 to 26%. So lesser concentration, more diversification in terms of sectors. And when the broad market rally happens, as it has happened in the last 3 months and in the last 4 years, then the Nifty Next 50 tends to outperform the Nifty 50.
Which is not to say, Chintan, that periods of outperformance don't take place with the Nifty 50 as well. Because even in what you were referring to when you're talking about 2018, if I remember correctly, please correct me if I'm wrong, because your memory will be better than mine. There was a portion where Ritik stocks were doing incredibly well, right? That was the acronym that was created. And these were the very large companies which resulted in the Nifty 50 outperforming. And I know that a lot of fund managers in the large cap space were saying, oh, how do I beat the benchmark? I can't go beyond 10% in individual stocks.
Yes, so you are right. It's a virtual deja vu again. From 2014 to 2018, we had a broad market rally in India. Nifty Next 50 names did fantastically well, and hence Nifty Next 50 as an index did very well. That's when people got recognition of the what was that time known as Nifty Junior, which is nothing but Nifty Next 50 now. And it became a little bit more popular. Then after 2018, as you mentioned, it was a much narrower rally in India. The top 10 names did very well in terms of large cap, market cap. And 2018 to 2020, up to probably COVID, was the time where the Nifty 50 did probably better than any other index, because the mid and small caps were also falling very sharply. So a narrow market rally between 2018 to 20 meant that Nifty 50 did well. Then, of course, post-COVID, we've seen 21 to 24 and maybe, and even 25 now. We have seen a significant rally in the commodities, metals, capital goods, which find a much larger representation in the Nifty Next 50. In fact, if you look at the construct, and if I remember correctly, Nifty Next 50 has 20% in financials versus 35% in Nifty 50. Capital goods and chemicals also form a larger representation in Nifty Next 50, which probably has brought the edge to Nifty Next 50 in the last 4 years, where the domestic cycle has done well. Not to say that in the next 2-3 years, Nifty 50 may not do well, because of the foreign selling. Nifty 50 names, especially the top 10 names, have kind of underperformed meaningfully. So you are right. There are cycles, and probably we are in a cycle where right now the top 10 names or the Nifty 50 is probably looking more attractive than Nifty Next 50 in terms of the next 2 to 3 years from a performance perspective, especially if foreigners come back and invest in the larger names.
So talk about this in some more detail, right, Chintan, because that ultimately is the conundrum that people face, and this is where recency bias plays in as well. You look at an index, and if you judge the last, say, 5-6 years, then don't be surprised if your SIP into the Nifty 50 has only yielded you about, 9% or thereabouts, right? It's not great. And if you equally look at the Nifty Next 50, then you'll have a significantly better experience. But then that should not necessarily determine what you do over the next 3 years, or rather with your incremental investments.
True. So, of course, let's look at it this way, that tomorrow's large caps or tomorrow's mega caps will come from the Nifty Next 50, right? That's the natural progression which happens. And some of the names which in Nifty 50 don't do well end up probably falling to the Nifty Next 50 and then going beyond. That cycle happens. But generally, if you look at it, given that the broad market rally in India has happened focused on domestic cyclicals, we've seen significant outperformance of Nifty Next 50. If we look at the Nifty 50, foreign ownership of banking sector was significant. That's where we've seen concentrated selling. Technology, of course, used to be about 20-21% of Nifty 50 in terms of its weightage. It's now down to almost 8%. So if we look at the kind of levers that probably Nifty 50 has in the next 3 years, if foreign buying comes back and this AI boom kind of nullifies or kind of fizzles out or mellows down, if I can say so, then you have technology which can lead up Nifty 50, you have banking which can lead up Nifty 50, and of course the oil and gas space, which is the second largest segment of Nifty 50. So levers exist in Nifty 50. I'm not to say that Nifty Next 50 does not, but if you have a larger concentration in Nifty Next 50, or if you already participated in Nifty Next 50 and not participating in Nifty 50, I'd say next 3 years should belong to some allocation incrementally towards Nifty Next 50, given the kind of underperformance we've seen. And the
Did you mean Nifty 50?
Yes. Sorry?
You meant Nifty 50, right? You're saying
Yes,
incremental allocation to Nifty 50?
Yes. Nifty 50, yes.
Okay. So we've primarily spoken about the large cap indices, Chintan, but I know that you look at the options in the broader markets as well. And the underlying, we keep talking about this on the market open show, the market close show, where we're talking individual stocks. The reason why there's been so much interest in the broader markets is, as you pointed out, there's been selling by foreign institutions in the large cap, but also there's an expectation that on the earnings front, the broader markets will do better. If you're looking at the passive options in the broader markets, is there a strong case to be made for incremental allocation towards that as well?
Sure. So I think 2 years of underperformance, significant let's say overvaluation has already got digested even in the broader space. But I do still believe that there is some amount of overvaluations which are there in pockets. And hence, as an index, if you want to participate, just be mindful of the fact that mid and small caps should not be more than maybe 20-25% of your overall allocation. Having said that, there are good products available in that space also, where investors can incrementally participate, because as India grows, this segment is also going to grow. So while today the lowest hanging fruit seems to be the large cap space, and within that the Nifty 50 or the top 10-15 names, but the broader market, of course, if one has a longer term horizon, definitely that can be looked at. It has been overbought or it is overowned right now and not undervalued. So I'm not too positive on that. It's probably a stock pickers market. So in the broader markets or in the mid and small caps, you're probably better off on the active side. And as you said, I look at all segments, all products across all possible avenues available for investors to invest. So I think in mid and small cap, you're better off betting on a manager to pick and choose for you in terms of stock picking. While in the broader market, you have 500 stock universe, you have Nifty 50, Nifty Next 50, you can choose them for your incremental investment need in the passive side.
Fascinating conversation as always, Chintan. Thank you so much for taking the time. Pleasure speaking with you.
Always a pleasure, Alex, and thank you for choosing this topic. Cheers. Thank you.
Right, whether you heard it and pay attention to some of the intricacies of what Chintan was just speaking about. And of course, there's lots to unpack. If you've got questions, write to us and we'll take them up on subsequent shows. And in the meanwhile, stay tuned to NDTV Profit.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hello and welcome to this special show on the DOJ's settlement with the Adani Group over allegations of bribery and fraud. The big update coming in is that a New York federal judge has sought additional details from the United States Department of Justice on its request to drop the case against the Adani Group. Now, this comes on the back of the DOJ in May formally moving to drop the criminal fraud and bribery charges against Gautam Adani and Sagar Adani, concluding that they could not sustain these allegations. Now, legal experts in the US explain that this is not a comment on the merits of the case, but likely a procedural clarification sought by the New York federal judge, seeking clarity to ensure the request meets legal standards and is made in good faith. Legal experts also say that such queries are routine. They say that the DOJ, as the prosecuting authority, is usually given primacy, and courts rarely intervenes once a decision to withdraw such a case is taken. So what does this mean for the timeline of the proposed settlement between the Adani Group and the DOJ, and how much room does the court really have to push back? Let's first hear what legal experts in the US are thinking.
It is a fairly routine process. The government, the prosecution, the Department of Justice has great discretion in deciding whether to bring a case and whether to dismiss it. Once a case is filed, the judge has to approve a dismissal, but I'm not aware of any instance where any judge has ever refused that happening.
It is fairly routine. So what's happening here is as you know, the government has filed a motion to dismiss the indictment against Adani and others, and it's doing that under a rule of Federal Criminal Procedure 48A. And the rule doesn't say a whole lot, but what it does say is that the government may, with leave of court, dismiss an indictment. So that language with leave of court is really important here, because what it contemplates is that the court here, Judge Garofis in the Eastern District of New York, has at least some limited role in assessing the government's rationale for dismissing the case. What's important to note is that that role is truly a limited one. So this is not an opportunity for the judge to second guess the prosecutor's decision to not pursue this case. It's not about the court substituting its own wisdom for the wisdom of the Department of Justice. It's really just making sure that this dismissal is happening for a proper purpose. And the judge, I think it's important to note, is totally within his rights to ask for this additional information, particularly when the Department of Justice has provided almost no information about why it's dismissing the case.
And as you can see, US legal experts say a few things. They say that this is routine. Firstly, this is not out of the ordinary for a judge to ask further questions and ask for more clarifications in a case like this where the DOJ is asking for the charges to be dropped. Again, another important thing we got from that this is not a determination on merits or on the actual allegations underlying the settlement. It is simply a procedural request asking for more information behind the intent of settlement and asking for why the DOJ is looking to settle this case. Now, to understand this more, we have a very special guest with us, Mr. Rayan Karanjawala. He's a very senior legal expert in India. He is the managing partner of Karanjawala and Company. Welcome, Mr. Karanjawala, to the show. Firstly, I'd like to ask you, on the top of all of this, what do you make of this latest development of the courts asking for more detailed information? Is this request out of the ordinary? And what impact does it have on the settlement, given that the DOJ has already decided to drop the case against the Adani Group?
I just, first of all, just say straight away, it's not an unusual request. And before I get into the details, there's two caveats I want to put out there, which I always do when I'm speaking on the Adanis. One is to point out that they're clients of mine and that Gautam Bhai is a friend of mine. And of course, the second caveat that I have to put out is that I'm not an expert on the American jurisdiction at all. But on the basis of what I've seen and studied and what I've been told, I'll be happy to answer any questions. Now, the first thing I wanted to tell you is, to your question, is this an unusual request? No. It's the normal part of process. What you have to understand here is this, that in America, as also in India, the Department of Justice has a very large say in which are the cases in which they would prosecute or not prosecute. But they cannot unilaterally withdraw a case and put it aside. They have to take the consent of the court. They have to take what is known as the leave of the court. What is happening at the moment is the process in which they went to the court to take the leave of the court. And in that, the judge has reacted by saying that before I get into a deeper understanding and hearing of the matter, I want a detailed reply to be filed by the Department of Justice. The important thing to note is, for the layman, that the judge has not said that you should re-prosecute the case or that the Adanis are guilty at all. All that the judge has asked for is more and further additional information. And this is broadly, from what I have been told and what I can understand, a standard procedure.
So, perfect. So you say that the DOJ's authority is generally final in this case, and the judges do have the power to ask these sort of questions, but it's mostly procedural. Now let's turn that on its head a little bit. What sort of powers do judges actually have in this sort of case where the DOJ has decided to end the case and settle it with the Adani Group?
So the answer is simple. Ultimately, of course, the case can't be withdrawn unless the judge gives leave to withdraw. But by and large, the jurisdiction that they exercise is a very truncated one. It's a very limited one. And by and large, from what we can see and what we've read up and what we've been told, because after all, this is not exactly the jurisdiction with which I'm familiar, but from what I can make out, by and large, a majority, or I won't like to use the word an overwhelming majority, but it may be the more apt word, of these cases where the DOJ asks for a withdrawal of prosecution are allowed.
Thank you, Mr. Karanjawala, and we'll stick with you for a bit, but we also have another very special guest, one of the most senior legal experts in our country today, Mr. Harish Salve, senior advocate in the Supreme Court, joins us today. Mr. Salve, welcome and thank you for joining us. My first question to you, Mr. Salve, is that the DOJ in this case has already decided that it wants to drop the case. What sort of power then does the judge have? What is the judge really testing here? Is this a legal test or is this a procedural test that the judge is looking at?
Well, procedure mandated by law is a legal test. So I don't think your question is, the divide which you're suggesting is correct. There is a basic rule everywhere that once a case is brought into court, it is in the possession of the court. So it is for the court to accept. You cannot unilaterally withdraw a criminal case in any jurisdiction in the world. The trouble is, I think the Indian reaction is more based on our culture, where, especially in the last couple of decades, judges have become far more interventionist. That's not how the American system works. It's a case which has been filed, which must have proceeded up to a particular level. There may have been a grand jury procedure set in place. So to unwind all that, the judge will say, give me your reasons. They will give their reasons, whatever the reasons they have, whether it is commercial reasons, whether it's a broader interest of the economy, or whether it's that they just felt that it's not the right case to prosecute. The judge will say, fine, we'll close it. These judges are not interventionist. And there has been a settlement, financial settlement. The courts don't, unlike in India, courts are more interventionist in India. In US, the courts are not interventionist.
Perfect. I'll take your point on that. The courts are not interventionists in the US like they are in India. And I also take your point that this is still a legal test, even if it is part of the procedure. It is still a legal test.
It's a procedure. See, even in India, if you have to withdraw a prosecution, you have to give your reasons.
Yeah.
You can't, once it is in court, the court can say, give your reasons. In America also, it says, give your reasons. He's asked for the reasons. They'll give the reasons. What is the reason? The reason is, have they suddenly realized that they have no evidence, or have they realized that the prosecution was brought for a particular purpose, but there has been a settlement? You see, these are again concepts which we have been saying India has to become familiar with in commercial prosecutions, which we don't have, of settling. So there is the securities case is civil case, civil in the sense it's like your SEBI. And there is a concomitant prosecution. If this civil case is settled, obviously the settlement closes the wrongdoing. And they may say, all right, we don't want to prosecute a foreign company. Finished, end of the matter. But they'll have to put all this on record as to why, what has happened, what's the settlement.
I understand that point. I wanted to ask, though, if I push you a little more on this, what sort of legal threshold exists for a court to then even intervene in a case like this? You said that they're looking at it as sort of an exercise to see if the evidence is there and so on and so forth. So what sort of legal test exists in American law for a court to then intervene?
See, as the legal test says, they have to give their reasons. They don't, they don't have PILs, they don't have judicial review of reasons, they don't have all that. So when you are looking at it as an Indian, you're wondering what's going on. If this is not like a case in India where the media is jumping up and down and everybody's worried about why a case has been withdrawn, etc. It's a small case for America. It's some foreign company which is being prosecuted. DOJ brought a prosecution. Under the Foreign Corruption Act, they may have, I think there were some charges. There were some charges against some local companies. They've all gone and settled. They said, fine. Primarily, it was as far as America was concerned, it was a securities case. They've settled it, closed.
Absolutely.
They don't go behind saying, oh, who did it and why they did it. And they don't have people filing a PIL, then the Supreme Court issuing notice and appointing SITs. That's not how their system works.
Absolutely. I think that's very clearly explained, especially for a layman audience as well, to understand what's going on in the US courts and how it's different from how we function in India. I'd like to bring Mr. Karanjawala in here and take the conversation further to how this affects the timeline for the settlement for Adani here. Given the court has given a deadline of July 13th to the DOJ to submit a more detailed reasoning for closure of this case, do you see the deadline being extended here?
My understanding is very clear. Whatever closure that the DOJ announced had this particular process in mind. I mean, you see, to the layman reading the newspaper, it looks like, oh, this is something new. But I'm sure the Adanis knew and the lawyers would have told them that this is the actual procedure we have to go through. So whether they already had that timeline in mind or not, I don't know. But I mean, the timeline will be a normal timeline that such cases take and such consent takes before it is granted.
Absolutely. And